Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands.
Very good morning. You're watching India Market Open, and so many things can happen overnight. The big story overnight is what is happening to the 30-year US Treasury bond yield. That's going to be a big factor. You're going to listen to a lot. You're going to hear that term a lot over the next few days, and it's probably going to have far-reaching effects. Morning, guys.
Morning.
What a turn of events. Suddenly, the one big beautiful bill has become our new Trump problem.
Yeah, I mean, supposedly adds so much to the deficit, and as a result of which, not just the 30-year, the 10-year at about 4.61, that's big. And just, surprises that come in, right? Who would have thought? But African stock markets yesterday hit multi-year highs, and more importantly, the Russian ruble. I mean, that is one thing that is up 40% YTD. At the start of the year, if anybody told you that the Russian ruble is the currency that is going to gain 40%, you would have said you are nuts.
Yeah.
But that's exactly what's happened.
Yeah. Unprecedented times.
Yeah, I suppose Trump coming in and, warming up to Putin is also helping in relative terms. But so much to unpack. So much is happening last night. I don't know, before we start, just one more thing we should quickly mark. One of the largest private banks in the country.
Yeah.
Okay, we got reports results, and a non-executive chairman comes and says, yes, we suspect there was fraud. He's used the term fraud at all levels. I mean, the IndusInd Bank story, and I don't want to crow here, but NDTV Profit was on top of the story from day one.
Yeah.
We did not let one stone unturned, and that's what's panned out. Fraud.
Yes, I mean, the highest loss in 19 years. That says something, right?
When you're expecting 300 crores, coming at 2003.
2003. It's crazy.
Yeah, those are losses for IndusInd Bank. So we'll talk about that in detail as well. Now, two ways to look at it. One is that, sometimes you just rip the bandage off and then say, now the wound will heal.
The problem, Tamanna, with this is that at every point of time in the last 1 month, one would have thought that, okay, the bandage has been ripped. And then there is something else that's coming up.
It's a new
We were discussing this, and every time people have thought, oh, there's light at the end of the tunnel, And that gets put out
Exactly,
in headlines. And
yeah.
then 2 weeks later, again, oh, there's more light at the end of the tunnel.
Yeah, so some brokerages are taking that view on IndusInd Bank that there is light at the end of the tunnel. Is there really light at the end of the tunnel? First of all, how long is this tunnel? We're going to be talking about all of those things in the show. Quickly on the global recap, so much to unpack for you this Thursday morning. All right, spike in treasury yields have spooked US markets. That's the big headline globally. That's the big story. Let's pull up what the indices did overnight. The Dow was down over 800 points. The S&P 500 and NASDAQ also in pain, about 1.5% down each. So what are the concerns? Concerns are growing that the US budget bill, which is right now stuck in Congress, by the way, opposed by Republicans itself, will put a strain on the deficit. It's called by Trump the big beautiful bill, and it is spooking investors. So what is this bill? It's a 1,100-page bill that covers everything from tax cuts to immigration policies. But it's the tax cuts which is the pain point as far as the markets are concerned. The bill is facing stiff resistance in Congress and could add to the deficit in the economy, which could widen as much as 7%. That's the fear, which is why bond yields have spiked sharply on fears of that widening deficit. The 30-year Treasury hits 5.09%. So crossing the 5% mark is bad enough. It's nearly 5.1. That's the highest level since early 2023. The 10-year has spiked to 4.6%. Dollar has slid as deficit fears have risen. The DXY is below 100, so at 99.62. That's another pain point. As expected, gold has jumped to weekly highs as it does as a safe haven asset class. Crude has slid, the Brent below $65 mark. Let's pull up what's happening with Asian markets. They opened okay, but a lot of seesawing there, all down in the red right now. The Hang Seng down about 0.5%. Nikkei also down in the red. Shanghai is pretty much flat. I'm going to quickly pull up the India implied before we get to our first conversation this morning with Peter Maguire, CEO of Trading.com. 71 points down is what we expect to open with. Could get worse. Peter, this morning, it's all about the big, beautiful bill and whether the rest of us will pay the price for that bill, isn't it?
Yes. Absolutely, Tamana, and good morning. Greetings from Sydney. Yeah, I think it's hit everyone by surprise as far as, first off, the magnitude of the bill. And as you mentioned in the lead-in, as far as bond yields, I wouldn't have expected a 2-year to be at 4, 10-year at nearly 4.6, and you've got the 30-year at approaching 5.1. It's rocketed up over the last couple of trading sessions, and as we know, that's the price of buying money and return. So I wouldn't be surprised, possibly even a 10-year, it may nudge a little bit higher. 475's got to be a handle.
Peter, the question then, hi, morning, Alex here. The question is, if safe havens are not being bought, as was evidenced by that 20-year auction that didn't do too well in the US yesterday, which pushed bond yields higher, then is the only avenue that investors can hide in gold? And do prices go higher? What is your estimation?
Well, I do think so, Alex, and that's you've summarised it to the point where it's the cost of money, and that's what it's bid up. And if you've got to put a more attractive yield there to get a buyer. As far as gold's running, it's still at 100 to 1. We've got to look at the 100 to 1 ratio as far as gold to silver, and gold sitting at 33.70. Yeah, I feel as though that there's going to be more momentum there. You've got a US dollar running at the best part of that 99.5, what is it at the moment? 99.57. So yeah, gold to jump, and let's have a look where that runs again over the rest of this month. I wouldn't be surprised, a 34.50 to 35 handle, very achievable.
Just very quickly, what does this augur? Does this augur bad news for emerging markets like India? Peter, we've already seen FII outflows pumping up. And of course, 1 or 2 days data doesn't make a difference. But if your 30-year or your US Treasury yields are going to spike, what does it mean for emerging markets like India?
Well, I feel as though that possibly you could have a little bit of a correction. I wouldn't be thinking too much, Tamana, but you've got to look at the flight to capital. And maybe in the short run, you could see just a bit more softness. We've got to look at equity markets globally to take that on board. But, the yield certainly from a bond yield perspective is one of much attraction. And when you can buy money you can get a return on your money at that sort of rate, risk-free, it takes a lot of pain out of it. So we've just got to wait and see again what happens across equity markets, currency markets. So that's very much concerned. and then commodities and rolling that across to, equities.
Peter, thanks so much for joining us this morning. Absolute pleasure having you as always, and look forward to the next chat as well.
Thank you.
All right, let's talk about very quickly what happened in trade today, as much as it matters at the start today, because there's so much that's happened. Foreign institutional investors buying to the extent of 2,200 crore rupees. But take a look at the overall picture for the month, because that should give you a bit more of color. Still buying on a net basis worth 38,000 crore rupees, but that big dent that you saw from 10,000 crore rupees of selling earlier on in the week, or perhaps was it Friday, that has taken a big chunk out of the net buy figure. But what happened in trade yesterday? You had the Nifty 50 end high by about 0.5% or so, bang in the middle of the intraday range. The benchmark had a turbulent session and traded in a broader range than it has in the recent past, 270 points. Take a look at that intraday chart and you will see that it moved higher from a weak open, and then it dropped quite precipitously, erased all of those gains and then recovered somewhat. So it came within touching distance of 25,000 before retreating. And there is evidence, of course, and we'll talk about that, of unwinding of certain calls that have taken place at 25,000 levels, and more calls being written at 25,500. What is the implication of that? We'll bring you that in just a bit. But what happened in trade for the benchmark yesterday? Heavyweights, HDFC Bank, ICICI Bank, Bharti Airtel, Reliance Industries all lent support, and the broader markets gained in tandem with the large caps. You had the mid-cap index gaining about 0.8%, and the small cap index up about 0.4%. All sectors ending with gains. You had gains led by defense, which once again made a comeback after 2 days of cooling off. It gained as much as 3.4%, that pack. Realty and pharma also did particularly well, and in fact, pharma has been building strength over strength. The Nifty Bank gained just about 0.4%. Overall, the market breadth favored the advances, with 2 stocks gaining for every stock that declined. Just a couple of mentions. Dixon was a bit of a surprise because everybody thought that the numbers were pretty good. Notwithstanding that exceptional gain that they had to the extent of 250 crore rupees, there was margin expansion, but the stock ended down about 5.8%. JK Tyre was a big surprise, by the way. Weak set of numbers, but the stock is up as much as 13%, and we'll bring you reasons as to why that could have happened over the course of the day. And IndusInd Bank, of course. It ended with cuts of just about 1.5% yesterday. The question is, how does it open today?
Yeah, I think just on Dixon, like 56, 57 times multiple that it's trading at, and FY27 multiples, right? 2 or 3 things. There is rising competition in the cell manufacturing business, Bhagwati and DGB both scaling up. There is delay. It does not factor in a delay in the setting up of the component business as well, and there could well be delays there. So I think there are these 2 or 3 things, and the fact that while they did about 140, 145%, whatever they did in terms of earnings, the people expect, the analysts on the street expect that the earnings growth may slow down to 97%. Imagine saying 97%, it's a slowdown.
And that PLI question as well,
yeah,
right?
and 15% in the subsequent year. So I think that is where maybe just that issue for Dixon likely comes in.
So we spoke to Saurabh Gupta about it. We actually asked him that question 2-3 times. I had an opportunity to ask Sunil Vachani that question as well. That what happens when
that PLI thing goes out of the window.
goes, and they're saying that we are ready with what we're doing right now. The question is whether we want to become an export hub, then we'll need a little more of a boost. My sense is this is not an opportunity the government is going to let go.
Not at all. But independent of the PLI, just the fact that it's not just Dixon, but others are coming up in cell manufacturing is a point of worry.
Valuations are
57 times
FY27. Valuations are egregious.
But
I've started using that word more because of
good
you.
one, huh?
Yeah, it's a nice word.
Anyways, so Alex kind of summed it up perfectly. Yesterday was a day when people said that the trade was so choppy intraday that stop losses got hit quite frequently, and I think Puneet will talk more about it, I'm sure. But on the derivative side, the FPIs are loading up on the short contracts quite significantly. Just think of it, the 25,000 strike, which was considered to be the support, now has 1.24 crore contracts on the call side. That's significant build up, and it's a significant kind of resistance that now we are forming. What was supposed to be a support, according to Lawrence Belanco, has now turned to be a bit of a resistance. I think the only pack that one can think of really is metals, right? They're delivering decent earnings. If China is picking up, and Chinese shipments, by the way, there's a Bloomberg story yesterday that Chinese shipments to the US are now picking up because US suppliers, as they hit the July 4th Thanksgiving Day, are actually loading up on supplies, and Chinese suppliers are giving up in that 90-day truce window. So metals are driving decent earnings and remains a sector to watch on the dips for sure. But just before we talk more about trade, just one thing, guys. I mean, I wonder if all that we've been talking about the whole of last 2 weeks, right? Earnings recovery. I mean, soft commodity prices, demand recovery, base effect for H1, maybe monetary easing in India, if not in the US and UK. Maybe we're looking at earnings recovery and maybe the markets find some support at lower levels. I think that is something you have to pencil in.
Yeah. Earnings overall are looking like they're going to stabilize, and like you've been saying, Q1 will be even better, Q1, Q2, because of the base factor.
Base effect, we made Sanjeev Prasad open his Excel sheet, Tamanna, you remember, right?
Yes, and he's a tough one to convince. But having said that, one more sector maybe to watch out for will be pharma, because just look at how Sun Pharma performed even before the numbers. Numbers are expected today. Slowly a realization dawning that the fears that the Trump policies will hit pharma, and Indian pharma specifically, seem to be easing. So watch out for that space. We have a special analysis coming up also on why the pharma sector is seeing this kind of a recovery. But other factors to watch. The Nifty has showed resilience by defending the 24,800 mark yesterday, despite a very volatile session, rekindling some bullish hopes. Market appears to be consolidating between 24,500 and 25,000. A breakout in either direction may set the next trend. Resistance, of course, now has become 25,000. Cross above this can trigger a fresh bullish momentum. Support at 24,700 is critical. A break below could initiate a broader correction towards 24,450. The RSI is at 59.87, approaching a key level of 60. So watch out for any directional trend, a breakout or a reversal. If Nifty sustains above 24,800 and reclaims 25,000, consider long positions in banks, large cap IT and defensives. That's some of the strategies that you could look at. As far as the Bank Nifty is concerned, it's range bound near the 9-day EMA and 20 EMA. That's, of course, the exponential moving average. Watch out for 55,400 as a key resistance. Let's go across to Puneet now to set up trade in the derivatives.
Well, thank you for that. We have seen, as you rightly said, a lot of stop losses hit yesterday. Index has also seen substantial short covering in trade yesterday, and that could be something to watch out for in trade today as well. The Nifty, indicating an open, of course, the futures indicating an 18-point premium. We've seen a drop in open interest as well. On the other side, for the Bank Nifty as well, we're coming at a very important level of 55,000 as one of the key levels. That has been one of the key supports, at least in the near term. And we've been trading around 55,500 levels for a while now. So we have been hovering around this level between 55,000 and 55,200. Substantially been able to maintain that level until now. We hope that we can do that as well, but today might be a little bit under pressure because of IndusInd, but that'll be something to watch out for. When you look at the FI data as well, we mentioned about the short covering, and that's visible across both stock futures as well as index options yesterday in trade. When we look at the PCR as well, and if we can go in the next one, the FI index has largely been maintained at a similar level. Longs currently at 37 points, and that's been something which has 37% essentially. And the net OI PCR has inched above 1 now. Yesterday it was at 0.93%, essentially indicating that we saw a lot of covering yesterday as well. When you look at some of the other key stocks that both in terms of first the index first, because we've seen 25,000 one of the key levels for the calls, as well as 25,500 as well. So 25,000 definitely seeing that increased interest in terms of calls. For the puts, definitely the 24,400 and 24,500 was one of the levels that we spoke about yesterday as well. That's been maintained. We've seen increased interest at 24,800 as well, as the index has largely moved up as well. But 25,500 for the calls has been another level to watch out for, and that's another key level in terms of call open interest. Finally, in terms of stocks, both on the open interest gainers as well as the losers side, we've seen some short build-up in stocks like Dixon Tech, and this largely because of the numbers yesterday. We've spoken about that. While some long build-up has been seen in stocks like Astral, Solar Industries, both decent results for the companies as well. In terms of open interest losers, finally, we have seen some long unwindings on ABFRL and other stocks that have been focused today, as well as Aarti Industries, and some short covering seen in Hindustan Copper as well as Bharti Airtel. So we've seen the resistance has largely moved up now, and the near-term support is building at these current levels. Nifty, for now, at least the implied open is at 66 points. But another key aspect for the Nifty will be NASDAQ, so watch out for that. But the near-term resistance building up very nicely, at least in the short term.
All right. Thank you for that, Puneet. Implied now about 67 points down in the red. Let's start with our stock list. I'm going to go through IndusInd very, very quickly because we're going to have a detailed conversation on it. So it's a thumbs down, obviously. You know, the one person I really feel for, without knowing who it is going to be the new managing director of IndusInd. He better wear his cape and come because he has a lot of cleaning up to do. He or she has a lot of cleaning up to do. So really, my best wishes to this person in advance, because what has been uncovered yesterday is astonishing to say the least. Here are the numbers. Loss of 2,329 crore rupees for IndusInd Bank in Q4, consolidated year on year, versus a net profit of 2,349 crore rupees. So now a loss was expected. Our estimate was that there would be a 318 crore loss. It's 2,329. I'm just reiterating that. Net interest income is down 43% at 3,048 versus 5,376 crores. Provisions are up 165% at 2,522 crores versus 950 crores. Of course, there was an estimate of 3,371 crores, which we had. NIMs, that's net interest margins, have shrunk to 2.25% versus 3.96%. That's quarter on quarter. Operating loss is at 4,909 crores versus an operating profit of 4,082 crores. GNPA, that's gross non-performing assets, is at 3.13% versus 2.25%, and NNPA, that's net non-performing assets, are at 0.95% versus 0.68%. And like I said, we'll come into this in detail, but I just want to play out for you one point that Sunil Mehta made in his conference yesterday, where he very clearly terms what has happened in this bank and some of it as a suspected fraud. Listen in.
Based on review of all these matters and reports received by the board suspects the occurrence of fraud against the bank and the involvement therein of certain employees having a significant role in the accounting and financial reporting of the bank. Accordingly, the bank has directed necessary steps to be taken under applicable law, including reporting to regulatory authorities and investigative agencies, and to also fix accountability of all persons responsible for these lapses.
So now, who are all of these persons, and just them quitting, is that going to be enough? Well, Interglobe Aviation is the other one we're looking at. It's a beat on all fronts, so a thumbs up on Interglobe Aviation. We've heard from Peter Elbers yesterday exclusively on NDTV Profit, and we'll play out a bit of that conversation. But it's been a good quarter. Revenues up 24.3% to 22,151 crores. This is very close to what estimates were by Bloomberg as well. EBITDA, which is adjusted for Forex, remember Forex was the pain point for the company, is at 6,817 crores versus 4,545 crores. Margins at 30.8% versus 25%. Net profit up 62% to 3,067 crores versus 1,895 crores. So it's a beat on that metric as well. The strong growth has been aided by higher air traffic, lower fuel cost, and higher ticket prices. So not good if you're a flyer on the airline, but if you're an investor, then at least it's going to be good for you. Net profit also aided by higher other income. There was a jump in this figure by close to 40% to 946 crores. Indigo has set capacity growth for the first quarter to be in mid-teens. So thumbs up there. Not quite for Colgate-Palmolive. I'm giving it a thumbs down. Revenue was down 1.9% for the FMCG major in this quarter at 1,462 crores. EBITDA was down 6.4% at 498 crores. Below estimates on all fronts. Margins have shrunk mildly from 35% 0.7% to 34.1%, while net profits are down 6.5% at 355 crores versus 380 crores. EBITDA down due to an 8% and 7% uptick in employee expenses and advertising expenses, respectively. So that's hit some of the costs, but overall, not the greatest set of numbers on Colgate-Palmolive.
All right. Now, Neeraj spoke about the metals pack in this company, I think is going to be in focus at the start. Nalco, I thought the numbers were particularly good. Revenue up as much as 13%, 5,267 crore rupees. And we'll drive a little down into the segmental revenue because I found that very interesting as well. But take a look at this. The EBITDA is up as much as 27.4%. And the margins have expanded quite considerably to 53.7% versus 47.7% earlier. The PAT number as a result is up as much as 32%, coming in at 2,067 crore rupees, and this is well above the consensus estimates. The chemicals revenue was up about 0.8% or so, not too much, but the margin improvement is quite considerable. The aluminium revenue is up as much as 25%. Do understand that this company manufactures chemicals that are used in the manufacture of aluminium itself. So it is backward integrated, but it sells some elements of what it manufactures in the chemical space. And by the way, the revenues of the chemicals business now account for about 44% of the overall revenues, what I was talking about in terms of the revenue contribution. It's gone up quite considerably on a year-on-year basis as well. But take a look at the segmental margins. It stood at 52.12% for chemicals, and that compares with 33.3% in the year-ago period and 51.1% sequentially. And aluminium business has also done well. There's a considerable improvement year-on-year from 44% to 36.5%. This is EBIT margins from the, it doesn't account for amortization and depreciation. But I still find that the operational profit has improved quite considerably for this company. It's because aluminium prices have been supported and have gone up quite considerably. The question is, does that sustain heading into the first half of this year? Let's talk about the second company. This is also a good operational performance in the cement pack, and we've said this quite a bit for cement companies in this quarter. Star Cement is the name of the counter, and the revenues increased as much as 15%, but really the beat has to be on the operating profit front. The EBITDA has gone up by as much as 46%, and the margins coming in at 25% compared with 19.7%, a significant expansion, and that has led to that bottom line growth of as much as 41%. The PAT number standing at 123 crore rupees in the quarter gone by. Similar trends have played out for other cement companies, and they have reacted positively to earnings. Let's see how that reacts in trade today. And finally, Prince Pipes is a bit of a negative number. I thought the revenue is down about 2.8%, and the volumes have been not very supportive. In fact, there's been a decline in the volumes in the quarter gone by, and the EBITDA has also declined by as much as 41%. The margins shrinking to 7.6% compared with 12.4%, and the net profit is down as much as 56% to 24 crore rupees. The volumes, by the way, degrew by as much as 2%. There's also an uptick in employee expenses to the extent of 24%, and cost of materials have gone up by as much as 3%. So not the best numbers from Prince Pipes.
Yeah, I actually have two good numbers and a larger, bigger cousin of Prince, which is Astral as well, out there in the pipe segment. But I'll start with Viatec Vabag. Revenues were up 15% at 3,294 crores. EBITDA margins kind of flattish, 12.2 versus 12.4. In fact, even quarter on quarter, the margins were 12.4. So in some sense, margins have come off a little bit. Bottom line was up about 20%. So stable margins, PAT up 20%. I think the standout feature for Viatec Vabag this quarter was that the operating cash flow to EBITDA has moved higher. It was 36% in FY24. A lot of receivables were stuck. They've improved it to 79% in FY25. So this is the pain point for a lot of companies dealing in government contracts, right? That operating cash flow and receivables are stuck. For Viatec Vabag, that's improved, and which is what I think maybe the street will take notice of. So let's wait and watch how Viatec Vabag reacts. We are in logistics after delivery, yet another company which delivered solid numbers. Yes, revenues were up 5%, just about, but EBITDA 77% uptick, profit after tax at 74 crores versus 21 crores. Very good set of numbers. They've maintained, they've controlled costs. At the same time, operating leverage has come into play. So very good numbers. This one most definitely should react positively. Now, it may not do a delivery which is about 10-11% because the markets are also not conducive. Plus, delivery had other levers out there, but stunning numbers, should react positively today. Astral, it's a mix, because revenues are below. However, EBITDA and PAT are above estimates. So revenues were up about 3.5% at 1681. The estimates were 1746 crores. But margins improved 18% versus 17.9, and the estimates were 16.6%. And I think it'll be important to understand from the management whether this can go ahead and move ahead or no. And PAT, profit after tax, down 1.3% at 179 crores. The estimates were 169 crores. So a bit of a beat there. Actually, not a beat. It's just about in line, really. But the operational performance looking okay. And therefore, just maybe the street likes it. Though on a day like this today, it's difficult to call out for too many stocks which will have a big flare up on just meeting estimates. It requires a company to beat estimates significantly for it to flare up, which maybe just a VRL might be able to do today, from my list at least.
One more stock I just want to quickly mark before we take a break, and not a good news, but the reasons for it I thought was important to mark because Garden Reach Shipbuilders has been in focus, great set of numbers, everyone's loving defense play right now, was up 4.5% yesterday as well in trade, up 44% in the last 1 month. But we'll see a bit of pain today because Bangladesh has cancelled a 21 million USD order for the construction of an advanced ocean-going tug. This order was received in July 2024. Now, the cancellation of the order has to be seen in context because just a few days ago, India put forward stringent trade measures on imports from Bangladesh. This is part of a larger sort of a geopolitical or regional tussle, you could say, after Sheikh Hasina's exit and Mohammad Yunus coming in. They're also getting closer to China perceptibly. So in that context is where you have to see what's happening with Garden Reach. But it's a fairly big order. Their export book was looking good. So this might see a bit of a wobble on the stock today. But we'll take a very short break. On the other side, top trading strategies. What's really going on with IndusInd Bank? Is the worst over or more pain to come? All of that after this break. Stay tuned.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Welcome back. You're watching India Market Open. It's time now to talk about IndusInd Bank. And remember, I just want to point out and remind you of the fact that it was down only 1.5% yesterday. And the expectation heading into that board meeting, which by the way got delayed multiple times over the course of the evening, was that the company would, or the bank would, report a loss of around 300 crore rupees. What has ended up happening is a loss of 2,329 crore rupees, and more skeletons tumbling out of the closet when you thought that it was all over, that there was finally light at the end of the tunnel. That tunnel does not seem to be getting any shorter, unfortunately. So the question, Vishy, is it all over right now, or is there more tunnel to go?
The light at the end of the tunnel is probably a train. I mean, that's what the situation here at Innocent sounds like. March 10th, the CEO, the then CEO of the bank, Sumant Khatwallia, comes out and says, listen, I've found some discrepancies in the derivative book. And this journey from discrepancy to last evening, when they called it a suspected fraud, has been a long one, even though it was just 2 months, but it felt like an eternity for anybody covering this. The fact is that while the accounting issues in the derivatives portfolio was definitely a big hit, about 2,000 odd crore to the balance sheet, right? On top of that, they found issues with the microfinance portfolio. First, there are separate issues, by the way. On the microfinance portfolio, incorrect interest income they've booked, then incorrect fee income they've booked, all of that gets adjusted. On top of that, they found about 2,000 crore worth of loans which were wrongly classified as standard, which have now been classified as NPA, and then there were provisions being made against those loans. So that is a separate problem altogether. Then they said that in the other assets and other liabilities, which Abhijit Devanji has previously called a minefield for most banks, they found unsubstantiated balances. How any balance in a bank can be unsubstantiated, we don't know, but that's what they say. And they say that, well, net it adjusts itself against liability, so we don't need to worry about any financial hit. But now we thought that was the end of it. But then the board said that, oh, wait, we also looked at past accounting issues, and there seems to be a lot of them, even though the amounts involved are small. But all of this proves, or at least points to, a culture of bad accounting that was going on at the bank. The board believes that there is reason to suspect a fraud. The auditors believe that senior management and the former top management of the bank, the CEO and the deputy CEO, were involved in concealing facts. And therefore, we think that offenses amounting to fraud have been done. Both of these units are going to respective authorities. The auditors will go to the MCA and the NFRA. The board will go to probably the CBI. We don't know yet, but they will probably go to one of the authorities. Investigations will go on. One thing that I noticed last evening while speaking to some people who are experts in this field was that the fraud announcement was probably a misdirection, because this is a culture problem. This is the problem. The problem exists at the bank as a culture. Now, if the board were to admit that, then the board is part of that culture, and they would have to take responsibility.
So why the term fraud becomes important is because it points to intent.
No, for sure.
Yeah. So one is that you're just bad at your job, and you did not realize that there's so many holes growing in your books. One is that you did this on purpose to defraud investors, customers, and the entire system.
Exactly. So I think a lot of that clarity will emerge as the investigations go on. But at this point in time, to say that things have now been cleaned up, or we can start off on a clean slate, which is a term that the board, the chairman actually used on the call, that we'll start FY26 on a clean slate, I think it's a little too premature.
So so the only reason why this is so evident that starting on a clean slate, even if it might be happening, one will know only in hindsight, because the last 3 months, there have been enough instances wherein this call has been taken that, oh, this is the end of the mess, so to say, and then a bigger mess has come in, right?
Also, would it be simplistic to ask, and I'm sure there are a lot of investors in IndusInd Bank that have held for all of this time and have seen massive drawdowns in capital, to ask, did the management know? Could the management not have known that all of this was happening?
It's evident from the disclosures that the management knew and were party to whatever was happening at the bank. That is something that they have very categorically stated, that they were involved in concealing facts, involved in hiding this information. But I think we've got our guests already, Ashutosh Mishra and Ashwin Parekh, joining us right now on air. I want to start with Mr. Parekh. Mr. Parekh, the question boils down to, should the board also take responsibility in this scenario, because they are supposed to be the perfect foil for the CEO, and if the CEO was doing things that were probably or suspicions of fraud can arise from that, then can the board escape accountability?
Well, actually, they can't, to begin with, to answer your question. And see all the 4 layers at the bank. I mean, people in the working of derivatives business and microfinance business, and also the other accounting areas where now there is an admission, there could be irregularities in those as well. So many people are involved. I mean, that's the first part. The second part is the senior management. Without the senior management being aware of what was actually going on, in the accounting practices, it could have really continued for so long. So that's the second thing. Then, of course, the third one is the audit committee of the board, and then the board itself. So, I mean, culture is a very good word Rishi used. I totally agree with that. Because fraud, of course, is there because there is an intent to cover things up. But in addition, there is also the cultural issue. Because the accounting culture, for example, and then to some extent, even statutory auditors also, the over-dependence on management representation, suggesting that accounting practices have been adopted, have been followed. I mean, the statutory auditors are also expected to examine, some of these valuation practices or other approaches. They cannot just simply rely on the representation made by the management. So, and it cannot continue for so long. I mean, if you're a good auditor, whether you're a good internal auditor or a good statutory auditor, you should start getting a sense that there is something wrong, going on. From 2016 to 2014 is a very long period, I would suggest. So, certainly a cultural issue. Certainly various people are, in fact, in some form or the other, directly or indirectly responsible for something like this. And it's not too small. I mean, from a normal profit of quarter of 3,000 crores, you're reporting a loss of 2,300 odd crores. So you're actually talking about a large amount, basically. So I would certainly say that there's a fraud as well as there is a cultural issue also.
Okay. I want to go to Ashutosh Mishra. Ashutosh, when you're looking at the disclosures that are made by the bank, do you concur with this clean slate feeling that the chairman has expressed over the con call last evening? Do you think that FY26 could prove to be a clean slate for IndusInd Bank?
We cannot fully rely upon this part. I totally agree that whenever these things happen, some more issues can come up out there. But some of the incidents in the last few years also teaches us that from equity market perspective, we have to also look at a bit different angles part. Probably major part has been covered. Some more may come in this case. Yes, I agree there is a cultural issue. And now probably some outside candidate will come up in the banks and take over MD and CEO. As a franchise, IndusInd is relatively good franchise at this point of time. So from equity market perspective, probably market may react very differently because you started with that stock prices has not reacted very negatively yesterday, and we need to see how the markets react today. But yes, there are a lot of question marks. The way whole things has come up, and this has come up twice in IL&FS case and now second time.
Important point. Mr. Parekh, the question is that in past instances, not necessarily similar to this, but in cases where there has been a large issue, the Reserve Bank of India has stepped in, has influenced the board and the construction of the board and said that we need a representative there. Is that the natural course that this should take?
No, I don't think so. I mean, I would certainly concur with, what was viewed just a minute ago, saying that the bank is stable. I mean, it's one of those institutions where, there was a clear indication, from the chairman suggesting that the capital adequacy ratio is at 16.74%, which is a very strong sort of, statement by itself. So the bank is stable, certainly. What is now required, to my mind, to that extent, instead of RBI getting into it, I suppose the bank will have to really clean up the whole thing, take a very fresh view on all the accounting practices. And it may take a little longer. It may not be a quarter's job. It may perhaps take a little longer because cultural issues take a little longer to settle, to really set in an organization. But I suppose with an event like this, even the frontline people, managerial people or frontline people will get a little more cautious. They will certainly get a little more particular about abiding by the regulations and accounting principles and accounting standards, basically.
Got it. Ashutosh, now, the views that have come in, and I'm now moving tracks to what it means for an investor. The views that have come in this morning range from people saying that the worst is probably now all known. Here on, if the CEO has said that we're starting on a clean slate, the valuations give comfort. Let's assume there is a kitchen sinking move today and it's the accident of the day. From those levels, does it provide comfort? The other view out here, which at least even I kind of agree and maybe everybody on the table does, that it is still unclear if this is the end of the road or could there be more discrepancies coming up. So would you take the bet on valuations if the stock were to start off substantially lower today? Or are there better plays out there?
So we need to look at two different angles out here. We need to look what is the industry outlook also. RBI has literally released liquidity bazooka in the banking system. And the banking system as a whole, probably in the latter part of this year, is going to get benefit out of that. In that context, when we put valuations of this bank, and if we believe even 80 to 90% chances that cleaning up has been already over, then probably if we get very good correction today, some of the incidents like RBL Bank and other, if you take whenever some management change or other event has taken place at that point of time, then investor with a 2-3 year of perspective can enter into this stock, given the valuation is there, given type of cleaning up is taken place in this quarter. But yes, the road will be not so clearer. We need to wait at least who is going to take over the charge of the bank, and at least 2 to 3 quarters of getting clear visibility over path ahead for the bank.
If so, tell us what your views are in the following scenarios. One, you hold the stock, and you were hoping that there will be a cleanup coming soon, and then an upside. You don't hold the stock, but maybe you're looking for a short-term position over here. What would be the take in both scenarios?
So it's better to hold the stock at this level if you have already in the portfolio. With this amount, already this cleaning up has already taken place. So better to hold at this point of time and see whoever come in. If some good name come in as MD and CEO, and you think he has a credible track record, then we may see turnaround taking place here.
Okay, I want to take one last question with Mr. Parekh. Mr. Parekh, from a new CEO perspective, now, of course, the board has said that they will finalize the names to be sent to the RBI well before the June 30 deadline. And then after that, it's up to the RBI how and when they appoint a new CEO at the bank. But from a professional point of view, do you think that there is reason for a new CEO to step in the current scenario? The waters are quite muddy, so I'm not sure which professional will want to risk their career here.
Well, no, I don't think it would be that bad. Quite honestly, I do believe, that in such a case, it could offer some kind of a challenge to the new person. But then there will be enough number of senior bankers in the system who may be prepared to take up such a challenge. That's one. Second is the sense of, once again, putting the bank back onto the tracks. I mean, this is a very good performing bank. I have always been holding that view. So from that perspective, the person gets a good opportunity, gets a good playground to, work on. If he's got about 5-6 years left, in his career, then he can certainly aim at building the bank up again and make it a more vibrant organization as it was earlier,
Okay. Thank you for that, Ashutosh Mishra and Ashwin Parekh. And I think that's an important thing, that while we're saying IndusInd Bank fraud, we're referring to 3 different segments which are pain points. What they've done with their derivatives trade, their microfinance lending portfolio has been a problem, and their micro lending. So all of these have been a pain point. But we're not saying that the bank is at peril. And I think this is an important thing for us to highlight, Vishwanath, because when the problem first came, we got a lot of calls not from just people who are investing in the stock, but who have money in IndusInd Bank. Yeah.
So
let's just make that clear as
far as depositors are concerned, there is nothing to worry at this point in time. This is a corporate governance problem, which is being dealt with. There is likely going to be some amount of regulatory overhang in terms of who's going to be the new CEO, who's going to come in, and what are there more skeletons in the closet. Those worries are separate from the franchise as on its own. As a bank, they actually have no problems, and the depositors do not need to be scared about the future of their deposits, Tamanna.
Okay. What are brokerages making of it? And this is where I find it very interesting. Harsh Saita joining us for more on this. Harsh, a whole rainbow of views over here. One would think it was very clear that this is a huge problem, but you still have a couple of brokerages who come out and say, okay, maybe the worst is over.
Absolutely, Tamanna. So I'll just try to kind of bring all of this together. I want to start off with a Morgan Stanley. They've downgraded to underweight. They've cut the target price from 755 to 700. And I'll focus on only the key points. Bear case playing out is what they say. Negatively surprised by the incorrectly classified MFI slippages. High margin loan mix is moving lower and will weigh in on the ROA. Valuations at 0.9 times FY26, and this is what's interesting, is not cheap in the context of 7 to 10% ROE that we expect over the next 2 years. Let me now talk about CLSA. They maintain their hold, cut target price to 725 from 780. They are saying that core slippages in MFI is elevated, but other segments stable, so they're taking negatives and positives. FY26 expected to be a year of uncertainty. Now I'm going to talk about Jefferies. They maintain their buy, cut target price to 920 from 1040. They said that cleanup larger than anticipated. New CEO is to lay a path for the way forward. Valuations look reasonable. That's how they sum it up. HSBC downgrade to reduce from buy, hike the target price, or rather cut the target, hike the target price from 660 to 770, effectively been pushed back to the pre-2009 era is what they call it. No clarity on the rebuilding process. They cut their FY26 and FY27 EPS estimates by 41 to 43%. Last off, Macquarie. They maintain outperform, target price of 1210. They've maintained their target price as well. Large miss, multiple events recognized. Asset quality is still a concern, but stock trades at 5 times Q4 annualized operating profit, which is well below peers. For example, they take HDFC's example, which trades at 15 times. Key monitorables, management succession, peak credit costs, sustainability of margins, and governance. So a plethora of views coming in. Just have to pick and choose. A couple of them remaining consistent, but outside of that, largely target price cuts.
Okay. I reckon, I don't know what your view is, Neeraj. I reckon that the stock is going to open down.
Accident of the day.
I don't see a scenario where people will say, wow, they've come and said everything is, they've opened up the can of worms and now everything is
Consensus.
over. Consensus.
Okay. There's the accident of the day.
This is the accident of the day. Vaishali Parekh joining us this morning. Vice President Technical Research, Prabhudas Leeladhar. We're also joined by Neerav Asher, Latin Manharlal Securities. Very good morning to both of you, and thank you so much for speaking with us. Vaishali, I'll start with you with your take on the charts.
Hi, very good morning to all of you. So you were asking me about IndusInd Bank, right?
No, I said Nifty, Bank Nifty. Let's start with that.
So Nifty continues to be in a range bound. We saw a euphoric move post the geopolitical issues getting solved, and we did touch 25,100. But for now, it is sideways. So near-term support level lies at 24,700. If those levels break, then we could see further downslide coming to 24,500 and so on. So for now, I maintain my view of range of 24,700 to 25,100. And as far as Bank Nifty is concerned, near-term support lies at 54,000, and I think it's going to consolidate. That's my view.
Okay. Since we brought up IndusInd, Vaishali, you could maybe give us a chart check too. If we know it'll... So, okay, Vaishali, let's work with an assumption that it starts lower, right? What are the levels, therefore, that you expect that there could be support? Let's tackle it that way.
Okay, so when it witnessed a sharp fall, we saw the stock going towards the 600 levels. So now that is the low that has been made. I don't think this would go further to retest these levels. I think at the most, if the stock has to have this inherent strength from here on, if we say the worst is factored in, then 700 would act as a near-term support, and that could perhaps be a buying opportunity to give a bounce back towards 800 levels. That would be my range. So the range right now I would see is 700 to 800.
Okay, so viewers, we've covered kind of everything around IndusInd, and I'm going to get Nirav Asher in for a lot of other stocks that we have to talk about. But Vaishali, while we are at it, just let's quickly cover your ideas as well.
So I'm choosing two stocks from the cash category. One is Suprajit Engineering. Yesterday, we saw good volume coming in and technically very well placed. It is 419, so with a stop loss of 400, I'm giving a target of 460. Of course, this is going to be a positional trade. The other stock that I do like is Kitex Garment, because overall we are seeing good pickup coming in the textile industry, and this is one such stock which has already given a breakout. So I would say on near-term basis, it's a buying opportunity with a support of 270, and this can go towards 350.
Yeah, in fact, Nirav, the discussion Neeraj and I were just having, let's get your take on it as well. Interglobe, good set of numbers, but then concerns about how Q1 will look like because of everything that's happened in May, regional turmoil, pressure to end that alliance or that understanding with Turkey. How have you looked at the Interglobe numbers?
Well, I think the best is behind us as far as Interglobe Aviation is concerned, at least for the time being. And the kind of volatility which we have been seeing in those industries which have an exposure to the global markets, I think this is a new normal. So definitely, while we had some very good performances in Q4, I think Q1 will be a bit of a challenge considering the fact that we have a lot of headwinds to tackle with.
Okay, Tamanna, it's an interesting point, right? Did one such splendid performance, most brokerages have hiked target prices, two overhangs. One, that Q1 will be weak because May has seen a lot of cancellations, etc., because of the geopolitical turmoil. And two, I think this whole talk of the promoter stake sale coming back, Rakesh Gangwal selling the remaining stake, becomes a bit of an overhang. So when Nirav is saying the best is behind, my debate out here, I don't know how you think about it, could there be a dip that investors will be able to use to log into Interglobe because the airline is performing like nobody's business?
You cannot beat the fact that you have the largest market share. Air traffic is only going upwards. The latest air traffic numbers that have come, they're the only ones with that innovative products. I think they've started Mumbai-Manchester that they announced yesterday, their longest long-haul flight yet. My last conversation with Peter Albers when he laid out the plan for FY26, they are going very aggressive international, margins at 30%. So all of those fundamentals don't change.
Exactly. So actually, and which is why, Nirav, here's the question. When you say the best is behind, do you foresee a dip which you will use to buy, or do you want to avoid Interglobe completely?
As you rightly pointed out, this can be used as an opportunity to buy.
Okay, that's what I wanted clarity on.
Yeah, definitely it can be used as an opportunity to buy. But I think one needs to be wary of the valuations also, because historically aviation has been a cash burn business. So we should not forget that. While the prospects continue to be very, very strong, I think it's important to strike the right balance as far as price value equation is concerned.
Okay. Okay, Nirav, thank you. Just wanted that clarity, which is why we asked that question to you again. Okay, as we slip into the break though, because we got to take a commercial break, hear out Peter Albers, the CEO at Indigo, wherein he shares about how the company is in complete compliance with the current tensions with Turkey and how is it that they are going to deal with this issue.
The operations between countries when it comes to air travel are being governed by what is called an air service agreement. And the air service agreement defines what is the number of flights and who to operate and so on and so forth. So that is the basic operating principle also for Indigo. Within that framework of the air service agreement, Indigo is operating fully compliant with the regulations, the frameworks, the opportunities and the restrictions, possibly which such provides. I think certainly that's important. We do have thousands of customers being booked on those flights, either from India to other parts of the world connecting over Istanbul, or from other parts of the world connecting over in Istanbul back to India. And we want to continue to serve those customers. Of course, as an airline, we always look for, if circumstances change or if operational elements are changing, we'll adjust accordingly in the same way as we have adjusted our network after the Pakistan airspace closure. In the same way we adjusted our network due to other weather-related events. So we'll always make sure that we look for what fallback opportunities or what fallback positions are there. But until that becomes the case, we continue to operate in the way we operate today.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back to India Market Open. I must say it's been a bit of a forgetful last 5 days or 6 days for telecom companies, because not only have one of the pleas for AGR dues has been shot down by the Supreme Court. Now we learn that DOT and TRI are going to decide on reserve price, base price for high frequency bands, and telcos hitherto are getting it for free. Now they will have to pay something for it. The terms of assignment will be set up soon by TRAI, and this would mean additional costs for telcos. So a set of bad news for Vodafone and Airtel about 3-4 days back, and you've seen the resultant impact on Vodafone. Now there is further that there might be some more downticks here. So not necessarily the best of last few days for telcos. Actually, Nilavashar, just before we get to pharma, let's talk about this. I mean, Vodafone Idea, it's a very trader-friendly stock. A lot of people trade there, a lot of people invest there. 7 rupees mein kya jayega? My point being, there's bad news one after the other. Would you avoid Vodafone entirely? even at these prices, or would you believe there is merit in buying it at these levels?
Well, even if I were to avoid it, I think a lot of people, they get the thrill out of trading in Voda Idea. And I think they're not concerned about the fundamental side of the story. So they're not bothered about what a Jio is doing or what a Bharti Airtel is doing. But I think they're more concerned about what is going to be the fate of Vodafone. So I think our advice while our advice is to stay away from the stock, but I think the temptation to make a quick buck or to trade in this particular counter just doesn't go. So I think we've seen a lot of retail traders, a lot of HNI traders also continuously evince interest in the Vodafone stock. So they've always used such opportunities to buy, and I think they will continue to do so until we find a natural closure to this episode.
Okay. Fair call, Nirav. Let's move on. And by the way, the pre-open rates have just started to trickle in. So just mark IndusInd. We have to mark Interglobe Aviation. But I reckon IndusInd, and this is believable rate, by the way, for the Nifty as well. But IndusInd, suffice to say, this might well be the start. The question only is how much more in the day today. Also keep an eye out for Interglobe Aviation, the other large result that came out. Wow. Will it be a 10% uptake? Will it be a couple of percentage points uptake? Remains to be seen. Blockbuster results for sure, just that the outlook painting wasn't necessarily the strongest. So these two, keep in mind as we wait for the rates to settle down. But pharma is making a very strong comeback with the Nifty Pharma Index up over 1% or 1.3% in the past 5 days, whereas the rest of the market hasn't quite done that. The rally is driven mainly by this inline quarterly results and a positive outlook from key players like Torrent Pharma, Gland, Dr. Reddy's, etc. What's adding more fuel to the pack? Varsha joins in with, I must say, extensive research. Varsha.
Yeah, thank you for that. So yes, even yesterday the pharma index was up over 1%. Now there are few reasons for these. One of the reasons is good numbers when it comes to Q4, and also the positive outlook has been given by a few of the companies. Now let's see which of these stocks were up since last 5 days. You have Torrent Pharma, Gland Pharma. Actually, every pharma company majority pharma companies were up yesterday and in last 5 days also, and they are rallying when it comes to since May 8th. Now, let's see the main focus area, what's the reason for this rally? One is majorly inline quarterly results which were given by Torrent Pharma, Lupin. They had inline numbers, while Divi's did beat estimates, and when it comes to Dr. Reddy's, there was a revenue in line, though EBITDA did miss estimates. But overall, inline numbers by a majority of the pharma companies, but there were few companies who did not meet expectations when it comes to Q4. You have likes of Gland Pharma, Cipla, and Piramal Pharma, which miss estimates. The second reason why we are seeing this rally when it comes to pharma is the positive industry outlook. So let's start with Dr. Reddy lab, where they've given double-digit growth when it comes to FY26, and semaglutide, that is the diabetes portfolio, will be the next growth driver for the company. For Torrent Pharma, they've maintained their guidance for 70 to 100 basis points of annual EBITDA margin improvement. Operating leverage is expected to play out for this company. For Divi's Lab, they are expecting double-digit growth when it comes to FY26. For Gland Pharma, though it ended FY25 with flat revenue, but they've guided mid-teens growth when it comes to FY26. They were also entered into agreement with Dr. Reddy's Lab for biosimilar CDMO. Now, biosimilar is the next hot thing when it comes to pharma. When it comes to Lupin, they aspire to become $1 billion US sales in FY26. Jubilant Pharma, they are seeing increased demand when it comes to CDMO business on the back of alternate US manufacturing sites due to tariff risk. Now, these are the guidance which good guidance when given by all the pharma companies. Now, what is the street expecting? So, India rating anticipates 7 to 8% year-on-year growth when it comes to India pharma market. This growth will be driven by chronic therapies, price increases, and new product launches. While Kotak projects 10 to 23% year-on-year growth in FY26, expecting stronger acute season with contributions from pricing, acquisition and in-licensing deal. Now, the current hot topic when it comes to pharma is the US regulatory sentiment, that is most favored nation policy, which will actually not impact generics, Indian generics company, and this is one of the reasons why pharma companies were up in trade yesterday.
I want to ask you about Sun Pharma as well. Varsha, we must talk about it because you now have the numbers coming in and the stock was up even before the numbers. What's the setup like? What are we expecting?
Yeah, so for Sun Pharma, so revenue is expected to see 12% growth, while net profit is expected to see almost 6% growth. EBITDA is expected to grow 18%, while margin is seen at 27.5 versus 26% last year. Now, the organic growth will be led by Revlimid sales, which is a cancer product, and the domestic formulation sales is expected to grow at 13% year on year, and the US sale is expected to grow at around 12%, which will be led by specialty portfolio. For Sun Pharma, the next leg of growth is their specialty portfolio, and also continued traction in specialty will partly offset by price erosion in generics. And the key areas which investors should watch is sales growth and R&D guidance, which will be given by the company, and further development when it comes to Lexilvi, which is the hair loss treatment drug, and also update on the specialty drug portfolio.
So that's Sun Pharma for you. Shrikant Chauhan joining us this morning, Executive Vice President and Head Equity Research, Kotak Securities. Very good morning to you, Shrikant. So much to ask you, so little time, but I want to start with the indices first. Nifty, Bank Nifty, you're going to see maybe a slow start on the Nifty. Opportunities to shore up positions?
Good morning, Tamanna. Good morning, Neeraj and everyone. Yeah, I think Nifty is somewhere it will open around 24,750, 700 because there was weakness in world markets. But if we consider the overall setup of our markets, then we saw good amount of consolidation for last 2 days, and crossing the level of 25,000 will only result into short covering. Till then, I'm expecting market to remain in a range. But at the same time, today, because of any reason, market breaks the levels of 24,650, then in that case, the chances of falling further towards 24,500 or maybe 400 would turn bright. So at these levels, we need to be a little bit careful. And today, because it's a day of weekly expiry, we need to be careful. And we are of the view that today's day may be make or break day for the market. So crossing 25,000 will only help the market. Otherwise, we need to be more and more stock specific.
From that perspective then, Shrikant, being stock specific, what would you recommend that our viewers look at the start today?
Good morning, Alex.
Good morning, sir.
Yes, I think, there are number of stocks and pockets which are really showing some strength in terms of their technical setup. Specifically, pharma companies, yesterday we saw good amount of recovery in almost all the stocks. Divi's Laboratories in that, if we see the technical pattern of the stock, then it has crossed the multi-month highest level, which was around 6,300 levels. And crossing this level clearly indicating us that we are heading towards the levels of maybe 7,000, 7,200 in the near future. So it's a buy at current levels, somewhere close to 64, 6,300 levels, and around 64, 6,500 levels with a stop loss at 6,400. And we can keep a target of 6,800 on the higher side. We also like DB Realty. It is from the realty space, and most of these stocks recovered very well from their lows. Also, this particular company relates to some travel and tourism business, hotels business. So there also we can see some buying attraction. Based on that, also we can see some buying attraction for the stock. Currently, it is around 192, 193. We are expecting stock to move towards 200 plus. We can keep a stop loss around 188. And also we like Hindustan Copper from the metal space. Today also we can see that in the pre-openings market, number of metal stocks, commodity stocks, they are moving higher, or we can say they are trading in the green. Currently, we like Hindustan Copper, which is around 230 levels. There we are expecting target of 245. We can keep a stop loss around 224.
Okay. Thanks for that, Shrikant. Now for the big brokerage call for the day, HSBC on Hexaware. I believe they've initiated coverage, Puneet.
Nifty. It's a very interesting report at a very interesting time. They've initiated coverage, target price of 950, which is a 20% upside from the current levels. HSBC mentions that the company has really strong foundations. Just for some context, Hexaware was listed in the market and was privatized essentially in 2020, and then it had a recent listing again in February this year. Now it's owned by a private equity firm, and hence we've seen the valuations very high at the time of IPO. But now that the growth prospects are visible, HSBC says that the company is well positioned to grow at top quartile sector rate, and that will be driven by, of course, the client mining as well for the company. They've also said that the share of the low margin deals which the company used to do over the last couple of years, that has significantly slowed down, and margins should go up by 270 basis points over the next 2 years. They've also highlighted that at a price to earnings ratio of 34 times, whilst higher than the large cap peers, it offers growth over the next couple of years, which is significant for the company. It is currently trading at 23% premium to LTIM, but they mentioned that the company has a 2x growth in terms of cash conversion there, and it is still at a discount to Coforge by 5% and 23% discount to Persistent. So relative valuation is in play here as well. So that's why they are positive on the company. We've also done a very interesting KYC on this, so you can check that out on our YouTube channel as well.
Okay. Well, that's interesting. An IT stock out there. Thanks a lot for that, Puneet. Now, Nirav Asher, Hexaware not necessarily, okay, word on Hexaware, yes. And then anything else in terms of results, Nirav, that stood out today? Because there are a lot of results. Pipe companies, Astral and Prince came out with numbers. If you have some thoughts there, for example.
Well, I think the pipe-related company business, I think they're doing quite well at the moment. The performance has been quite good. The competitive intensity is there, but most of the players have established their niche. And I think it depends on the raw material placement also, because we had a lot of PVC players who have been struggling because of the volatility in the PVC related segment. So I think there we've seen some amount of underperformance, but otherwise the pack has done reasonably quite well.
Okay, I'm just wondering what you thought about Nalco, because they look like a good set of numbers to me, Nirav, and the outlook is also looking reasonably good in terms of aluminium prices. Alumina production has gone up. Calcite alumina production is gone up quite dramatically for the company.
Well, yes, Nalco is looking quite good because there is a valuation comfort also. It trades at a very reasonable price to earnings valuation. At the same time, the performance has been quite good. There's been an uptick in the aluminium prices. There's been a good amount of stability in the aluminium and the alumina production. The highest amount of bauxite which has been mined by the company, excavated by the company. So I think there is also a focus on process efficiencies, operational efficiencies, improvements, etc. So I think plus of course captive power plants, etc. So a lot of work being done on the operational side, which has given an uptick in the margins. So I think it's looking quite exciting from the current levels.
Very, very quickly, Srikanth, I'm going to give you 3 stocks, buy, sell or hold. Let's talk about this morning NTPC Green Energy, into Globe, IndusInd Bank.
See, in this space, I would like to go with Indigo, which is currently very close to its all-time highs. But also, if we consider its entire setup and the way the company has reported its number, I'm of the view that the stock is heading for at least 6,000 plus sort of levels in the near term. So it's a buy even at current levels, even if it is opening around 5,500 levels. We also like NTPC Green. There also we have a target of close to 140, but for the time being, we are expecting this stock to remain in a range of 100 to 120. But at this level also, it's a buy if there is a view of next 3 to 6 months.
What about IndusInd?
For IndusInd, it is better to stay away because the stock is under a lot of pressure. It is finding difficulties, and this time also when there was recovery and specific positive news flow a few weeks back, that time also it failed to cross the level of 850. So one thing is very clear that at every rise we are seeing good amount of liquidation or maybe profit taking in the stock.
Quick view, Shrikant, on something like a GMM Fowler, not the best numbers and it's reacting negatively in trade. How would you react?
For GMM Fowler, the way it recovered from the levels of 980 to almost 1280 or 1300, there is like good amount of buying strength in the stock, and it has left a bearish gap close to 1400, 1450. So based on its technical formation, I am of the view that the stock is heading higher. And again, the strategy should be to buy on dips because the stock is retraced. The stock has retraced almost 20-25% from its bottom. So in case if there is any correction, then look for adding this stock. But broadly, the overall trend of the stock is very strong.
Okay, interesting. But the number is not the best, must say, which is why that 8% downtick today for GMM Fowler. However, let's see how the markets are doing this Thursday morning. We will start off in the red for sure. The question only is how much further, or do we stabilize? 24,707 or 24,700 for the Nifty. Bank Nifty 0.5% lower. IT about 1% lower. I think this has to be the follow through for the Nasdaq and the rising yields more importantly, because that kind of hits the multiples for tech companies. Small caps flat, mid cap index 0.25%. Not bad really. Let's get the heat map up on the screen. See, I'm guessing a fair degree of red, and yes, there is. IndusInd, quite the accident of the day, though not behaving like quite the accident of the day, to be honest. It's relatively well behaved, you have to admit. Power Grid 1.5% lower. HCL Tech Mahindra, Infi bring up the list of IT names which are sulking today. There is a bit of Reliance in the red, by the way, so keep that in mind. We already spoke about ITC in the red, HDFC Bank in the red, so some heavyweights down there. On the gaining side, maybe a Geo Credit, the Adani Twins, HDFC Life, Apollo Hospitals, but those are few and far in between. But just quite stunning really that Adani Ports on a day like this is up 0.77%, Adani Enterprises 0.24%. I think the set of, and standard disclosures, of course, the Adani Group owns NDTV as well, but these stocks have actually seen some good mojo in the last month and a half. So on most days, they are coming out on the triumphant side. But a lot of red, very little green. Tamanna, the surprise to me, and I'm really surprised with the IndusInd Bank reaction, just about 3%. One would have anticipated a lot worse. It hasn't turned out that way.
But Macquarie has kept us outperform on IndusInd of all things, saying that the worst is over. I mean, how bad can it get? Look, the bank is stable. There is an intent to fix. That's what the bet is. Are you willing to take that bet today or not is the question. Here's what the change has been. Of course, a drawdown on the market cap, but not that massively. Actually, if you go to see it, about 1,800 crores odd. In the start of day, we'll wait and see what's happening. Remember, if you watched Heard on the Street yesterday, Swamit Sarkar also told you that you have DIs and FIs shoring up on IndusInd Bank. So that's maybe where the strength is coming from as well. But let's come to the broader markets once very quickly before I get to the sectoral heat map. Mid cap about 0.5% down, not staying put from a couple of minutes ago. The small cap 250 also sliding a fair bit. Let's pull up the sectoral heat map first and just get a sense of what's happening there. Red all around. Pretty much, I don't know if this nifty media is also going to hold up, but IT is hurting the most. Remember, one of the big factors in the markets today is what's happening to the 30-year yield in the United States, and that's going to weigh heavy as well. Let's come to specific stocks that we're tracking at this hour, and I'm going to start with results impact. Nalco, NTPC Green Energy, let's look at how a few of them are doing. Nalco, good set of numbers is showing on it. NTPC Green could well be the stock of the morning. Excellent set of numbers coming in. Interglobe, stellar set of numbers, but there is a sell call actually from Investec, which has come in on Interglobe. On top of that is the best behind it. That's a call that Nirav Ashar gave this morning. I also want to look at RVNL. I want to look at Prince Pipes. And I want to look at Astral, some of the others that have reported earnings. Quite a few actually. VRL Logistics, let's look at VA Tech, Wabak. We're going to be speaking to them in a bit and how those numbers have panned out as well. So a lot of results impact is what you're going to be seeing through the day as far as markets are concerned. VRL is doing pretty well, BA Tech Wabag as well. And GMM Pfaudler is the other one which has a poor set of numbers, and you're seeing that stock 6% down. So if the numbers are decent, the street will reward it. That's what we're seeing. IndusInd Bank, I'm just going to pull it again to see where the stock price is going, about 2.5% down, not half bad after the kind of disclosures that they've made. Instead of 300 crores, losses are 2,400 crores. Garden Reach is the other one I want to pick up. Bangladesh has cancelled a $21 million order, just about 0.5% down, not hitting it at all in any dramatic fashion, because remember, at the end of the day, a very, very strong company. So largely, I would say more declines than advances. Alex, is looking like a weak start to the markets.
Yeah, no doubt. And it's dropped a little bit more since Neeraj was standing in front of the wall, and we'll talk about some of those aspects. Right now, it's down about 0.7% for the benchmark Nifty 50, and the move is pretty fast. Let's see if there's a bounce back from those levels. But something like an HG Infra also reacting to the numbers on the downside, not doing particularly well. In fact, it's losing further ground, down about 8% or thereabouts. And from the gainers, we marked pretty much all of them, but something like a Kalpataru Projects is also doing well. It's gaining about 5% in trade today. Hitachi Energy, once again, active in trade, up about 3% or thereabouts. Fortis was quiet in trade yesterday, but it's up about 3% in trade today. It's doing quite well for itself. Something like a Credit Access Grameen as well, with all of the travails that it has faced in the MFI space or the microfinance space, gaining about 2% or so in trade today. So the question really, Nirav, to you is, I want to ask about the metal space, and I know I asked you about Nalco, but from the whole pack, and we saw Hindalco numbers as well, would you say that the best play would be in the aluminium space, or would you pick something else?
Well, yes, the best play would be in the aluminum space, but I think we also like steel, because as far as the steel companies are concerned, the domestic performance has been very, very robust. And it's been the dumping related issues or the international markets which have been a pain point, or the overseas operations of these companies which have impacted. But I think domestic operations have been very, very strong, very, very backwardly integrated, and operational efficiencies. As far as aluminum is concerned, I think there's nothing to say more other than the fact that the prices have been very, very stable, strong, and we are seeing very good demand across categories.
What would be your pick then, Nirav? In the aluminium space, would you go with Hindalco? Would you buy Nalco at this price?
Both of them look quite good.
Okay. Shrikant, do you want to come in on certain other pockets of relative strength and weakness? IT as a pack looks a little weak, down about 1.5% in trade today. Any trades here in your opinion?
No, I think it is better to stay away from taking any specific bet with a very short-term view in any IT companies, because this particular rise in the bond yield, most of the time I have seen that it attracts a lot of selling pressure for IT companies. But in that space specifically, we like Coforge if there is a view of next 3 to 6 months. Currently it is around 8,200, but if we consider its technical pattern, and also if we go through with its fundamentals, we are of the view that the stock is heading higher, and we may even see the levels of 9,000 plus. So it's a buy at current levels, and more on dips. But otherwise, I think it is better to stay away.
Okay, bring up VRL Logistics. I also want to mark delivery, by the way, because post the results. So VRL Logistics today, 12%. Delivery over the last 5 days, if possible to get that chart, but just goes to show that after the numbers, when it had a big spike up, it's not quite had a let down, if you will. It's been steady after that big bump up that it saw the other day. So logistic companies are coming to the fore, which is actually a very good sign. So Shrikant, Chauhan, to you first. Delivery on the charts, and VRL more importantly, now that it's had this 12% bump up.
See, if we consider the relative strength in these particular two stocks, then we like VRL Logistic. It is like on the verge of crossing its important level, which was around 630. And the next level to watch out for would be then 750 or 760. So the stock has spent a lot of time below this 630, 640 levels, and now it is crossing on the back of strong numbers. So we should look for adding this stock to our portfolio. For delivery, we can see some more strength because of the overall performance of the sector and the stock. But broadly, I'm of the view that the stock is going to trade in the range of 370 and maybe 320 on the downside. We also like Aegis Logistics from this particular space. Here we can see that the stock has made a strong bottoming formation close to 850, 900 levels. And the next level to watch out for would be 1050 or 1060. So Aegis also looks good at current levels to buy for.
Okay, just want to get your view, Shrikant, I'll come back to you on a Titagarh rail and some of those rail stocks as well. Titagarh holding up, but many of those rail stocks have lost their gains and given up their gains in the last few days, including in Ircon, RITES, etc. Are you liking Titagarh today?
Yeah, I think something must have happened maybe fundamentally for the stock, because the way stock recovered from the lows and it is sustaining above the mark of 900. One thing is very clear, that the stock is heading higher. Currently, it is consolidating because it rallied a lot from the lows of 700 to almost 1000. But between these levels, we should look for taking some contra bets of going long with a target close to 1150 or 1200, where it has next leg of resistance. So even from current levels, it's a buy with a view of next at least few weeks.
Pull up something like not something like exactly Oil India, 4%. It's down in trade today, and there are just so many numbers that this may have flown under the radar a little bit. Just want to point out that the margin has contracted in the quarter gone by to 35.9% versus 40.7%. And the estimates had pegged it, consensus estimates at close to 42.2%. So it's an underperformance on the margins front. The revenue has also not increased very substantially, but it's more or less in line with expectations. It increased by as much as 5%, but the EBITDA down 7%, and that's had a bearing on how the stock is being perceived. Neerav, very quickly on Oil India, would you at all venture into this name or any others in the space?
Well, definitely yes, because such companies you have to wait for a dip. If there is a dip, or if there's a quarterly miss in the performance, then this can be used as an opportunity to buy the stocks at attractive levels.
Okay, so is that that's a yes for Oil India?
Yes.
Okay.
Yes.
Okay.
I just want to take a look at Interglobe Aviation. We spoke about this before market started, and Neerav Asher said maybe the best is behind them. The street seems to be looking at it in that point of view. The stock about 1.5% down after a good set of numbers. In fact, the Q4 numbers were quite robust, strong quarterly earnings, but brokerages have a slightly different view. Mahima joining us for more on that.
Right, so as you rightly mentioned, I think the entire buzz around Mahakumbh being the biggest factor of leading the top line growth for Indigo this quarter, that seems to be already priced in, and which is why we're seeing the kind of pressure on the stock today. In terms of the overall numbers, it was a good set of numbers. Revenue up almost 24%, net profit almost up 62%, yields up 2.5%. This is the highest ever Q4 revenue, EBITDA as well as net profit. Strong growth was aided by higher traffic, lower fuel cost as well as higher ticket prices. In terms of unit fuel cost, even that came down to around 6.4%, which kind of aided the margins. Fuel cost was lower owing to drop in crude prices, and in terms of total fleet count, that decreased by around 3 flights to around 434. In terms of what brokerages are penciling in, Jefferies has maintained a buy and hiked the target price to 6,300. They're saying that Q1 will see negative impact of geopolitical tension weighing on travel demand, and believe this could be a one-off blip. They are raising the EPS estimates by 6%. Morgan Stanley has also maintained overweight and hiked the target price to 6,502. They're saying another strong quarter, but a temporary weakness in air travel market could seem to have some pressure in Q1. Lastly, in terms of Investec, that is one brokerage which has retained sell call on Indigo, and they've given a target price of 4,050. They expect further earnings pressure in FY26 and partial recovery in FY27. And they're saying that the stock is still 10% below FY24. So this is the overall view as to how Q4 has panned out for Indigo and what brokerages are saying about it.
Okay, all right. Thanks so much, Mahima, for wrapping that up for us. The stock under a little bit of pressure, but it's not too far away from all-time highs. Bear that in mind, and it's been in the news even over the course of the last several months from the Mahakumbh days, which are not too long back. We, on that note, would like to thank both our experts, Neerav as well as Shrikant, for joining us this morning. Thanks so much for joining us as always, and look forward to the next chat. We have to slip into a very quick break, but on the other side, we're speaking to the management of NALCO. Brigendra Pratap Singh, who's the chairman and managing director, speaking to us. Do stay tuned.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock.
Right, a very strong set of numbers for NALCO, National Aluminium Company, and this is led by a significant improvement in the margins for the quarter gone by and an improvement in the revenues in the chemical segment. To talk about the quarter gone by and to talk about the outlook going forward, I'm joined today by Brigendra Pratap Singh, who's the chairman and managing director of the company. Mr. Singh, thanks so much for taking the time. Pleasure speaking with you, and congratulations on a great set of numbers. Let's
Thank
talk
you,
about
and good morning.
Good morning, sir. Let's talk about some of those aspects, right? Because you had a significant improvement in margins. Raw materials have been very benign and comfortable for you. Is that the primary reason? And you've also seen aluminium prices go up. What would you say are the main reasons and drivers for the performance?
The main reasons you see for the performance, our revenue generation year to year increased by around 3,800 crores. And the main reason was calcined alumina prices, which has gone up, which contributed around 2,000 crores. And around aluminium prices, which contributed around 1,500 or 1,600 crore. The top line increased by around 3,800 crores. And also we reduced our expenses. Our expenses reduced by around 1,000 crores, where in raw material front, our caustic soda prices, our CP coke prices went down. We had new vendors introduced. Our efficiencies, we have improved our efficiencies also, which contributed at around maybe around 200 to 300 crores improvement in the efficiencies. So overall development, three main things which contributed: increase in the prices of the alumina and aluminium, increase in the prices of metals, and reduction in our overall expenses. In our manpower front also, which is our fixed cost around 18%, there also we are able to reduce by around 300 crores. Our expenses went down by around 1,200 to 1,300 crores. That contributed significantly in increasing our PBT.
So let's talk about the two segments, chemical and aluminium. You pointed out about the prices in one of the products that you manufacture in the chemical space being one of the reasons for the good performance, but the revenue in the chemical segment is up 60% year on year, and it now accounts for 44% of the overall revenues from what I saw.
Yes.
It's a marked change, even if you compare it sequentially, particularly if you look at it year on year. Is this the mix that is going to be the case going forward, or is it likely to shift again?
Going forward, we are seeing this year, like last year, our average alumina prices, we got around $580 US dollars. This year, we are expecting somewhere in between $400 to $450. Now it is at present, as on date, the prices of the alumina spot prices are at the level of $400. Maybe some more positive sentiments, if it is coming, it will be around maybe in between somewhere around $400 to $450. That will give a slight improvement over the previous years, like 22-23 we were at around $350, but still whatever prices we got last year, that prices were exceptionally high. We're not getting this year, but one thing which we are trying to do this year is increasing our volumes. Like what the targets which we have taken this year is increase in the calcined alumina production by around 2 lakh tons with the same facilities. Increasing our efficiencies is the next major thing, and reducing our cost. By reducing our cost of the coal because our coal cost, which was coal of taking from our linkage coal. Now we are increasing our own coal production, which was around 2.8 million ton last year. This year we'll be doing around 4 million ton coal production. So power cost, which is around 30% of the total cost of the aluminium, will also go down slightly. We are working on the both front, three fronts, that is increasing our volumes, improving our efficiencies, and reducing the cost.
Okay, we'll get
which will substantially increase our overall margins.
Right. We'll get into each of those levers in just a bit, but I just want a quick clarification on the chemicals space, sir. You talked about calcined alumina and the target for this year in terms of volumes. I just want to understand, and from the perspective of your investors also, it would benefit them to understand the revenue contribution within this sub-segment of chemicals. Would you say that calcined alumina accounts for a lion's share? And can you break up the numbers for us, the key contributors?
If we see calcined alumina, which you told is around maybe 44% of the total revenue. That is the thing. And that will slightly increase this year because we are going to increase the volume by 2 lakh, which will increase our revenue generation in the calcined alumina by around maybe 5%, 5 to 6%. Not very high because aluminum prices are more as compared to that. But yes, in there the margins are also there. So our aim, because market is not in our hands, our aim is to increase the volumes and reduce the cost.
Okay. So now speaking about the cost aspect, as I pointed out earlier as well, and you kind of referred to this when you spoke about the raw material prices, but I look at the raw material to revenue ratio is down to 11% in the quarter gone by compared with 19% year on year. The question is, based on what you're seeing right now, is that likely to be the case in at least the first half? And I know that you may not have the ability to look that far ahead, but at least in the first half, do you expect this to continue?
The raw material prices, which are now presently, like caustic soda prices are at the level of around 40,000 and CP coke is also around at the level of 39,000. We are expecting that will be remaining same in the first half at least. We are trying to add more vendors in that. At least that is what we are doing. Some of the adding more vendors and adding some trying to import also those things. Some restrictions are there in import, so as to have more competitive in that. And as far as power and fuel is concerned, raw material, of course, our overall cost, if you see, it is around 20%. Raw material side, if you see overall expenses, if we are seeing the percentage wise, it is 20% of the overall expenses raw material. Our target is to further reduce it by 2 to 3%.
Got it. And in terms of volumes, which is the last lever that I want to talk to you about, you mentioned in certain pockets you're anticipating there will be a substantial increase, but I just want to ask about the Pottangi bauxite mine and the status of the operations there. What are the implications for the number overall? And what you've said about manufacturing, does that also take into account the refinery that you're opening in May for alumina?
No, refinery was supposed to come in September, 15 refinery, which will add around 10 lakh tons of capacity. But few of the packages are getting delayed. We are expecting that we will be completing by December, January. After that, commissioning will take 2-3 months. So refinery, fifth stream alumina refinery production will not be added in this, whatever 2 lakh I am telling. That will come in the next financial year. Maybe next financial year we'll be adding around 5 lakh to 6 lakhs with this new refinery, and in the subsequent year 10 lakh, because the 10 lakh is the final capacity. So refinery production is not added in this year with the fifth stream. As far as Pottangi is concerned, Pottangi bauxite mines we have to start, and our target is to start by May or June of 26. The main requirement of Pottangi is for supplying bauxite for the fifth stream. The fifth stream will be coming maybe May, June, maybe March next year. And similarly, in the same time, we'll be starting Pottangi.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Do you really know the company you invest in?
What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Well, another business in focus is Viatech Vabag, and that stock is on a roll on the back of earnings, 8% higher. Before we get the management and the CFO of the company, Mr. Sitharaman, on the show, let's get in my colleague Anushi, who joins me with the key highlights and what's powering this move. Anushi.
Hey, morning Neeraj. So I'll start off with the key takeaways of the result that we are looking at. Firstly, strong set of numbers in terms of where the revenue is concerned. We are looking at a 24% of a growth, while margins have more or less remained flat in the range of 12.2% as compared to 12.4%. If you talk about the FY25 as a whole, the revenue growth which was there was in line with the FY25 guidance given by the company. So that's a positive. It was about that's what we are looking at. 15 to 20% was the growth given for the year. So we've seen about a 15% growth for FY25. Order backlog stood at about 13,667 crore. Here the order backlog is about 2.4 times its FY25 revenue. Now, what the medium-term outlook for the business is that it expects the revenue growth to be in the range of 15 to 20%, while margins will move upwards to the range of 13 to 15%. It expects the order book to be 3 times of revenue, so that's the kind of book-to-bill ratio that we are looking at. And O&M, that's operation maintenance, is to be 20% of the total revenues going forward for the business. So that's the overall picture that we are seeing. Even in terms of geography breakup, 62% comes from India, while 38% is rest of world. This is according to the order books that we are looking at. So commentary on further international business along with industrial business is something that we should be watching out for.
Okay. Thanks, Anushi. Mr. Skanda Prasad Sitharaman, the CFO of the company, with us on the show. Mr. Sitharaman, good having you. Thanks so much for taking the time out and being with us. If I try and slice and dice your quarterly performance, there are a few positives that come out this time around. More notably for me was the operating cash flow to EBITDA performance at the end of quarter 4. And I'll get to that in a moment. Could you describe whether this performance on operational metrics and the bottom line and the revenue growth is something that you had penciled for, or is there some spillover that has happened into quarter 1 and quarter 2?
Okay. Good morning to you, Neeraj, and good morning to all your viewers. Thank you for the opportunity. I think to start with, it's been a historic high year for us. Best ever top line annually and for the quarter 4. Best ever margins, best ever PAT, and best ever cash. We are sitting on, as you rightly said, a very strong set of operating cash flow is what we have been able to deliver, over 350 crores. And if you take it as a cash generation to PAT, it's about 1.2x of PAT is what we have generated as cash for the year. And we closed the year with a gross cash of 1,000 crores almost, and about 700 crores of net cash if you don't consider the HAM, which is only a transitory nature. So it's been a very strong set of numbers, something which we guided for and which we work in that direction for. Margins, top line, mix, whether it is India, overseas, municipal, industrial, EPC, O&M, all of these have been in the direction and in the lines of what we envisage and what we guided.
Okay, so I would presume that for most companies which are engaged in contracts with state governments or central governments, or mainly state governments as well, receivables are a problem. We're seeing that in the infra names for sure. How is it that your operating cash flow to EBITDA numbers have increased the way they have?
See, when we say municipal, it is really not us dealing with the state governments. We deal with projects which are backed by multilaterals or federal government guarantee or a sovereign backing. So we never depend on the state's exchequer for our payments. So that way we've been able to improve our quality of the order backlog significantly. And this is also reflecting very well in the receivables. If you see, we work on a net working capital days of somewhere around 109, 110 days, which is in the range that we also have been telling that with growth, this is the kind of range that you should expect, and we're very strong there. And the operating cash is a reflection of how we have been able to manage the quality of book as well as collection efficiency, and of course, the pace of execution and billing.
Okay, I'm tempted to ask this to you because it's such a good number, right? 79% in FY25, 36% in FY24. It's a big jump. I'm kind of stuck with that. My question to you is this something that you can replicate now or improve upon going ahead? The operating cash flow to EBITDA?
I think we will obviously hope to keep the same pace as we go forward. Okay. There's nothing to indicate that we cannot be a continually operating cash flow generating company. You've already seen we have closed 5 consecutive years on a net cash position. This year with 700 crores, operating cash is 350 crores. If I'm not wrong, my free cash is also about 300, 350 crores. So it's a very strong performance. As we said last year, after all the changes in strategy, due to the strategy that we did, the last year was a base. And now with the medium-term outlook, we are looking at moving forward to a 50-20% CAGR, a 13-15% to 15% EBITDA, remaining net cash positive and delivering 15% and over ROE. So all of these will clearly indicate to you that we will continually envisage and work towards remaining net cash positive and cash flow generated.
This margin uptick, it happens as a result of more international projects, or is or a different kind of a change to the product mix?
I think broadly we will attribute it to 2 or 3 reasons. One is, of course, the higher international mix that we have been moving towards. The EP strategy that we took, where we defocused from construction, and a higher focus towards industrial. The EBITDA kicker which will come out of O&M, you will see as the order book pans out. So that is still to come, and that is where we guided this 13 to 15%, and all of these will be stepping blocks. From a product perspective, already we are very well invested on desalination, reuse, wastewater treatment, and industrial treatment, and that will continue to remain our focus and occupy a majority of our order book as well as execution.
Got it. This focus on industrials to increase it to what, if I'm not wrong, 30%, right? I mean, why is that the case?
See, industrial, the projects are more, the appreciation for technology is better. They are shorter in terms of duration. They give you an opportunity to go for more EP versus EPC projects. So all these are significantly better drivers. And of course, you know, we deal with very, very highly rated companies across the world. Majority of our order book is for the oil and gas, where money is never a factor, execution is the factor, and we have a very strong execution attitude. And that is where there will be incremental margins. We'll be able to invest in technology, and also the cash flows are much, much better.
One final question, Mr. Sitaraman, and that is around order bookings, right? You want a higher share of book to bill. The order backlog looks okay right now. What is in store for FY26? Any large order wins in the annual, or would you do shorter duration, small ticket sized orders as a preference?
No, I think our smallest, I would say our averages have gone up, and we don't now generally take small ticket size. We are a big player. We are amongst the top 3 companies in the water sector globally. So our ticket sizes are significantly going up. You saw even in this year, we took an order which was almost $370 million along with our consortium partner. We have already given a preferred bidder status for about 3,000 crores of orders, which in the next couple of months will fructify. These are again a mix of medium size and large size ticket orders, and all the orders that we are looking at today. And our focus area is mainly Middle East and Africa, where the ticket sizes are much bigger than India. So our ticket sizes will go up as we move forward. We will look for larger, more technically complex and marquee projects with marquee customers.
Well, we'll leave it at that, Mr. Sitaraman. Thank you so much for taking the time out and being with us. Really appreciate your time. All the best for the quarters ahead. Time for a very quick break. On the other side, more focus on Interglobe and IndusInd Bank. Stay tuned.
That's huge. That is a biggie. It's on.
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit Research, shines a light on the biggest
You're watching India Market Open. So market breadth worsening at this point, and so are the losses on the Nifty. It's going to be a bit of a tough morning, and this is something that we told you about right when we started India Market Open. We talked about how the 30-year Treasury bond yield going up over 5% was bad news for emerging markets, and India would be hit. So you're seeing a bit of that play out, about 250 points down on the Nifty. I wouldn't say it's a massive drawdown, maybe an opportunity to come in select spaces. But look at the advanced decline ratio as well, and that'll give you a sense of the broader market and where the pain points really lie, because you will see portfolios getting hurt as well today. So it's not a very skewed negative breadth, but it is overall. What's hurting the most is IT stocks as expected. The Nifty IT about 1.5% down, and following cues from the Nasdaq more or less. But it's also about results, and Indigo is something that we need to talk about. We had a very interesting conversation with the management. They've posted a solid set of Q4 earnings, but there's some concerns on the horizon on the month of May and how Q1 will look like. Also on whether the best is behind Interglobe just for now. Nevertheless, my colleague Vishnu Shom had a conversation with Peter Elber, CEO at Indigo, to understand the impact of the Indo-Pak conflict on their operations. Take a look.
It's great to see Indigo prosper in the way that you are at this stage. Aviation in India is booming. We've spoken about that in the past. But there's been concern about what we've seen in the last, let's say, 1 month or so after the Pahalgam terror attacks. It is something which hit the aviation sector in terms of bookings and cancellations. Do you believe the situation is now stabilizing?
Well, good evening, and thank you for having me. We've seen actually a very, very strong year last year with a different performance over the different quarters, but overall a very, very strong performance last year, and especially last quarter. That performance had continued in the month of April, and the numbers for April were released yesterday by the DGCA. Obviously, the month of May has been impacted by the situation in the north of the country, and with the return now of the opening of all the stations, basically Indigo has reinstated all its flights. So taking a step back and looking to the overall demand and the market and the opportunities for the market, actually we have seen that the cancellations basically came to a halt and that people start to book again. And with that, we have an optimistic view on the return of travelers pretty soon, actually.
is there any rough estimate of how many cancellations of flights were taking place, let's say, for the month of May as a result of the tensions?
Yeah, let me put it in perspective. You know, if you see what happened, there were 32 airports closed. Indigo was operating out of 11 of these 32 airports. So we had 11 airports closed, and we had a total of 170 flights a day closed. Indigo operates a little short of 2,300 flights on a daily basis. So 170 out of 2,300 were cancelled, and that had a duration of 8 days. So if you take the entire month of May, the cancellations were at 8 days only, and on those 8 days there was 170 flights out of a total of 2,300. So that puts it into perspective, and you come to a very low single-digit number in terms of flight cancellations as percentage of the overall flights in the entire month.
Mr. Elbers, the other concern, of course, is that flights are now having to get much longer because Pakistani airspace is closed. This is for your international operations, flights to the Middle East, for example. And, given the volatility of the situation between India and Pakistan, and that's something that can continue into the future, how much of a concern is it? And a related question, at what stage will you pass on these costs to passengers? Because obviously it's going to be much more expensive to operate longer flights for you.
Yeah, what we have been doing, and also there, let me put it in perspective. After the Pakistani airspace closure, Indigo decided to suspend, or actually we had to suspend flights into Tashkent and Almaty because circumflying Pakistan airspace made these flights too long. So out of a total of 131 destinations, 41 international, we needed to suspend 2. Then for the remaining flights, and those flights indeed from the northern part of India into the Middle East, we had a total of 19 routes and a total of 35 flights being affected by longer flying times up to 20 to 30 minutes. So if you look at these numbers, again, putting it in perspective of the total situation, these are actually relatively limited numbers for Indigo. Of course, we would be better off if the airspace was not closed, and of course, we would be better off if we did not have to deal with that reality. But it's a reality we deal with. And what we are doing now, we're kind of reviewing our network, and we may reallocate some of that capacity more to the southern part. I think there the opportunity for India and Indigo really is, given the size of the country and the different hubs with their different geographical scopes, we have the opportunity to temporarily, if needed, reallocate some of that capacity to other places.
The A321XLR is an aircraft that Indigo is really banking on. But again, the entire issue of range, as I understand it, might come into play if airspace over Pakistan is closed. So, for example, if I was looking to fly from Delhi to a destination in Europe, which might well be the case with the aircraft you're acquiring non-stop, would that not be a problem for me if Pakistani airspace is closed?
Yeah. Well, firstly, we get the XLR towards the end of this calendar year. And, that's still far away from where we are today. And a lot can happen in terms of airspace between today and that point in time. So I say that's one. 2, and again here, we have the opportunity to put these planes in different parts of the country as well. And if we fly from Delhi to, for example, Denpasar on Bali, there's no Pakistan airspace on that route. So the opportunity of flying to different geographies, to fly to different parts of the world, to have different routes being operated, we have the opportunity to reallocate some of that aircraft, if needed, still by the time it's December or even early 26, we have the opportunity to fly them on other routes to avoid any of these challenges.
The other concern which has arisen post-Pahalgam is Turkey. You have, a tie-up with Turkish Airlines. You fly some of the most, in fact, the world's most intense 777 operations in terms of the number of seats which they have. And that is, Turkey and Istanbul is a gateway for your passengers to go to many other parts of the world. But there's a certain sentiment over here. We've seen what's happened to the company Celebi, and I know that there is pressure on Indigo as well. How are you dealing with it? And how do you respond to those who say that, look, Indigo needs to cut down its operations through Turkey?
Yeah. Well, there's I would say different layers in this discussion. The first layer is the operations between countries when it comes to air travel are being governed by what is called an air service agreement. And the air service agreement defines what is the number of flights and who to operate and so on and so forth. So that is the basic operating principle also for Indigo. Within that framework of the air service agreement, Indigo is operating fully compliant with the regulations, the frameworks, the opportunities and the restrictions, possibly which such provides. I think certainly that's important. We do have thousands of customers being booked on those flights, either from India to other parts of the world connecting over Istanbul, or from other parts of the world connecting over Istanbul back to India. And we want to continue to serve those customers. In the overall scheme of things, and you mentioned at the introduction, Indigo is having over 400 planes. These are 2 aircraft out of the 400, so that puts it a bit in perspective. What is the overall quantity? But our viewpoint is we operate within the guidance of whatever is in the air service agreement, compliant with the government regulations. If they change, we'll adjust accordingly to make sure that we're compliant. And for now, we continue to serve our customers.
So would you say, how would you respond to anybody who says or asks whether you are under pressure to curb services through Turkey?
I don't think Indigo is under pressure to cut services to Turkey. Again, if the government were to change its set of rules, of course we comply with that. But if any pressure, we feel the need to make sure that we fulfill the obligations we have to all the customers who put their trust in us, who made their booking with us, who have their travel plans with us. In the same way as we quickly reinstated all our flights to the northern part of India when they reopened. In the same way, we want to serve our customers which are booked on these flights.
Is there any possibility that Indigo would consider of a new hub, perhaps outside, if there are problems which continue with Turkey?
You know, of course, as an airline, we always look for, if circumstances change or if operational elements are changing, we'll adjust accordingly in the same way as we have adjusted our network after the Pakistan airspace closure. In the same way we adjusted our network due to other weather-related events. So we'll always make sure that we look for what fallback opportunities or what fallback positions are there. But until that becomes the case, we continue to operate in the way we operate today.
Now, Mr. Elbers, when we spoke about, I think, 2 or a little bit more years back, that was, I think, our first interview, I kept asking you and repeatedly, are you going to be going international? Are you going to be flying long-haul aircraft? And you gave me a neither here nor there answer. But then you're buying A350s now, and you're acquiring A350s, a fairly large number of those planes coming in. Prior to that, a couple of 787s as well. And of course, you are deploying 777s also. And so let me ask you that same question I asked you a couple of years ago. How do you see yourself competing as a brand known to be a low-cost carrier with, let us say, an Air India, which offers a full-cost service on long-haul routes?
Yeah. Well, let me start by saying I regret that my answer at that time was perceived as a neither here nor there answer when I said to you, Indigo will become a global aviation giant by 2030. But we're a listed company after all, so when we speak about buying aircraft, we do that according to the rules which apply to that, and we make it public at the time it is appropriate, and then we make it public to everyone. And obviously, what we have been doing since our first interview, and thank you for making that point in reference, I joined Indigo in the summer of 22, and the country was emerging from COVID, and it was clear that India was on a continued track towards becoming the third largest economy in the world. Part of that is having an airline or even airlines which are representing that size and opportunity and potential of the country. And against that backdrop, the ambition for Indigo to become a global aviation giant by 2030 was shaped and further formed. We have put two very significant steps on that. One was an additional order for 500 narrow bodies in 23, and the order for 350s, which we made in 24. And clearly, these two very important building blocks will help us to reach that goal. I think Indigo cannot be labeled as a classical low-cost airline. We operate on a low-cost basis, and that's needed in order to be competitive in the market. We want to maintain our cost leadership. But for the flights we operate now, the 787s, which we have on damp lease until the 350 arrives, actually the announcements today and the open for sale from Mumbai to Manchester and Mumbai to Amsterdam will have a service, including in the economy class with hot food for the duration of these longer flights, 8 to 9 hour flights. So Indigo has taken already many steps, including the domestic business class, a loyalty program, partnerships, which help us in our building blocks of that journey towards becoming a global aviation giant. I hope this is a bit more clear than the neither here nor there answer of 3 years ago.
All right. The Interglobe stock actually recovering while we're having that conversation, because remember, it's a solid set of numbers. Fundamentals don't change for the company. May have been patchy, but it'll be patchy across the sector, right? Because of regional tensions, etc. So that's one to watch out for. But focus now on the telecom sector. And we have an exclusive story right here on NDTV Profit this morning. Sources tell us that the Department of Telecom may re-look at its spectrum rules. In fact, Aishwarya joining us for more details.
Right, Tamanna. Last 2 days we've been talking about 6 gigahertz quite often, but the difference between the two, of course, before I give the details, I want to set the context, is that the earlier story that we have done on 6 gigahertz was related to be open to public or de-licensed for the public. And this story that we're following today is related to the commercial band or the high power, high frequency band that telecom companies use. So what we're learning from our sources is that the Department of Telecommunications is going to start charging telecom companies a tariff on these high frequency bands. Now, DUT is in talks with TRAI, who will be responsible to decide on a reserve price for these high frequency bands. Now, when I refer to high frequency bands, what do they mean? They range anywhere from 6 gigahertz all the way up to 21 gigahertz. So these are high frequency bands from tower to tower. These spectrum work for these telecom companies. Now, TRAI will also be setting the terms of assignment. What does term of assignment mean? Term of assignments essentially are the terms and conditions under which these radio frequency spectrums are granted to telecom companies. Now, how long will it take for them to decide the terms of assignment? About 2 to 3 months is what we're learning from our sources. TRAI will also be consulting the telcos such as Bharti Airtel, Jio, Vodafone Idea, to get their views on what they think of their consultation paper. And then probably their views will be incorporated in the terms as well, is what we're learning. Now, currently, as of today, telcos have been using these frequency bands for a very long time, but there was almost no or nominal charges that were being charged to these telcos. And they only paid the spectrum usage charges so far. Usually, spectrums are assigned for a price via auction on which spectrum usage charges are levied. So all in all, more likely to impact telcos on the overall costs of their operation that will increase. But this is only to do with their internal or their commercial purposes. It has nothing to do with the end consumer. So if we talk about the gigahertz in terms of gigahertz in specifics, 6 gigahertz, 7 gigahertz, 13 gigahertz, 15 gigahertz, and 21 gigahertz. So these are the basic ones that they've been using so far for their wireless communication, and they're called micro radio waves in their terms, in telecommunication jargon. So that's overall the highlight of this particular news piece, and we'll await and see what happens through the consultation paper and what views the telcos are putting through for this particular piece of DOT and TRAI's decision on charging them on the base price of these high frequency bands.
Thank you for that, Aishwarya. All right, one stock in focus this morning is IndusInd Bank. Poor numbers, corporate governance, fears galore, but you're seeing the stock up about 3%. Now, why is that happening? If you look back at what we've been reporting, and this is what we said on Her on the Street yesterday as well, large institutional investors are shoring up interest in IndusInd Bank. That's some of what you may see playing out. A lot of other factors as well. Harsh, brokerages today, and you reported it this morning, seem to have a variety of views on IndusInd Bank. And one of it was that maybe you'll see things improve from here on.
Well, yes. So what we've tried to do, of course, the stock has taken, it was anyway going to be an uncertain day with regard to how the stock would react. And that's exactly how it's in fact reacted, in such an uncertain manner. Now, in terms of what the management has said, in terms of what they believe that they are going to work on. One, they're going to make clear, timely disclosures is what they claim. It's not happened in the past, but that's what they're claiming, at least at the end of Q4. All the pain they say is upfronted now. It's been factored, it's been accounted for. FY26, what they're saying is going to be a fresh start for IndusInd. I'm not sure how much of that one ought to take, but this is what the management is saying. Healthy liquidity coverage ratio, this of course is a given, and capital adequacy ratio. These numbers unlikely to be incorrect in any fashion, given that there's immense amount of scrutiny. You're looking at CEO selection, which they said is on course. Names are going to be sent before the 30th of June is what they've guided for. X one-offs and the MFI stress, when you're looking at the overall numbers, they don't look as bad. But again, what you have to look for is, could things actually get worse? Could new issues actually come up? That's a risk.
No, 1 minute. Just on the overall numbers.
Yes.
You're saying they don't look as bad. Why are you saying that? Because I'm trying to understand, if you remove the derivatives trade issue, if you remove the MFI stress, and arguably there's still smaller pockets compared to the size of the bank. But on all of the core metrics, the bank seems to have slid.
Yes, you're absolutely right. When you're removing the one-offs, you're removing the MFI. It's what the overall numbers, as per what Macquarie is saying, that your operating profit annualized is at roughly 12,000 odd crore. So when you're looking at the annualized operating profit, even adjusted for these one-offs, you're looking at roughly 5 times operating profit is what the stock is trading at, which is at a substantial discount to some of the other players. Now, when I'm adding back some of these one-offs, which have been already recognized in Q4, the numbers may actually look better. That's the only point I'm trying to make, trying to take an analogy from what Macquarie is saying and trying to add both of those points up.
Okay, well, it depends on how you slice and dice it. But the fact is that the stock price is up. Does it mean that problems are over for the bank? Not at all. So tread with caution is all I would say. This could be a lot of factors that are not apparent right now. And of course, who will come in next? It also matters. A lot of names doing the round, so we won't indulge in speculation till we have a confirmation. But yes, that's going to be the next key driver. Who next takes charge of IndusInd Bank? All right, let's shift focus. Dheeraj Agarwal joining us this morning. He's MD, Ambit Investment Managers. Dheeraj, great to speak with you as always. Thank you for joining us this morning on NDTV Profit. Let's start by looking at big concerns for Indian markets. Do you think that what we're seeing in the US right now, bond yields spiking the way they have, and now uncertainty about US economy coming back in terms of how wide that deficit will be if their budget bill goes through, is that going to be a factor that's a headache for us for the next few weeks?
I think the bigger headache for us is our own earnings growth, right? So we tend to focus on global factors a lot more when the environment turns weak. But sometimes and very often the story actually lies within. Nifty earnings growth for March quarter looks like it's going to turn out at roughly 5%, 4% or 5%. It's been sliding every single quarter for the last 4 quarters. There is a hope and optimism that it will rebound into the next financial year. But that's a little bit of a hope. So I think we need to worry a little bit about why our earnings growth slow down, and do we have enough triggers for them to bounce back? The macro noise or the noise coming out of the US or the sound bites coming out of the US, whether it's bond yields, whether there is risks of US slowdown, etc., will obviously also matter. But I'm more focused on our own micro at this point.
No, just on that point, Dheeraj, you're not liking what you've seen in terms of corporate results, because some commentary saying that it's better than what was expected, even worse was expected.
I know we keep on lowering our expectations and hoping that the results will be better than expected, but it doesn't change the fact that the numbers are just 5%.
Yeah.
It doesn't change the fact that FY25 earnings growth is 5 or 6% or 6.5%, and markets are trading at 21 times P multiples. Does not justify. So in the near term, markets can rally a bit more on narrative. I mean, that's obviously possible because there are a few positive narratives to play, right? The potential conflict with our neighbor is over. There could be potential trade deal with the US. There'll be potential rate cuts in India and perhaps in the US as well. So there are, there are these macro sound bites, but eventually, if you take a 12-month call, earnings will have to play through. Otherwise, we have a problem.
Dheeraj, good morning. Neeraj here.
Hi, Neeraj.
Sorry, did I hear you say 5-6% for FY26 or that was FY25, right?
No, 5-6 is FY25. The current consensus estimate is, I think, 11 or 12 for 26.
Right.
But then the consensus estimate for FY25 in March was also 15%.
Yeah, that's true. That's true. but Dheeraj, could this time, I'm just thinking out loud, right? Trying to play the devil's advocate. Could this time be slightly different in that? And we want it to be, but in that, because we know that the first half has a base effect because the economy went through a tailspin because of elections and unseasonal monsoons in FY25. RBI is kind of on the route to cut. And even if globally yields are higher, in India, the inflation picture is looking pretty okay, right? So could a tailwind of 2 or 3 things maybe lead us to do better than 11% in FY26?
So I'll break this into 2 parts. I mean, as you rightly said, we will see some positive sound bites coming out in the next few months, right? So RBI will cut rates for sure, looking at our Indian inflation scenario down to below 4% now. US should also cut, so that should help RBI in their decision-making process. Some kind of a trade deal will get signed, which will be interpreted positively. UK FTA signed. All these will result in a hope and expectation of an earnings rebound at some point of time. And it's possible it might. I mean, it's very difficult to crystal gaze and say, will the earnings growth rebound in the second half of this year or not? But I'm always a little skeptical about the second half earnings rebound. I mean, not from now. It's been my experience since mid-90s, when in weak economic environment, we all used to write our strategy reports saying first half will be weak, second half earnings will rebound. So sure, I mean, it's a perennial hope of festival season in the second half earnings rebound. I'll just take that with a pinch of salt. So it's possible that in the near term, market tends to do well because of hope, expectations, and positive macro sound bites. But the real test will be by September quarter, what the earnings are doing. And at this point of time, all our channel checks are suggesting there is no pickup in demand. I mean, across the board.
Okay. That's not good news. So then, therefore, let's presume, Dheeraj, it's going to be a very, very bottom-up market. It usually is. This time around, even more so, right? And we've seen signs of that. The last 1 month, the broader markets may have been okay, in a bit of an uptick, but defense kind of scored dramatically due to idiosyncratic reasons. Some other pockets did well. Where is it that you personally feel that despite the larger sluggishness, these pockets are the ones which could show earnings growth? We'll discuss with valuations later.
Yeah, so in fact, I think I mentioned this on the last time we discussed. We had a conversation as well that I'm not really actually seeing a sectoral theme. So within every sector, you will find a few companies which will deliver above industry growth, and the stocks will tend to do well. Bulk of the companies will deliver in line or below industry growth, and the stocks may struggle. Obviously, building into the fact that the companies which are delivering above industry growth are not exorbitantly expensive. So even rules, as you rightly said, exorbitant valuation companies out for the time being. Because in a tougher environment, tougher environment for India still means 6% growth, right? So it's not 2% or 3%. It's not recession. A tough environment means 6%, 6.25%, 5.75%, which obviously means we are still growing, and hence a few companies will grow faster than the industry growth rate. So it'll be stock picking market, no clear sectoral trends. Every sector will see winners and losers. So there'll be high levels of dispersion in stock price performance within a sector through this year. That's what my expectation is.
How do you pick the bottom-up story, Dheeraj? It becomes very, very tricky, from everything you've described. And I concur with you 100% about this second half of the year boogie. I think we heard it all of the first 2 quarters last year. And then we're yet to see that emerge, and we're sitting and analyzing Q4. But how do you pick now? What are the filters that you would apply for that bottom-up strategy? Because, there is no real glimmer of hope from what you're saying in the corporate results either.
No, you have to go down. It's back to basics, right? So when the easy thematic investing stops working, you have to go down back to basics. So you have to look at market share, margins, top line growth, balance sheet quality, and the balance sheet parameters like ROE and ROC. It's back very, very basic research. So it's tough because winners will be harder to find in a tough environment. It's actually easier because it's back to basics. I mean, just one theme running away. I mean, there could be one or two pockets like defense, as Neeraj mentioned, is doing well. The valuations are a bit expensive, but it's a very, very strong theme at this point of time. But in general, you'll find the hardcore bottom-up basic research and basic analysis will work again. So analysts are back in job.
Okay, analysts are back in job. I don't think they ever left. I think we need to ask the analysts, the ones who said Vodafone is a great buy, IndusInd worst is over from the last 6-7 times. But all right, that's a discussion for another day. My question is that in themes as well, and I know I'm pressing back on this, do you think that the consumption story is yet to play out, or is that again a mirage that has been chased for the last several quarters?
See, at this point of time, consumption is weak, right? I mean, consumption stocks by and large have not done well. Yeah. And we have heard management commentaries about a rural rebound for 7 quarters now, 6 quarters, 7 quarters now. But I don't see any data supporting it. I mean, I don't see any pickup in soaps volumes or toothpaste volumes or two-wheeler volumes, etc., supporting rural recovery. So we can all be very optimistic about rural recovery. We can all be very optimistic about tax cuts will filter into increased consumer demand. But I'd like to see hard data. I mean, I'd like to see volume pickup actually panning out, which is not happening. So consumption has been weak. It's been a bit of a worry. And at this point of time, I'm not seeing any revival. I mean, if it happens 1 quarter, 2 quarters out, we'll wait and watch.
Dheeraj, the jury is out though on information technology, right? Suddenly, I mean, it's an interesting note from JP Morgan today, wherein they are saying that maybe the cancellations are not that high, maybe the business might actually return. And I think Macquarie, the earlier time, pointed out that IT service companies might actually do well versus product companies, because large corporations will require IT services to help them navigate through this whole AI jungle. Are valuations and growth in your favor when you're betting on IT right now? Or is there too much of uncertainty out there in that bucket?
See, within IT services also, okay, we see the industry as a whole. Industry as a whole now is a 7 to 10% growth, right? Sort of an industry. And it's been like that for a while and it hasn't changed. So it keeps on fluctuating a little bit above and below that average. But there are companies which are able to deliver 15 and 17. There are companies which are not even able to deliver 5 or 6. Overall environment is likely to stay tough. I mean, whichever way we cut it, all the global happenings or all the events in the US is bound to result in some economic slowdown. Now, whether it is bears say it'll be a deep recession, bulls say some economic slowdown. But I think there's nobody saying that economic growth can pick up in the US in the near term with all the events which is currently unfolding. Which is usually a tough situation for IT companies because discretionary budgets are amongst the first ones to get cut. Having said that, a few months ago, after the deep crash, the valuations had become very, very reasonable, but then all the stocks have rebounded from their 20-30%. So IT, like all other sectors at this point of time, will also be a space where you'll have to really, really pick and choose. At the current valuations with the current growth outlook, I don't think the whole sector will do well.
Unfortunately, because we can't talk stocks with you, I was kind of forced to ask you about whether the theme at large. But I get your broad point, Dheeraj Agarwal, and I think that's an important point. And remember, viewers, Dheeraj in the past has spoken to us about how product companies in India might actually do well. So bear that view in mind for sure. Dheeraj, great talking to you as always. Thanks much for taking the time out and speaking to us.
Thank you, Neeraj.
All right, that's the view from Ambit Investment Managers, Dheeraj Agarwal, MD of the firm. As we wrap up, I just want to mark how the markets are doing. Not bad, the small caps. Actually, a bit of a recovery for almost all indices from the lows. The Nifty IT is now 0.67% lower. So not dramatic. In fact, intraday, there is a bit of a recovery on Nifty IT. On small caps as well, like we showed the chart before, in the green, the small cap 250. So that's actually not a bad sign as well, and a clutch of names. I mean, I'm tempted to see what Interglobe Aviation is doing firstly, because that's one stock that dipped into the red on the basis of the outlook, and that's kind of meandering around. But the likes of VRL Logistics, VA-Tech, Vabag, some splendid numbers reported today, and some very strong reactions to some of those stocks. So I think those seem to be in fine fettle. What is not doing well, Tamanna, though, something that you mark, Colgate, down 5.5%. There is GMM Pfaudler, which is down about 7%. And Dixon continues to reel under a bit of pressure, 2.5% down in the session today.
I just want to mark out Tata Tele and the moves that you're seeing there. Source-based reports are talking about how Tata Sons will infuse capital into Tata Tele as AGR dues are piling up. So that stock completely firing today. I love what's happening with Garden Reach. We told you this morning about how Bangladesh has cancelled a $21 million deal with Garden Reach, and then news coming in a short while ago how the Indian Navy has shortlisted Garden Reach as one of its vendors for some of its orders. And that stock is, look at the intraday chart, is telling you exactly when that news came in. So that stock now about 4.5%. I mean, I don't know if it's tit for tat, but it's an interesting play on what has been happening regionally as well. So it's always nice when you can see those linkages. Garden Reach now about 4.5% up. NTPC Green Energy, watch out for that. Great numbers. And of course, Astral. You're going to hear from Astral right after this break. Really solid set of numbers. Talk about 3% up. But, we'll wait and ask them what has been the reason for that good performance. But for now, that's all the time we have. From Neeraj, me and the team that put the show together, thank you so much for watching, but stay tuned. Ask Profit up next.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
You're watching NDTV Profit. Thanks for tuning in. We are in conversation with the management of Astral. Savlani joins in to talk about the quarter, because I would call this as a quarter of recalibration, but with a strong quarter-on-quarter recovery. Simply because if you see last 2 or 3 quarters, PVC prices were largely unstable. This quarter, there is a bit of stability, more importantly, margins at the same level YOY, which to my mind is a positive. Mr. Savlani, how would you term this quarter? Because you've lived through now 2 or 3 quarters of fair degree of volatility.
Yeah, you are right. The industry was passing through a very tough challenges. You see on a yearly basis, the polymer price will drop by close to about 18%. So when there is a drop in the polymer price, our industry is the pass-through industry. The very same day we pass on this drop to the market. But if you see the number, in spite of so much of challenges, we are not able to maintain our volume growth, but also we are able to maintain our EBITDA margin. In this difficult time also, we have grown our GP also by 1%. So clearly you can see when the industry was degrowing by 5-6%, our company was able to grow 3-4%. So clearly we have gained the market share in this difficult time. Secondly, whenever the polymer prices are dropping, there is always the inventory losses. That in spite of absorbing that inventory losses, we were able to not only maintain our EBITDA margin, but improve our EBITDA margin on a year-on-year basis. So that was also the another good thing about the company. So all these things suggest that now the worst is behind us. Whatever the bottoming out was to take place in the polymer price is almost going to be done in this quarter. And from here on, some stability will be there and some improvement into the polymer prices will also be there. So most of the loss was because of the destocking by the dealer and distributor community. Normally dealers and distributors both put together sit with between 6 to 8 week inventory. Now they have come down to almost 2 to 3 weeks inventory. So that has given us the big dent, not only to us, but the entire industry. But it is one good thing about Astral is that we were able to maintain our margin, while other players in the industry, most of the players have lost almost 25 to 40% kind of EBITDA last year, while we were able to maintain our EBITDA.
And I'm going to ask this to you as to how, but before that, Mr. Savlani, yes, pipes volume growth. I mean, when I look at your revenue miss about versus what, let's say, brokerages were thinking of, they're saying that the same can be attributed to subdued pipes volume growth, which was about 1.3% versus estimates of about 3%. So did volumes degrow much more than what was anticipated?
See, Street may be expecting always the higher things from the Astral, but we have to also equally see the market conditions also. When the market conditions are not conducive to the industry, in that case, unnecessary dropping the price and pushing the volume doesn't make sense. The most of the other players you see, they have just dumped the inventory and they lost the margin. While Astral believe that dropping the price is very easy, but again, regaining the price in the industry is going to be a big challenge. So that's why we took a call that we don't want to unnecessarily dump the inventory at a lower price in the market. So we sacrifice maybe 1 or 2, but in spite of that, we have gained the market share. We have not lost the market share. So that's a positive thing about the Astral.
Okay, so two questions, Mr. Savlani. One is on the market share. I mean, is there a formalized market share gain that you talk about, and can you talk about that, part one? Part two, this whole piece around inventory losses that would have been there, obviously, could you give some clarity around what is the nature of these inventory losses? Do they continue into quarter one as well as you reported in the month of July?
So like till the polymer prices will continue to be a dropping side, then definitely inventory losses will be there. But the best part on Astral side is that we compensated that losses with the change in the proportion toward this value-added product. So we focused during last year maximum on the value-added products. So that has given us the good support, and because of that, we were able to absorb not only the losses, but we were able to maintain our margin. So that was the positive side for Astral. And going forward, I think Q1, again, the polymer price had dropped. Only yesterday, some uptick has taken place, 2.5% price rise was there from Reliance. So now upward journey has just started. We have to see whether it is going to be a sustainable kind of thing or whether it will take some more time to sustain. But yes, definitely 6.5 rupee drop was there in Q1. Again, that 1.5 rupees rise is there. So still losses are there in Q1. But we are of the view that Q1 will be the last quarter. Afterward, at least a downward trend will not be there. May take some time for the upward trend, but at least this quarter we will be seeing the bottoming out.
You got it. You got some approvals too, which I will talk about at the end. But just one quick follow-up, Mr. Savlani. You've seen multiple cycles, right? One is, of course, pricing, which is not in your control. What about volumes? When do you see the change in volumes happening? Could it happen in the first half of the current calendar? Because last year, the first half, the economy went through a substantial pullback because of elections, monsoons, etc. Can there be a base effect positive as well on volume growth in the first half of FY26?
So if you see the last year Q1, we were almost up by 15-16% in volume. So base was very high in the last year.
Okay.
Q2 onward, the problem started. And then the volume started dropping very sharply post the election. I think election result was somewhere in June. So from June onward, the dropping started. And there the polymer price also dropped in the month of June onward. So that has given the sizable dent to the volume. And the biggest drop in the volume mainly was because of the destocking from the dealer and distributor. Now, dealer and distributor will do only restocking when they see that the prices are going to go upward journey. So 2 or 3 price rise continuously will take place. Then dealer and distributor have no choice but to rush to do the restocking. And that can only be possible if the continuous price rise happen in the polymer. So 2 things are going on in the industry right now. One is the BIS standard. When this BIS standard will be implemented, there are high probability that a lot of unorganized player will suffer, and that volume will shift to the organized player. Secondly, the many PVC players from China, which is dumping the material in India, that will also stop sizably because they will not be qualifying for the BIS, so they will not be able to export the products to India. So that will lead to the polymer price rise. So that is going to help to the industry. Secondly, government industry players of PVC, they already initiated the anti-dumping duty. So that can also come in the near future. It is very difficult to quantify the timeline, but definitely this year we are expecting that is also going to be there. If that will also happen, then the low-cost polymer which is dumped in India by China, that will stop. And that also going to give the rise to the polymer price. So if any of the things will happen in the coming time, then the dealer and distributor will rush to the restocking, and that itself is going to give the good volume to the industry. And that is what we are expecting in the current year. And the natural volume growth of the 7-8% of the industry will be there. So then double-digit growth will not be a big challenge if any of the things will happen.
Hi, all right, welcome, and thanks so much for tuning in. You're watching Ask Profit. You were just listening to the management of Astral. Particularly good set of numbers, and the management confident about the way forward. The stock is trading higher by as much as 3%, and quite a few stocks reacting to earnings either on the upside or on the downside. Let me mention a couple to you. But before we get into those earnings reactions, in fact, let's talk about the benchmark. It's about 0.75% lower, but has recovered from the low point of the day. The broader markets are doing better than that, in fact, at this juncture. And you have the mid-cap index that's trading with cuts of about 0.2%, and you have the small-cap index that's just about flat at this point. I do want to talk about contributors on the Nifty 50 as well. Let's pull that up and talk about it. You have Reliance Industries. You have Reliance Industries as well as HDFC Bank, ICICI Bank that are leading the declines and contributing the most to those declines. You have Bharti Airtel, Tata Steel, IndusInd on the other side that are gaining ground. Let's talk about IndusInd Bank though, because this stock is something that is gaining in trade. There was an anticipation that it would see a little bit of pressure, but the interpretation perhaps by certain people is that the worst may be over. Of course, you would be well advised to have caution with regard to trading of IndusInd Bank, particularly if you are contemplating using leverage, because things can turn quite dramatically. A lot is still in the air as to what will happen with the top management and the investigation that has to happen with regard to IndusInd Bank. But in the meanwhile, let me get our experts on board. We've got Kush Bora of kushbora.com as well as Shahina Muqaddam, who is joining us this morning. Thanks so much for joining in. Let me take a very quick view on the benchmark, Kush, first with you. And what do you see as the key levels to watch today?
Hi, first of all, very good morning to all. I don't think that there's too much of a downside left. If you ask me, 24,500, 24,400 is a good strong support zone. Nifty's already broken one support zone of 24,700, but I think immediate support comes in at 24,400, 500 zone. Also, the 20-day moving average support comes in at that level. So I think all in all, this could be a good buying opportunity from a near-term perspective as well. The only thing being that the markets, even though they've recovered from the low point, they haven't really shown any kind of a meaningful rebound. So I'll be a little watchful on that front. Even Bank Nifty 54,400 does look like a support, which could act up. So all in all, a little constructive, and this dip from a near-term perspective also could well turn out to be a buying opportunity.
All right, let's talk about the questions that have come through already, and quite a few of you have written in. There's a number on the top of your screen where you can send us messages, and on the bottom of the screen you can see the landline number where you can call us. Let's take the first question today from Sunil, who's writing in from Visakhapatnam. Man Industries is the name of the counter that he wants to know about, and in fact this is a stock that's reacting to earnings. If I remember correctly, I may actually have that wrong, because there are quite a few earnings that have come through. In any case, he's bought at levels of 316,000 shares have been bought, and he's in the green. Shaina, very good morning to you. The question is, does he hold on based on the fundamentals?
Yeah, actually he does, because the numbers are out and the numbers are pretty good for the March quarter. And going forward also, I believe, while the raw material prices are remaining stable, I think the order book position is again improving. So it's a hold from here.
Hold on Man Industries. All right. Let's take the next question. Vishwanta Reddy is writing in from Madanapalle and asking about NBCC, border levels of 57. He's asking whether to sell or to hold at this juncture. He's in the green and well in the green. He's making more than double the money at this point, or just about double. What's the view on the charts, Kush?
Fairly positive, Alex. The rebound on this one has been, very encouraging. You've seen the crossover of the 20 and the 200-day moving average just a couple of sessions ago. The stock is sustaining or at least, maintaining the gains that it had made over the last, week or 10 days or so. All in all, I think there is a good chance that the stock could head further to about 120, and once that is taken out, a 132 kind of a level also. it's not overheated, so I wouldn't even suggest booking a partial profit, although I will suggest a trailing stop loss, and that comes at 104. So you should continue holding on to your position with a stop loss around the 104 mark, or in his case, trailing stop loss.
Trailing stop loss is advised on NBCC. We've got Dheeraj calling us from Hyderabad, the first caller of the day. Dheeraj, very good morning to you. And you're asking about arguably the stock of the day, one of the stocks of the day. What do you want to know about?
Sir, yesterday I bought these shares at 106.95, sir. So to 2,230 shares.
Yeah.
So today it touched the high of around 117 rupees.
Yes.
Could I hold it for some more time, or should I book my profits and shift to something like some other counter, or should I hold in this counter is my query, sir.
So you bought this yesterday, you say. What was the trigger for you?
Yesterday, they declared their results yesterday, sir. So
yes.
Seeing the result, as soon as I saw the result, I just bought the shares, sir.
Okay. But, okay, I need to check my data because I thought that the numbers came in post-market hours. Maybe I'm mistaken, because if you've seen the numbers and then bought, then that's a different matter. But the stock is up and about, 5.4% up or so. The question is for you, Shahina. I'm not... Wait, actually, let me confirm. Dheeraj, you have a short-term perspective on this?
Yes, sir. For the next 3 months.
Okay, so since it's a trading call, apologies, let me go to Kush on this. Kush, do you have enough data listed last year, right?
It did. From a very near-term perspective, I guess there is enough data to give a view. My suggestion would be to book partially about 50% and hold the rest with a trailing stop loss of 108, slightly above his buying price. The reason being that yes, the stock has indeed reacted positively, given a breakout, but it's a gap up, and typically you do see these gap ups fill in. Also the high that it made, near the 117.64 mark, that's not sustained and the stocks come down. So not a bad idea to book 50% right now and hold the rest with a stop loss around the 108 mark.
All right, Kanan has got the next question, and he's asking about Trident Limited. He's bought at levels of 37, and he's asking, at this juncture, is this a good idea to hold? He's incurring a loss at this point, specifically saying, is it wise to hold on to this, or should I consider this bounce to exit? If yes, is there any chance that it could come to his buy price so that his loss is minimized? Let's pull up the chart and see what it's done in the recent past, just so that we have context for the conversation. This is the intraday chart, but let's pull up the last month. There you go. So over the last week or so, it's gained about 14% or thereabouts. Kush, coming back to you, what is the possibility of it hitting 37 in the near term? Would you hold for that value, or would you exit at this point?
I'd give it a sufficiently high probability for him to hold on to this one, because the move has not been erratic. It has been with sufficient pauses, on the way up. Also, the recovery is rather meaningful. Weekly setup also very encouraging with high formations, in place. Volumes also picking up. 200-day moving average was crossed yesterday. Even though the stock is a little muted today, it's still sustaining above that, which is a healthy sign. So my suggestion, continue to hold. Now you should keep a stop loss near the 30.5 mark and hold on. This momentum, if the market sustain and the momentum, picks up, there's a good possibility that he could exit at 37, or at least fairly close to that price. So I think it's a hold, stop loss around the 30.5 mark.
All right, and not too far away from the current market price, but that's a view. Hold for now is a view on Trident Limited. Ajay is calling us from Ambala. Ajay, namaskar. क्या सवाल है आपका?
Yeah, good morning, sir. Good morning, ma'am. Sir, मेरा क्वेश्चन बजाज ऑटो पे है. सर मेरा पास 200 शेयर्स हैं 83.20 रुपीज पे. सर रिसेंटली अभी न्यूज आई है कि इन्होंने केटीएम पे 100% स्टेक लिया है. तो ये पॉजिटिव न्यूज है कि नेगेटिव न्यूज है फॉर दिस स्टॉक, सर? बेसिकली होल्ड करूं इसको इस पॉइंट ऑफ व्यू पे कि सेल कर सकते हैं अभी?
ओके, तो केटीएम न्यूज़ के हिसाब से आपको डिसाइड करना है कि आपको होल्ड करना है कि नहीं. मगर आपका लॉन्ग टर्म फंडामेंटल व्यू पॉजिटिव था, इसलिए आपने ले लिया? या
हाँ, यस सर. मैंने 3 दिन पहले ही लिया था सर. पॉजिटिव था इसलिए रख लिया. बट ये न्यूज आई है, अब ये रिसर्चिंग में मुझे इतनी नॉलेज नहीं है. दैट इज आते हैं कि सर ये ठीक रहेगा कि मुझे कि नहीं, कि या तो हीरो मोटोमेट ले लूँ उसको बेच के. दैट इज बेसिक.
अंडरस्टूड. ओके. All right. So it's a clear question, but the question mark, Shaina, on two-wheelers, and maybe you can answer this in Hindi. Basically, the volumes in the two-wheeler space in India are not anticipated to do particularly well. They have been a little soft, but then if rural turns around, then the question mark goes away, so to speak. One would assume that volumes pick up. So between Bajaj Auto, in which he's seeing gains, and Hero MotoCorp, which would you prefer?
बजाज ऑटो ही प्रेफरेंस रहेगा अभी अभी आप होल्ड कीजिए एक तो उनका बोनस इशू अभी एक्स डेट अभी उनको अनाउंस करना है काफी अच्छा बोनस इशू है 4:1 तो उसमें टैक्स प्लानिंग के लिए भी आपको मदद हो सकती है अगर आप और थोड़ा टाइम रुक जाए दूसरी बात है कि उनका जो एक्विजिशन है ये जो उनके जो वॉल्यूम्स और उनका जो मार्केट शेयर थोड़ा लॉस हो रहा था इन द स्मॉलर सीसी बाइक्स वो अभी थोड़ा ऑफकोर्स लॉन्ग टर्म है मतलब मीडियम टू लॉन्ग टर्म जब वो एक्चुअली उसको इंटीग्रेट करके टर्न अराउंड कर सकते हैं तो वहां पर उनको ये अच्छे भाव में मिला है तो एज ऑफ नाउ बजाज ऑटो आप होल्ड कीजिए रादर देन स्विचिंग टू हीरो
All right, so that's a view. Hopefully that answers your question. We've got the next question from Siddharth, who's writing in from Kolkata and asking about a stock that has been in focus this week because of a significant development, Protean eGov. It was in lower circuit on account of the update that it would not be getting a renewal of PAN 2.0, which was a significant contributor to its earnings. And having said that, he has bought at levels of 900, so he's still in the green. Should he exit or should he hold on from a long-term perspective? I do want to point out, by the way, Siddharth, and anybody else who's interested in Protean eGov, that we will be featuring the company and speaking to the management on the next show at 11:30, which is Know Your Company, and we'll be doing a deep dive as we normally do and giving you ratings about various parameters, including and not restricted to the valuation picture. But on the fundamentals, would you say, Shaina, that this is a hold or would you exit, considering that a large chunk of the revenue opportunity is being taken out?
I would exit as of now. One is because, that segment, PAN card segment, whatever you call it in terms of which part of it, the distribution part of it or the back-end part of it, etc. But it does contribute 50%, around 50%, I believe, of their revenues as of now. So incrementally, over a longer term period, this business would come down replaced by some new businesses. But what I believe is that for all this to happen, the valuations are pretty expensive currently. So I would say that it is better. It's a small cap stock, so there are better opportunities available. So I would say exit and switch.
Okay, all right. Parag Visaria is writing in from Mumbai and asking about a couple of stocks. Now, you don't need to speak about both, Kush. I would actually encourage you to speak about one of the two, but I'll list them out for you. Voltamp Transformers and DAM Capital. I'm guessing DAM Capital, you may not have a view in any case because it's a relatively new listing. From current levels for the next 6 to 9 months, what would you prefer?
So, incidentally, I'd say there is enough data for Voltamp for sure. From a near-term perspective, Dan, yes, but from a 6-month perspective, I'm afraid not. So, yes, I'd stick to Voltamp Transformers. A good move on this one. The stock has actually seen a fair degree of up moves. What's happening is the volume is not something that is putting me at great comfort. I mean, it did have a good move, volume-backed move from 7,200 odd levels, but now the volumes seem to be shrinking. Also, there is a mild negative RSI divergence popping up. So my suggestion would be, if you want to buy, wait for a mild dip close to the 80 to 50 mark. And as in when you get that, 8,000 will start acting as a stop loss on the way up. For targets of 8,600 and about 8,850, you could buy. So all in all, the medium-term structure is positive, but from a very near-term perspective, as I said, volumes missing, negative RSI divergence, suggesting that the stock could perhaps see a pullback. So 80 to 50, perhaps 8,300, those are the levels that you want to enter for a favorable risk-reward ratio.
All right, we've got an important story that is coming through, and this is an exclusive story. And this has to do with the weekly expiry of derivative contracts. Remember, this is something of a talking point over the last several weeks, and the regulator has gotten involved in order to finalize the proposal to fix all equity F&O expiries either on Tuesday or on Thursday. That's the update coming in. Charu is picking up information from her sources. Charu, what can you tell us about the latest here?
Hi, Alex. As we reported previously that the regulator is very keen on finalizing its proposal of keeping only 2 weekly expiry days, that is Tuesday and Thursday. Now we've come to know from some sources that India's leading stock exchange, NSE, has approached the regulator requesting it that Tuesday should be given to them as their expiry day. Now we should also consider the fact that already the oldest boards of the country, Bombay Stock Exchange, is using Tuesday as their expiry day, which explains why so much of noise is around this news currently. However, no decision from the regulator yet. The request has been submitted. It may or may not be considered, and it remains to be seen what other developments take place as the circular comes out.
Okay, all right. And quite the reaction in the stock as you are speaking as well, Charu. Stock has dropped quite precipitously from the high point of the day, which of course is declined, but it's down now about 4%. So watch out for that in trade. Just a simple explainer is that quite a bit of the volumes in the derivative space would shift from Thursday if the NSE was to shift to Tuesday, and the BSE already has its expiries on Tuesday. So that's increased competition in the space. You want to come in on this, Shahina, very quickly. If this does come through, it's negative for BSE. That's the simple assumption here.
See, I hold both BSE as well as NSE, so I wouldn't comment, but I'm just saying that BSE has its ex date for bonus tomorrow.
Okay, I understand that. All right. Do you have an opinion on this, Kush? Because you look at the space very closely on the derivative side.
Yeah, so if it's going to be just 1 day of expiry, then I think there could be some pressures coming in on BSE. But if NSE were to shift to Tuesday, what stops BSE from shifting to Thursday and maintaining at least some portion, or rather a great deal of portion of the volumes, rather than losing them to NSE. So I'm actually quite interested to see how this plays out, this tussle. But yeah, I mean, if the same day, 1 day expiry thing comes in, then BSE perhaps could go ahead and take a hit.
I think we just about have a technical issue with Kush's frame, and we'll get him back. But the point that he was making was fair. If there are 2 days of expiry that are proposed by the Securities and Exchange Board of India, either Tuesday or Thursday, and if the NSE is proposing to shift to Tuesday, what's stopping the BSE from shifting to Thursday as well? We've got our next caller, Sumant, who's calling us from Bihar. Very good morning, Sumant. What is your question for us today?
Hey, hi, good morning, sir. Finally, I connected with you. So I'm having 2 queries. I hope we will resolve my problem. I mean, problem actually, I can say.
Okay.
So I'm having SW Solar, right? And my buying price is 353. 350 shares I have at buying price 455.
Okay.
So I need your suggestion from your panel team. And second, I'm having Happiest Mind and Birla Soft. So just which one is the better stocks between 2?
Okay. Sumant, can you tell me what the second one is? Can you name the stocks again, please?
Second one, between Birla Soft and Happiest Mind.
Okay. And you've not shared the... See, the reason why we have one stock is it's easy for us to pull up the share price, pull up your acquisition price and all of that. So, Shahina, if you've heard this, he's acquired SW Solar at elevated levels. I think the numbers on the screen are incorrect. He was talking about 450 levels, if I'm not mistaken. Sumant, what was the buy price for SW Solar? Sumant? Sumant, if you can hear me, what was the buy price for SW Solar?
Yeah, I can hear you. Can you hear me?
Yeah, I can hear you. What was the buy price for SW Solar?
450.
450, okay.
450, yeah.
Got it. All right, so let me stick with that, and Sumant, you can connect with us perhaps tomorrow to ask the second question. But Shahina, I'll come to you on SW Solar, yeah? 450 rupees is the buy price, and he's lost value. So should he hold on at this point?
Yeah, actually, he must have bought it quite recently in the last couple of months, and the stock has corrected substantially from there. Having said that, and of course, that was because of poor numbers that we saw in the first 9 months. Having said that, I think the last quarter, fourth quarter numbers were pretty strong. So as of now, I would say that he can continue to hold. And besides, this sector is a bit lumpy, so he can continue to hold, but keep a stop loss close to about 270. And I heard a second question actually, where he's asking between two IT stocks. So Birlasoft would be my preference over Happiest Minds as of now. In terms of valuation, Birlasoft is looking a bit better than Happiest Minds, but both look good if you're holding it for the long term.
But you might want to consolidate your position in one, and if you are doing that, then you can follow the one that you said. Is that right?
Yeah.
Okay, cool.
Birlasoft.
All right, just a follow-up, very quick follow-up. SW Solar in the space of the renewable energy pocket, is this the best play or is there something else that you would recommend, China? I know you've said hold with the stop loss, but is there a better play?
Inox Wind looks, in my view, more interesting because, of course, valuations there also are not cheap, but I think the order book that they have on hand is quite substantial. So there also with a stop loss of maybe close to about 175, I would say a target of 200, 210 is more
Apologies, I have to cut you off, Shaina. Apologies for that. We are listening to SEBI Chief Tuhin Kanta Pandey speaking live. Let's listen into what he has to say.
And inclusion on an unprecedented scale. These developments, combined with strong macroeconomic fundamentals, policy stability, a resilient financial market ecosystem, are creating an enabling environment for sustained capital formation and productivity-led growth. While India's banking system continues to play a vital role in credit intermediation, it alone cannot meet the vast and long-term capital requirements of a rapidly growing economy. The scale of investment needed to fund infrastructure, clean energy, innovation, and industrial expansion demands diverse and sustainable sources of financing. Capital markets bridge this gap by offering a platform for equity and debt financing, enabling businesses to access patient capital without over-reliance on debt or collateral. How are the capital markets fueling India's development? Well, the Indian securities market is not merely a facilitator of financial transactions, but a powerful engine of capital formation. Our capital markets have become an essential channel through which domestic savings and foreign investments are directed into productive economic activity. This is helping fuel innovation, entrepreneurship, job creation, and infrastructure development. And the Indian capital market has seen remarkable growth over the past few years. At the cost of repetition, many previous speakers have spoken about a lot of statistics. I would also like to focus on some of them just to give you the size of the Indian security markets today and what role they can play. Over the past 10 years, around 93 lakh crore has been raised from the capital market through both equity and debt issuances, supporting growth across sectors. Our market has facilitated average equity issuance of around 2.2 lakh crore per annum over the past decade, supporting business expansion and innovation. FY25 marked a record year with 1.7 lakh crore raised through 320 IPOs, the highest number ever, underscoring the growing depth and vibrancy of our equity markets. Market capitalization of listed companies has risen from around 150 lakh crore at the end of FY19 to rupees 423 lakh crore as at the end of April 2025, reflecting strong investor confidence and robust corporate performance. Average daily trading volume have grown significantly from rupees 35,000 crore in FY19 to over 1 lakh crore now, indicating deeper liquidity and broader participation. And let's look at the investor participation itself. The number of unique investors in security market ecosystem has almost tripled since March 2019 to reach over 13 crore now. Of course, demat accounts are much larger, over 19 crores, but unique investors are over 13 crore, signaling the growing trust of retail investors in capital markets. However, there is still a huge potential to expand further. If you just compare the US market and Indian market, the level of retail participation in India is still much lower than US. And in many respects, we are, sort of following the dynamism of US markets. India's population is predominantly young, aspirational, and increasingly financially aware. This demographic dividend presents a unique opportunity to deepen and broaden our capital markets. As per industry estimates, around 1/3 of Gen Z investors are already participating in the securities market, an encouraging sign of growing financial engagement at an early age. This trend reflects not only the rising trust in formal financial systems, but also signals a significant opportunity for long-term wealth creation and inclusive participation in the nation's economic progress. Assets under management. The retail participation in securities market is further reinforced by the growth in mutual fund industry, with asset fund under management increasing from 24 lakh crore at the end of March 2019 to 70 lakh crore as of end of April 2025. Mutual fund SIP flows have been seen steady growth over the years, with annual contributions rising from less than 1 lakh crore in FY19 to 2.9 lakh crore in FY25. As a result, SIP AUM has expanded nearly fivefold, that is from 2.7 lakh crore in March 19 to 14 lakh crore as at end April 2025. Alternative investment funds are playing an increasingly important role in India's journey towards becoming a Viksit Bharat by channelizing long-term capital into high-impact areas such as startups, infrastructure, innovation, and emerging sectors. AIFs are helping to bridge critical funding gaps that traditional sources may not fully address. They support risk-taking, promote entrepreneurship, and enable the development of future-ready sectors, which are the key drivers of a developed economy. The significant growth in AIF investments from 1.1 lakh crore as of March 19 to 5.4 lakh crore as of March 2025, which is 5 times, reflects the growing relevance and potential to catalyze sustainable, inclusive economic growth in the decades ahead. Portfolio management services, PMS, which facilitate long-term investments, have seen their assets under management grow from 2.8 lakh crore in FY19 to 7.2 lakh crore in FY25. We are also witnessing the increasing importance of new investment vehicles such as REITs and InvITs. My previous speakers have also said it before, which are gaining traction and have the potential to significantly support infrastructure and real estate development. These instruments offer long-term investors access to stable income streams while providing infrastructure developers a means to recycle capital and fund new projects, thereby accelerating India's core sector growth. At present, we have 6 REITs and 26 InvITs registered with SEBI, signifying the potential to mobilize long-term capital. REITs and InvITs have mobilized 1.5 lakh crore over the last 5 years. Let me come to the foreign investments, FPIs. As regards foreign investment, the long-term trend of foreign portfolio investments in India remains strong. The equity assets under custody of FPI has increased from 21 lakh crore in FY15 to 69 lakh crore as at end April 25, representing around 17% ownership in Indian listed companies. Reinforcing sustained global confidence in India's growth story, India's share in the MSCI Emerging Market Index has risen significantly from less than 9% a decade back to 19.2% as at end of April 25, highlighting the country's growing weight in global portfolios.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to
Welcome back. You're watching Ask Profit. We interrupted regular programming to listen to what the SEBI chief Tuhin Kanta Pandey had to say, and he was enumerating the progress that has been made in the capital markets in the recent past. Let's go back to the questions that we've gotten on our various social media platforms, and we've got the next one from Mr. Ekambaraya, who's writing in from Hyderabad. He's asking about Varun Beverages, a stock that he's bought at levels of 625. He's holding a number of shares, 150 or thereabouts, and he's wondering what the long-term view is. Should he book losses and buy something like a United Beverages? So essentially, he wants to stay with the beverage space. Shahina, what's the view here? Quite a few of these Alco-Bev companies have come out with a decent set of numbers. Volumes have been reasonably good, and I think margins have improved as well.
Yeah, so I would prefer that he sticks with United Beverages. There, I think the UK, the tariff policy between India and UK will be beneficial to United Beverages because, they import a lot of their beers from there, and that also the duty coming down will be a positive for them to push their sales. Now with the stronger promoter coming in, I think the, potential for UBL is much better. So I would stick with UBL. Varun Beverages for the longer term, if you're really a long-term investor, yes, but I would prefer buying it at lower levels because the valuations are extremely expensive. So I would say if you're buying it right now, I would prefer UBL. Varun Beverages, you could look at it at declines.
Okay, all right. So UBL is preferred over Varun Beverages at this juncture. GSR Sai is writing in from Hyderabad asking about a few frontline companies. I'm going to take the opportunity to ask a couple of these, right? Because they are something that a lot of people look at very closely. Reliance Industries bought at levels of 1,218, 975 shares owned, and HDFC Bank 408 shares bought at levels of 1,528. Both stocks have gained from the low point over the course of the last several months and are doing reasonably well. He's looking for a long-term view. Can he add more of these? And is it a good idea to, or rather he's looking at stocks with at least 80% domestic focus. Okay, that's very specific. And there are quite a few in that list. So Unfortunately, it's going to be tough to give you a view on that. But China, on the fundamentals, if you were to look at HDFC Bank and Reliance Industries, would you say the valuation picture for both of these are still compelling? And would you pick, or maybe let me draft this question in this way: which stock or couple of stocks would you pick from the whole list that is primarily domestic focused?
The two stocks that he's picked up, I think, definitely are the leaders in their space, both banking as well as I think Reliance. I would look at more of it from the geo angle. I think that an eventual listing over the next 1 to 2 years will give you that opportunity for a value unlock. So I would think that he can continue to hold both. Both are looking good at current levels to hold for the long term. He can, of course, and especially in this volatile markets, I think these are the stocks to hold. He can add other sectors also, but I think these two in their respective sectors are good.
Right, so that's a view on both Reliance Industries and HDFC Bank. Amit is calling us from Dubai. Very good morning, Amit. How can we help you today?
Hey, morning. Thanks for hearing me out. Question to your expert, Shahina, and everybody else. So I have this share called Aditya Birla. It's called ABRFL. Today is the record date. I've got 500 shares and I've probably bought it at $310. Let's see how this demerger thing holds and whether it will add some value. But right now I'm wondering what to do with this because it will get split, right? Or whatever. And, I really don't know whether this is the right thing to do. So I just want some advice. Do I hold for the long term? What do I do?
Okay, so Aditya Birla Fashion and Retail is the name of the counter that you're talking about. Got your question, Amit.
That's right.
Let me go to Shahina on this one. As he's pointed out, it is in focus on account of the corporate update today. Today is the record date. What would you say, or rather today is X date, right? So what would you say as the outline for the strategy going forward for ABFRL?
ABFRL, in my view, you can actually exit. In fact, you can consolidate in AB Capital. There, I believe the opportunity is much better because not only the NBFC is doing well, and it holds both NBFC, it is also consolidated the finance business into AB Capital. Also, you have their insurance, AMC is also doing well. So I think there, the valuation is also attractive. So you consolidate in AB Capital. I would say you exit from ABFRL.
All right, exit is a call. It's something that is it's a demerger, as you pointed out, Amit, and that's the reason why the share price has dropped. The spin-off is kicking in. So the advice is to exit. Hope that helps. We've got a question from Venkat, who's writing in from Andhra Pradesh and asking about Dixon Tech. This is a share that he's held. And an average price that he's acquired at 15,565 rupees. He bought this yesterday and he's asking if he can hold for a period of 6 months. The stock is under pressure today as well. It's down about 2.8%, and because of the quantity of shares that he's bought, he's incurring a loss of about 2 lakh rupees. I think he saw the drop yesterday and he attempted to buy the dip. It forms about 12% of his overall portfolio. He points that out. So he's not overly exposed to this one counter. Kush, on the charts though, since he's got a 6-month time frame, what's the strategy that you would employ?
Well, kudos to his courage first, at buying at the dip. I would have preferred to perhaps wait one more day. We're seeing that because the 15,100 to about 14,800 zone is a good support zone. Also, some of the key averages lie there. So perhaps this should act as a support for the stock. In any case, given the downward momentum, you are better off, continuing to hold on to this one, but place a stop loss slightly deeper. So 14,400 is where you place that stop loss. On the whole, I think the medium-term structure for the stock is fairly bullish. It could, well resume its uptrend. Also, maybe China can throw some light, but from what I heard, the numbers were good, but the stock did give you a sell-off. So 14,400 is the stop loss. Continue to hold. Once this selling subsides, the stock could go sideways and then recover. So from a 6-month time frame, I think the target on this one on the upside are 16,200 and 17,400. So I think you should continue to hold. Keep a slightly deepish stop loss, factoring for the volatility in the stock.
All right, Dixon Tech is the stock that we've just spoken about, of course, and it's a hold at this juncture. Remember that the valuations is the big question mark, whether or not it is a little too stretched at this point, and that's why post results yesterday, because there's a slight deceleration in the earnings growth that is being projected, and it's still growing very fast. The question is whether the valuations were justified. So it's seen quite a bit of a drop from the day before yesterday's price. Now, I did mention this at the start of the program, but I do want to reiterate, we've got Know Your Company, which starts at 11:13. The focus today is going to be on a company called Protean eGov. You probably heard about it because of the update that the company sent out just a short while back. It is in the headlines because it has lost out on the PAN 2.0 project, which forms a pretty large part of the revenues, or has formed in the past. The question is, are the fundamentals strong enough to withstand this shock, and what's in store for the company? All of that and more on Know Your Company, so do check that out. In the meanwhile, let's turn to another stock, and we've got a caller coming through, and Murli is calling us, I believe, from Bengaluru. Murli, hi, thanks so much for calling us. How can we help you?
Thank you very much, and thank you for taking up my query also. I bought. Hello.
Yes,
I could not hear you.
I'm right here.
Yeah.
I'm right here.
I bought 500 shares of Gulf Oil Lubricants at the rate of 1239.
Right.
The good dividend yield and very low PE company. But today I'm incurring losses. What shall I do? Is there a better option, or shall I hold? I'm willing to wait for more than a year. Okay, you're willing to wait for more than a year, and I've gotten that view. So, Shahina, let me ask you this. Gulf Oil Lubricants, so obviously in the lubricant space, it depends on aftermarket sales as well, and to a certain extent, the input costs, crude oil has a bearing. What is the view on the fundamentals? Should he hold on?
Well, he can hold on. Actually, the numbers were a bit disappointing, which just came out day before yesterday. So I think that is why he's seen some bit of a correction. I mean, fall from his buy price. So the numbers were a bit disappointing, but I would say that valuations are not too expensive, as well as the balance sheet is pretty strong. So he can hold it from here. He can keep a stop loss close to about 1060. It's a very short term stop loss, and he can hold it. If he can continue to hold for the medium to longer term, should look better because of valuations being decent.
Okay. Okay, it's a combo question, and people are being very, very smart with this, I must say. I generally try and take one stock per viewer, but Satyan has asked a combo question. He's asking, should he book profits in Eris Life Science at current market price and shift to something like a Dodla Dairies for a fresh long? What's the view here? A couple of stocks to look at, Kush. Would you go long on Dodla Dairy right now?
No, not really. The stocks actually had a good run, over the last month or so, but now it's starting to consolidate, and the 200-day moving average resistance is perhaps acting up on it. It's given up gains that it had in the last 3 to 4 sessions. So for me, this is actually now starting to go a little sideways. Just on the flip side, Eris Life Sciences is actually doing well. So I would actually continue to hold on to Eris Life Sciences, which I believe is his existing position. Now, there's a mild resistance around the 1520 mark, but given the kind of relative strength the stock is witnessing, it's up even in a market, like this. So I would actually continue to hold on to Eris Life Sciences. I would place a trailing stop loss near the 1490 mark and continue to hold on. A sustained break above 1520 and a closing above that will actually push the stock to 1550 and higher levels. So continue holding on to Eris Life Sciences. All right, so that's the view on Eris Life, and don't go long on Dodla is the view. Sandeep is calling us from Bengaluru. Hi Sandeep, how can we help you today?
Hi Alex, good morning to you and both the panelists. I bought some cash and planning to deploy in Punjab National Bank for a time period of around 6 months.
Okay.
My question is, what could be the best entry point for a better risk reward?
Okay, I'm curious, why are you picking Punjab National Bank?
A bit interested in the banking sector at the moment with the kind of what's going on with the policies. Yeah. I already got some money in SBI, so I'm trying to get into a kind of little smaller bank.
Got it. Relatively. All right. I got your question. So, Kush, on the charts for a 6-month time frame, public sector bank, Punjab National Bank, would you buy?
Well, I'd wait up just a little bit. The reason being that for something like a PNB, there is the 200-day moving average resistance plus a falling trend line resistance acting up at the 100-102 zone. In fact, for the last 4 sessions, that's the level that the stock has not been able to close above. What I would suggest is wait for some more time. This is a buying on a slightly higher level, but in that case, what will happen is that the supply pressure around this level will be taken out. So once the stock closes above 102, I suggest you're better off buying at that level, because after a good run, a lot of PSU names, especially Punjab National Bank, have actually started to consolidate. So a break above 102 will give you this clear run, and on the way up, it could well hit 107, 112 kind of levels also in the coming 6 months time frame, which is the time frame that you've mentioned. So hold up, let it close above 102. That's when you can enter, and in that case, keep a stop loss near the 97 mark. So mildly positive, but waiting for a strong closure above 102.
All right, so that's a comprehensive view on Punjab National Bank. Prashant is calling us from Kerala. Hi, Prashant, how can we help you today?
Yeah, I just want to know about a stock which I'm currently holding from the last couple of months. Its name is Usha Martin.
Right.
And I hold like around 6,000 shares, and I bought it at 342.
Okay.
So I just want to know what will be the future of the stock. I'm ready to hold it maybe for a short period, like, maybe 6 or 1 year time.
Okay, 6 months or 1 year. Kush, on the charts, a pretty straightforward question. Would you hold? Border levels of 342. Quick answer.
Not a very encouraging setup. I would suggest an exit. The stock has not been able to take out 340, the key resistance level.
Prashant, hopefully that answers your question. It's a sell call on Usha Martin. MTAR Tech is the name of the counter we're talking about next, and Gopika is writing in from Chennai. She's bought at levels of 2,444 and asking whether to hold for the long term. She's got 5 shares. On the fundamentals, Shaina, what's the view?
Yeah, it's a hold at current levels. It's a small cap stock in the defense space, so you can hold it.
Hold it is a view. All right, it is now time to go to the rapid fire segment, and this, both of you know what this is about. We throw as many questions at you over the course of the 2-minute time frame. Do answer as quickly as possible. Vatek Wabag in focus on account of earnings, and we've got Rajan Iyer, who's bought at levels of 1,508. He's looking to hold for the long term. Should he do so, Shaina?
Yes, he can continue to hold.
Okay, Adani Enterprises, coming back to you. We've got a viewer who's bought at the current market price, I think, at around 2,500, looking to hold for 5 years. Can it give 15% CAGR? Shaina?
I don't know about 15% CAGR, it's too aggressive, but at least as of now, for the shorter term, it looks like a hold.
It's a hold, all right. Rubel is asking about Ease My Trip. He's got 2,000 shares at an average price of 20. Would you hold or exit? Kush?
Exit.
Exit is a view. We've got, guys, you've got a whole essay type questions here. All right. Embassy Developers, the next counter. Baby John is asking about this. Bought at levels of 130 rupees, 950 shares. What are the fundamentals? Would you hold for the long term, Shaina?
I would say it is better to exit as of now, or switch.
Okay. Switch to what?
Maybe DLF.
Okay. Andhra Pradesh is Andhra Paper, apologies, is the name of the counter, and Venkataramanan is asking this question. Bought at a price of 95.9 rupees. Would you hold for 10 months, Kush?
No, I'd exit.
Triveni Turbine, bought at levels of 613.4. Rajshri wants to know, would you hold on to this right now, Kush?
Yes, keep a stop loss near the 540 mark.
Okay, CG Power, would you enter for a period of 1 to 3 years at this juncture? Aman wants to know. Shaina?
I would prefer buying it a little bit of dips, but yes, you can buy it.
Okay, we spoke about Dixon. Smithy wants to know, between Dixon, Canes and Amber, which would you buy for a period of 2 to 3 years? Shaina?
Canes. I would buy Canes between the 3.
Okay, and Kush, what level for Canes?
It's a good level to buy it at the current level.
Okay. That was a bonus question. All right, thanks so much to the both of you for joining in. Always a pleasure having you on this program, and I think we've addressed quite a few stocks. Thanks so much for joining in. It was an absolute pleasure bringing you this show. And if we didn't get your question answered, well, sorry. Hopefully the rest of the stocks that we discussed have benefited you. Do stay tuned. As I pointed out, KYC is up next, and this is NDTV Profit.
That's huge. That is a biggie. It's out of
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company. Well, today we're going to talk about a company which has been in focus and who we've been wanting to talk to for a while now. The stock is down 24% in the last 5 days, and here's why it's interesting. It was supposed to be one of the very few players in the running for the PAN 2.0, but it's not won that mandate. A company that does your KYC is something that we're going to do on KYC today. So let me start off by explaining what a Protean eGov Technologies does, and before that I want to try and quickly highlight what all I want to know from them. So the first one is, what's the impact of missing out on PAN 2.0? And this is not with regard to just the top line impact of 1440 crore estimated by some analysts. This is an impact of confidence. What does this do in terms of one of the very few players driving digital public infrastructure in the country and missing out on a mandate? What does that mean for it? And hence you are not seeing a recovery on the stock. So that's what I want to ask management. That's the first thing. The second key piece is what's the impact with regard to numbers. What's the impact on EBITDA? What's the impact on the business overall? And what's the impact on the existing business of not winning the PAN 2.0 mandate? So those are my questions. Then what's the reasonable growth expectation on the back of this? So we put this behind us now. What should one look for with regard to this company going forward? What's the reasonable expectation that one should keep? Now, the third one is, why have margins compressed sharply? And they have. We've seen the EBITDA number was well into the mid-teens to high teens just about 4 years ago. So why has there been this very sharp compression? What has changed in the industry dynamic? And fourth, what is the export stroke new business potential? And what's the competition, especially in the export market, looking like? You've seen competition even in the PAN 2.0, and now when you go and you export some of your services with regard to digital public infrastructure, what could the downside risk to that be? Essentially, these are the questions I'd want to have answers to when I speak with management or when I analyze this company in better light. So hopefully we'll be able to get those answers. Let me start off about the company. Now, in terms of Protean, it was incorporated in December of 1995. It's an IT-enabled solutions company. It creates digital public infrastructure. So this is, of course, largely relating to infrastructure on portals and platforms that you use when you interact with the government or you apply for certain either a pension or either your PAN card. So, and that's what they are involved in. They create that fundamental IT-enabled solution for digital public infrastructure. That's what the company essentially does. Now, it was previously known as NSDL E-Governance Infrastructure Limited. Thereafter, got listed separately and now is completely not associated or affiliated with that NSDL setup. In fact, they were substantial shareholders, no longer so. But what it actually does, and we'll try and break this down in better fashion, it's the largest issue of India's digital tax identity, which is the PAN. But even outside of that, it is also involved in the digital identity itself, not just digital tax identity. So PAN and TIN, which is the tax identification number, is what they issue. But outside of that as well, they do several things on the pension front, and I'll come to that. It also has developed innovative citizen-centric e-governance solutions and developed 21 nationally critical e-governance stacks. So more software, all of what you're looking at is more of software coupled with documentation and implementation on ground, the support that the government needs to implement some of the registrations that it allows. So all of those is what it encapsulates. Now let's look at the breakup of the revenue, and this will give us better perspective on exactly where the money is coming in from in terms of services. And we look at the FY24 numbers along with the FY25 numbers once we have them on the screen. When you're looking at the FY25 numbers, around half of the top line has come from tax services alone. So 420 crore out of the 840 crore number has come from tax services revenue. 840 is the cumulative number, 420 is what they've done in tax services, and you'll see that it's come off. When you're looking at pension services as well, pension services is at 280 crore of the 840 crore number. So around 30% comes from pension services, around 50% from PAN services. Identity services is the new vertical which contributes around 100 crore, which is roughly 12.5%. And then you have new businesses which contributes around 35 crore. That's how it stacks up. So you have tax services and pension services which contributes a bulk of the top line, which provides the stability to the top line. And then you have all these other services which they are venturing into. But the main category is tax and pension. And let's talk about exactly that. So this is how the revenue share stacks up. This is FY25. Let's look at FY24, and the data is not very different. You're looking at around an 84% mix between tax services and pension services, even in FY24. Let's look at again. Let's try and understand. That's the manner in which pension services revenue has gone up. So you're seeing a decent clip of growth there, but you're not seeing a substantial growth, as you can see in the numbers, just about 10% or so, even from pension services. But let's talk about PAN first. It issues fresh PAN cards, reissues, updates PAN cards, runs tax information network facility centers. All of those is what it does in terms of offering services. In fact, for the PAN, it's the leading in terms of market share of around 64% of all PAN cards issued. It has issued over almost 53 crore PAN cards and is the first digitally verifiable ID which has been generated through PAN, has been generated through Protean. In terms of again, PAN cards issued per year in India, it's around 7 to 8 crore. So the opportunity going forward also is substantial. You're looking at tax services revenue. If you look at the way in which the journey has been, of course, we've seen a dip in FY25, but outside of that, it's been a reasonable 10% kind of increase. When you're looking at PAN issuances as well, annual PAN issuances, they've been in the range of 6 to 8 crore. In FY25, you saw a spike, but outside of that, it's been around the 6 to 8 crore number. When you're looking at pension-related services, it acts as the central record-keeping agency. It's established IT infrastructure, handles administration, does customer service functions, and as the subscriber base increases, the business grows for a Protean. So the subscriber base keeps going up. We've seen that go up with regard to pension. It was up 40% last year, and it continues to grow at a healthy clip. Let's talk about social security and welfare. Within this basket, it is within the NPS and the Atal Pension Yojana, which is APY. It has a 97% market share in this particular, or providing this particular service. And it's the sole provider for foundational identity services as well. The Aadhaar eKYC, the Aadhaar authorization, the e-sign, and the online PAN verification. From all of these four, it earns around 100 crore in top line. So those are your other services and your new age services which are contributing to top line, even though top line has contracted in this segment. So that is the other piece that you'll want to look out for as to how growth sustains there. Now let's talk about all the factors and metrics we look for. We hope we've tried to break this down the best we can. Software plus digital public infrastructure enabling services. That's what this actually does in terms of the company. Let's look at now all the metrics we'll track. Income statement, balance sheet, cash flow, return ratios. We'll also look at shareholding patterns, street cred, street coverage, and we look at valuations. So all of those 8 we'll try to cover. Let's quickly get to it. Income statement. You look at the revenue CAGR, last 3 years, just 7%. EBIT has actually contracted when you're looking at it over the last 3 years. So you're seeing pressure with regard to EBIT and therefore pressure with regard to profit after tax. We will quiz management as to why this is coming down in terms of margins. But for the moment, the performance on a standalone basis, not looking good, and therefore we've given it a thumbs down. And this is a 3-year CAGR you're looking at. Even when you're looking at the last 1 year's performance, Q4 to Q4, because the numbers have come out, you're seeing some bit of margin dilution. You're seeing pressure on the top line as well, absolutely flat. Let's look at the balance sheet now. The balance sheet, though, in contrast, looks much better. You're seeing good positive net worth of nearly 1,000 crore. You're looking at a cash and bank balance of around 140 crore out of that 1,000 crore. So on a balance sheet of 1,000 crore, to have 140 to 150 crore of cash is quite good. And that's what they've done in the last 2 years. That's possibly a positive. There's no debt on the balance sheet, so no risk per se. So that too is a significant positive. Now let's look at cash flow. In terms of cash flow from operations, we've seen FY24 cash flows at around 100 crore, FY25 cash flows at around 200 crore. There's significant fluctuation in working capital. You want to understand whether working capital fluctuations are a concern or not. That's the other piece I have wanted to ask management. But otherwise, it's a fairly decent set in terms of cash flow. So we've kept it at a neutral. Let's look at return ratios now. You're seeing a steady decline with regard to return ratios. Mid-teens, 20%, again mid-teens. Now we are below the mid-teens, and FY25, you're seeing a further drag with regard to the numbers. And therefore, you might start to see a strong dilution with regard to return ratios, identical on the ROC and the ROE front. Let's look at shareholding now. So we've given this a neutral. You want to see the ROE, ROC pick up. Is there potential for it? Looks likely because it was higher in earlier periods. Can it pick up is the question. We've given this a neutral for the moment. Let's look at shareholding now. Again, no significant promoter, no significant shareholder. You're seeing how the public, which is the retail investor interest in this stock has gone up sharply. You've seen the number of shareholders go up. All of this doesn't point well. You have a decent amount of holding. Your FI is holding around 10% odd. Your DI is holding around 27%, but look at the fall with regard to the DI holding, public holding going up. Again, a possible concern. Now, let's talk about, therefore, a thumbs down on the shareholding pattern. Let's talk about street cred. It's not done too well either. I did say that the last 5 days, the stock is down 25%. Last 6 months, the stock is down 50%. So there's pressure across the board when you're looking at the stock price. Not looking good from a stock price or a shareholder perspective either. So there will be pressure on shareholders. The stock is down around 12 to 13% over the last 12 months. And therefore, we've given this a thumbs down as well. Let's look at valuations now. Mind you, let's first understand what this company does, because there are not too many companies within this space. But when you're looking at what this company does at its core, it's software and services to the government. Both of those ideally should either be in the IT bucket or it should be in the services and logistics bucket. Ideally, your price to earnings multiples should be compared to similar companies in similar sectors. So keep your eye out on that. The other piece is that the guidance says that they will do 10 to 12% growth, right? On a 10 to 12% growth guidance, on a 10 odd percent EBITDA margin, on a 5 odd percent EBIT margin, would you pay a 32 times is really the question. And it's a 1 year forward price to earnings multiple. The FY27 price to earnings multiple as well is around the 27-28 times number. Some bit to go in terms of execution. They are expecting, analysts are penciling in a very strong FY26 in terms of both top line growth as well as bottom line growth. That's why you're seeing that sharp contraction in multiples. One more thing I want to highlight. Protean has never been valued at a 32 times price to earnings. So if this were to happen, you might well see it at its lowest price to earnings ever. But circumstances and situations are also different versus the past. And therefore, we are giving this a neutral, keeping all of these factors in mind. It's a mixed bag. Last off, I want to take street coverage. Now, in terms of street coverage, very low street coverage, 4 buys, 1 hold, 1 sell, 21% upside. We've given this a thumbs up, just 6 analysts covering the counter. You'd want to be cautious, but at the same time, a 21% upside with 6 analysts not looking as bad with 1 sell call as well. Let's quickly stack up the KYC ratings on this one. And when we are stacking it up, we're seeing thumbs down with regard to the income statement, but balance sheet thumbs up, neutral on cash flow and return ratios. Shareholding pattern thumbs down, street cred thumbs down, valuation neutral, street coverage thumbs up. It gets a poor 3.5 on 8. But mind you, you'll want to look at each of the metrics individually and want to make an assessment as to what is happening. Let's shift focus to the management though. I spoke earlier to Suresh Sethi, who's the MD and CEO of Protean eGov Technologies. Here's what he had to say about the main piece of it, PAN 2.0, missing out on it. What does it mean? Listen in.
First of all, let me clarify the ambiguity which is out there. Protean 2.0 today is basically, it was an RFP, as we all know. It was an RFP to design, develop, integrate, and maintain the complete IT stack, which is today the IT system, the core IT system, which is today run by the IT department. And this is not something we run today. So if you look at the entire process of PAN application and issuance, we have today got a mandate which we received in 2003, where we basically collect the applicant data, which is for application for a PAN card, or we collect the data with regard to updation of a PAN card. This data is collected at both online and offline channels. When I say offline, we have a regulated network of almost 400,000 agents where you can get an assisted service. This data, once it's collected, we securely transmit it to ITD. ITD does the work of the allocation, which happens of the PAN card PAN number, and that is what happens on the IT systems. Once the PAN number is allotted, we then issue the PAN card and send it to the citizen. So we are seeing these are two different parts of the process. So the IT systems which are getting revamped is something we don't even run today. And that is where we want to make this difference between what PAN 2.0 really stands for. The second point being that PAN 2.0, as it is getting deployed, is also indicated in the tender document that it will be an 18-month timeline for deploying the revamped stack. So we clearly don't see an impact on a separate mandate we have from the ITD, which we received in 2003, to run the processing and issuance of the PAN cards. So that is completely separate from the scope of the PAN 2.0 RFP.
Point taken. So was the PAN 2.0 RFP going to add incrementally to your top line in any fashion? Because that's what it seems like many analysts have built into their numbers.
No, so as you know, Harsh, any RFP document till you receive the mandate is always a 0-1 situation.
Absolutely.
We definitely, considering our long relations with the IT department, our ability, what we have done for the entire tax modernization as a company, we have the necessary capability and the competence to do this. And we've demonstrated that even recently in a couple of other mandates where we are, for example, working on the CERSAI KYC 2.0 stack. So that capability exists. We definitely were looking at this as another business opportunity where we can contribute to the tax-related digital public infrastructure of the country. And this RFP would naturally have been, this win would have been another incremental source of revenue. But the existing business stands strong as is. And as you know, we have diversified into multiple areas, which are core businesses, whether it's in the terms of identity, it's in terms of pension business, and the new business lines where we are looking at building on top of the identity stack with products. We are looking at other work in open digital ecosystems in the space of agri and others. So it's just an additional business.
I fully agree, and I hate to interrupt. I will come to the other lines of business because sure, that's how we've kind of framed this up. I want to first focus on, and with regard to therefore your current top line. What you are saying is that your current top line of around 840 crore FY25, that the growth there will continue. That will not get impacted by losing out on this RFP for PAN 2.0.
Yes, the answer is yes.
Got it. And how much incremental top line would a PAN 2.0 type RFP add? Around 1400 odd crore is the number which is being floated. Is that your thought as well? And what's the margin miss on that count? What's the kind of margin number that one would make on that kind of a top line for such kind of an RFP?
So see, most of these RFPs are generally multi-year RFPs. So there is a part where you build and develop the tech, and you get around, depending on each RFP, you get around 40 to 50% of the whatever is the tender amount that gets paid out, and then it runs like an AMC over a number of years. And some of the RFPs go as long as 7 years, which is the case over here. So then you get AMC-based revenues coming every year onwards. So that is the sort of numbers which we are looking at around this RFP. And clearly, the other part is that the RFP margins, naturally, every organization would bid and keep a margin over there. I would not like to share that margin data on the call, because naturally it is competitive to each company. But clearly there's a margin which is built when you are bidding for these projects to keep them sustainable and be able to deliver against them.
Point taken. Point taken. So probably 50% upfront and then 50% would be a spread over maybe 2-3 years. Is that the right way to look at this?
5 years. Around 5 years.
Around 5 years. Okay. Point taken. And the 1,400 odd crore RFP would be the cumulative amount over 5 years which would accrue to you. That's how one should look at it, I guess.
That's the way most of the RFPs are structured. Absolutely.
Point taken, sir. Okay. So, point taken. Now, I want to talk about existing as well as new businesses which you ventured into and the potential of that. So, other than this piece, your PAN services to the government continue unabated. So, that top line will continue to grow based on the number of applications you receive. Please correct me if I'm wrong. So, that continues unabated. That is not disrupted at all, regardless of PAN 2.0 implementation or otherwise.
Yes, Harsh, in that case, as we've earlier stated, since we are now talking about the businesses, BAU businesses for us,
yes.
PAN, we've always indicated, it's not a saturation ID. Aadhaar we naturally apply for when the child is born. A PAN is generally applied when you are entering the workforce, or you're opening a bank account, or you are availing a government scheme. So the current penetration of PAN in the country is around 35 to 40%. So there is a huge headroom, new workforce entry every year, and so on and so forth. So if we look at the trends over the last few years, 6 to 7 crore PAN cards are issued annually. We are also happy to report, as part of these results also we've stated, over the last year we've gained significant market share. We've improved our market share by almost 5% over the course of last year. And we see this as a business which is given to us as part of our 2003 mandate. And we definitely see headroom in this business growing as we move forward.
Point taken. So, sir, what's the reasonable growth clip across business lines? If you can tell us, what is it that one can expect? Would a 10% growth be okay? Because what we're looking at over the last 2 years is some bit of sluggishness in the business. So, just trying to understand where that's going.
So, Harsh, we have 3 core businesses which I may put as, which have been having I would say, which are at least the most recent being the identity services we provide, which again we've been running for the last 7-8 years. Now, each of these businesses, let me go quickly. I spoke about PAN. In the pension space, we have the mandate as a central record keeping agency, a business where we support the Atal Pension Yojana and the NPS. And recently, we've also deployed the entire tech stack for UPS as the primary CRA, which was done in record time. So in the pension business, we have almost 97% market share in a 3-player market. And that, again, is a growing business. Last year, we posted, or this year, the growth has been, year on year, has been around 12%. ID, again, is very closely linked to the Digital India, growth or momentum. And there we provide services like e-sign, e-KYC, e-authentication as a service agency to UIDAI. And we also provide online PAN validation. So that's the entire identity stack, which has been showing healthy growth. In terms of numbers, at times we've seen, CAGR, which is more than, 30-40% in terms of growth. But yes, then there are the revenue numbers which we have seen also steadily growing around 10 to 12%. So the core businesses we see growing over 10 to 12%. Our bets in the new business lines, we've clearly called out that we are extending the identity services in a data stack manner, where we are looking at products like eSign Pro and Rise with Protean, which is a API marketplace. These businesses we launched, or products we launched, in the second or third quarter last year. So this is a year where we expect the momentum to pick up. Likewise, we've got now play in multiple open digital ecosystems. Our core earlier was pension and tax. Today we are operating in the space of agriculture, health, digital commerce through ONDC, mobility. So there are multiple open digital ecosystems in which the company is contributing. We've received the extended mandate of supporting the central agri stack. Similarly, we won other RFPs, as I mentioned to you, which are critical because they are in the form of core DPIs. Again, we won the CERSAI CKYC 2.0 RFP, which is again the national identity stack of central KYC. We won the BARDS registry, and these are the other lines of business, both RFP and non-RFP, which we definitely expect to contribute to the bottom line, and therefore expect a healthy growth coming over the next few years.
All right, that's all the time we have on this edition of KYC. Thanks for watching. With that, stay tuned to NDTV Profit. More action on the other side.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
Hello and welcome at Markets at 12. I'm your host Anushi Vakharia. Let's take a look at how the markets are currently doing before we cover the main stories of the day. So as far as where the benchmark indices are holding up, we are looking at cuts of over 0.9% in trade today. In fact, even if you look at Sensex, kind of similar level of cuts that we are seeing, let's pull out something like Nifty Bank to see where the pressure is. Sensex 0.95% of a decline is what we are looking in today's session. If you are seeing what is happening with the Nifty Bank is one sector in focus today. Again, over almost all the market bet that we are seeing is leaning towards the red today. 0.8% of cut is what we are seeing. Let's pull out the point contribution table to see which are some of the biggest draggers in trade today. It's something like our Reliance Industry, HDFC Bank, the heavyweights under pressure today, along with something like ICICI Bank and ITC. ITC is set to come out with its fourth quarter results as well today, so that would continue to stay in focus. While on the other side, some specks of green from the likes of Bharti Airtel, Tata Steel and Jio Financial Services. So this is as far as where the benchmark indices are holding up. Let's also see how the broader markets are doing. In terms of the broader markets, is Nifty Mid Cap 150 down about 0.4%, Nifty Small Cap 250. We're almost flattish, doing relatively better than in the mid-cap and the benchmark indices as far as we speak. Let's see where majority of stock-specific news is. BSE 500, if you are pulling that up. AB Fashion, again, this is in news because of the record date of demerger today. GMM, Pfaudler, Maharashtra Seamless, other stocks in pressure, seeing cuts of over 4 to 7% each. Colgate, now they have reported a set of results which fell short of what the analysts' expectations were. In fact, they've also cited that there would be macro headwinds which are expected to continue forward as well. So Colgate under pressure on the basis of that. Intensified competition is also something that they are now seeing. On the other side, if you are seeing what's in the green, Prince Pipes seeing gains of around 10% for this healthcare. They came out with their numbers yesterday. Post the con call, we are looking at gains of 9%. Team Lease also about 7% of gains is what we are seeing. So this is overall the broader market side that we are looking at. In fact, let's see how the sectors are faring. And today it's kind of a mixed picture that we are looking at, if I'm not wrong, in terms of the sectoral. Okay, almost towards the red is what we are seeing. Only Nifty Defense bucking the trend. Nifty Media up over 1% and Nifty Metal with almost flattish gains, 0.2%, while on the other side it's Nifty FMCG with the highest cuts of over 1.3%, while Nifty Auto is seeing cuts of around 1.3%. But that's overall the market check that we are seeing currently. Maturity, even if you look at the advanced decline ratio, we are looking at almost more towards the declines today compared to the advances, but almost a 1:1 ratio that we are seeing in terms of the broader markets are. So that's the overall check in terms of where the markets are concerned. But on the sidelines, Asokam 16th Capital Market Conference, SEBI Chief Tuhin Kanta Pandey talked about the much awaited NSE IPO. He said that SEBI will be moving forward with the IPO soon. Listen into what he had to say.
NSE IPO, I think all I can say is that if all the outstanding issues will be resolved and we will move forward.
So by when? Is there any timeline on it?
Can't give you the timeline, but I think we should soon be doing it.
Okay, so that's the regards with NSE IPO and what would be the indication ahead for that. But a stock in focus is something like RVNL, which also reported its fourth quarter numbers. Now, what we are looking at in terms of the fourth quarter margins, they will remain stable at the likes of 6.7%, but it was fourth quarter revenue that fell short of expectation. We are seeing cuts of over 4%. Now, the expectation was for over 8,000 crore of a top line in fourth quarter, but they've clocked in about 6,500 of a top line, which also led to a miss in terms of where the FY25 guidance is. Order book, if we see, that stood at the range of 97,000 to 98,000 crore. The expectation for FY26 being that this would level upwards to the size of 1.25 lakh crore or so. But to discuss more on the strategy forward for RVNL and how was the year gone by, I earlier had a conversation with Pritunjay Pratap Singh, Director Operations of RVNL. So do listen into what he had to say. First off, I want to start off by your assessment of the fourth quarter. Want to understand that the broader expectation as per the last con call was of 8,000 crore of a top line. What has happened in the fourth quarter, if you can give us more details?
Thank you very much, IOC and NDTV Profit. As you said, our revenue guidance for the Q4 for the year is slightly less as compared to the revenue guidance. But as you can see, the revenue growth has accelerated in quarter 4 as compared to quarter 3. The growth in revenue is of the order of 40%. And in the terms of the PAT growth also, it is significant. It is around 48% growth in the PAT is there. Overall, for financial year, as compared to financial year 23-24, Q4 is slightly down by around 5%. But we hope to make up this gap in the coming financial year by our sustained execution and focus on execution during the current financial year. And for the current financial year, we are keeping revenue guidance of order of 22,000 to 22,000 crore, 20,000 to 22,000 crore.
Okay, Mr. Singh, just want to get your overall summary, if we can, of the year FY25. Now, for FY25, we did see that, there was a decline in revenue in terms of where FY24 was concerned on a year-on-year basis. So, if you can just summarize some of the issues, some of the reasons as to why we are looking at this degrowth in this year.
Yeah. Basically, you can see the Arvinel is in a transition phase now. Arvinel was traditionally only a railway-focused company, and we were getting the railway projects, what we call a legacy railway projects from Indian Railways. And till 2021-22, we were only executing the railway projects given by the Ministry of Railways. Now, from 2022 onwards, we have been diversifying in various sectors, and we have started doing the bidding in various sectors. So now it is a transition phase, and as you can see, during the year gone by 24-25, the turnover from railway sector is roughly down as compared to 23-24 by around 13%. Out of our total turnover of around 20,800 crore, 19,800 crore during this financial year, roughly 16,000 crore is from our traditional railway sectors, but from bidding, there is an encouraging trend. The revenue from our bidding projects has accelerated by 68%, and in the coming financial year, we hope to increase it further and hope to make this decline in the revenue from the traditional railway projects by compensating by projects won through bidding in various segments.
Mr. Singh, just a follow-up on that, a two-part question. Firstly, what is the key rationale that we are deviating from the traditional railway business to other projects? Is it because of higher competition or better margins? If you can emphasize more on that part. And secondly, what is the kind of mix that you aim to have in the next 1 to 2 years in terms of the traditional railways and the other projects which you have?
Yeah, thank you. I'll reply you the first question, because it is not so key we are diversifying from the railway projects due to margins not available in the railway projects, but the infrastructure segment as a whole is expanding not only domestically but also internationally, and there is a focus of Government of India on logistic cost reduction by way of creation of infrastructure in various segments, and energy. When country wants to accelerate its growth, energy is a huge requirement. So we are focusing only basically this kind of sectors. So other than our traditional railways, our core strength, but simultaneously being good in execution, and which was our core expertise. So we have diversified in metro projects, because metro was also one of our components in the railways. So we are executing metro in 7 cities. Then we have diversified into RDSS systems, that is a transmission line distribution system improvement in 3 states. Then we have strategically diversified in BharatNet projects. That is a natural corollary to our signaling and telecom sector, which we were doing in the railways by securing 2 major projects in UP East and West. Then there was a strategic diversification for manufacturing of the Vande Bharat train sets also, along with our Russian partners. And we also diversified in harbor construction in Maldives, and now our focus is energy related fields, that is battery storage system, solar systems, wind power infrastructure, hydro projects, and there is an exciting sector emerging, that is O&M of metro systems. And we are focusing on road projects also, because they are similar to the railway projects as far as, and they are simpler as compared to railway projects. Railway projects have much more complexities, and due to their inherent complexities, the execution time is longer in railway projects as compared to road projects. And internationally, a lot of opportunities are there, so we are exploring opportunities in railway sector in Peru, government to government contracting, then in Africa in field of transmission line, roads and port projects, and in Nepal in hydro sector, in Philippines in road sector, in Albania in Croatia in railway sector.
Right,
and,
Mr. Singh. Yeah.
Yeah.
So given that transition that the company is going through, can you just give us an outlook in terms of FY26? What is the kind of revenue growth that you project? Also, in terms of margins also, from the 6% that we've been seeing in the last few fiscals, what is the kind of scale up that we see in terms of where the margins are headed?
Yeah, in the current financial year, 25-26, we hope to secure a margin of revenue target of around between 20 to 22,000 crore, which we want to have an improvement of around 10 to 15% in our revenue growth as compared to last financial year. And our margin, we are also hope to improve our margin by faster execution, reducing indirect costs. You must have seen this year also we reduce our indirect cost significantly by reducing unnecessary fat and avoidable expenditures. So we hope to see improvement in our margins, which will be coming not only from domestic projects but also international projects where margins are more, and some of the projects which will have a long-term revenue visibility like RDSS systems or solar BESS systems. So they will have a long-term revenue potential for our winner.
So if you want to quantify that from 6%, can we see this moving upwards to the level of 8% or so in next 2 years, believe?
Yeah, sure. Means we cannot say in this year only it will move to 8 years, but we hope to see it moving from 5% to around 6.5% to 7% this year, and certainly in the next 2 years' time, we hope to take it to around 8%. And for infrastructure sector, 8% margins is pretty good margin.
Okay, thank you. That was informative. Now, coming to the order book, just want to get the current order book. What's the current order book standing at, and what is the total inflows that you had this year, and the growth that you expect to have in the next financial year in terms of where the order inflows are concerned?
Yeah. As you can see, the order book is a dynamic figure because you have some order inflows and there is a revenue coming out of this orders and execution is done. So order book, present order book stands around 97 to 98,000 crore of our revenue, from out of which around 47,000 crore is from our legacy railway projects, and rest are from various projects where RVNL has diversified. And during the last financial year, total order inflow was around 14,000 crore, and this year we hope to see a growth of around 20% in our order inflows. And as we are focusing on international projects, gradually we want to increase our revenue from international projects of the order of around 25% of the total revenue of our revenue.
Okay, so
right. 4 years.
So 14,000 crore were the inflows. This year you expect around 20% growth, which would be aided by international projects. Which are some of these key areas in which you're seeing higher projects coming from in the international space, if you can specify?
Yeah, international projects, as you see, they are coming in field of railway sector. Railway, we are focusing in Peru. As I said earlier, it is a government-to-government contracting in Peru, which is a large project. Then in Middle East also, a number of railway projects we are focusing along with the metro projects. Then railway projects in Albania and Croatia. Then transmission line, hydro and harbor projects in Africa, and then road projects in Philippines and Cambodia, then hydro projects in Nepal, road projects in Nepal. So they are some of our key focus area where we are keen to get the projects, and international projects are a better margin, so they will add up to our not only revenue growth from international projects but also contribute significantly in our margins.
And Mr. Singh, if I'm not wrong, the current mix for international is around 10%. You expect this to scale upwards to the level of 40%. Is that the correct figure?
Yeah, so it will not, this growth will not happen overnight, but certainly we want to take it to 40% in coming 3 to 4 years. And revenue also, we like to have around 20 to 25% from our international projects in next 3 years' time.
Okay. And my final question to you is about the execution. Now, are you facing any challenges in terms of where the execution is? Considering that, want to understand what's the project update on the Vande Bharat train sets also, if you can give us more light on that.
Execution, all projects, they have got some execution challenges, maybe in terms of manpower, availability of skilled manpower, where we are focusing, and we are training not our internal manpower, but we are also focusing on training the skilled manpower on our various project site. This is our focus of our CSR also, where we do skill development for our manpower. Then availability of machinery. Sometimes regulatory clearances also affect the projects, but gradually they are getting removed. And as far as Vande Bharat is concerned, after initial hiccups for some time, but it is now on a good trajectory. And now the designs, etc., is in advanced stage of finalization. And vendors for the critical component as the propulsion system, braking systems, bogies have been finalized, and we hope to see the first prototype rolling out by June 25 and second prototype in the next 3 months' time. And after getting the clearances from Indian Railways for this prototype, after extensive trials, we hope to see the regular production starting from December 26.
Okay. Is this included in your order book, which is there currently?
Vande Bharat?
Yeah.
Vande Bharat, our share is included in our order book because we are having a partnership with our Russian partner, TMH International. So whatever is our share of the total order, that is included.
Well, that was the management of RVNL. The key takeaways being better margin growth over the next 2 years. 8% is the scope that we are looking at. Revenue, if you are seeing projection of around 22 to 23,000 crore, and order book, while that stood at 97,000 to 98,000 crore, the expectation is for a 20% of an uptick in terms of where the order inflows are concerned. Currently, the stock down about 1.4%. It did miss its FY25 guidance, so FY26 would be an important year to watch out for in terms of how the growth guidance is for the business. But another stock in focus is Bajaj Auto. Now that has to become majority owner of KTM. This move comes in light to rebuild the brand by investing around 800 million euros in KTM. My colleague Tushar Deep joins for more details on this.
Bajaj Auto, via its overseas subsidiary based in Netherlands, has decided to take control of KTM AG, an Austrian bike maker in which it owns about 49.9% stake. KTM AG, remember, has filed for bankruptcy in Vienna. This transaction is actually a result of this particular bankruptcy process. So Bajaj Auto, via its Netherlands-based subsidiary, will now infuse 800 million euros, which was required for KTM to exit bankruptcy and start its manufacturing operations again. At this point of time, we also need to talk about the chronology of events that have happened in the case of KTM since late last year. In November, KTM filed for bankruptcy in Vienna, citing that it was unable to service debt that had accumulated about $3 billion by way of its acquisition of MV Agusta, as well as running its MotoGP team. Bajaj Auto stepped in February and infused 150 million euros in Bajaj Auto International Holdings. In May, it infused a further 125 million euros in the same subsidiary. In the intervening period, it infused about 200 million euros in 4 tranches of $50 million each into KTM. As well, on top of this, the company also secured 566 million euros from 3 banks to infuse into KTM so that it exits bankruptcy. Remember, KTM's has to pay creditors 548 million euros by tomorrow, May 23rd. So all of the financials are in place. What remains to be seen is what are the next steps that Bajaj will take in stepping up the KTM business. KTM has a very successful lineup in its Duke range of motorcycles as well as a strong pedigree as far as off-road motorcycles is concerned. This acquisition opens up Bajaj or the European market as well as the US market for Bajaj Auto, and in a way puts the limelight also on the likes of BMW, Triumph, as well as the Japanese bike makers like Suzuki, Yamaha and Honda, because now a big major player is now amongst them in the form of Bajaj Auto.
Well, that's the update that we are looking for Bajaj Auto. But another stock in focus, and this is in the FMCG space that we are seeing, is ITC, which will come up with its 4th quarter earnings today. Market expects the company to face margin pressure, but cigarette volume growth may continue. We have Mahima joining us with a comprehensive preview on this.
Right, so it's going to be a mixed quarter for ITC overall. FMCG is expected to do fairly well, but paper and agribusiness are not expected to do very well. Cigarette might see a volume uptick. In terms of overall revenue, might see an uptick of around 4%. EBITDA likely to fall around 2.3%. Margins also to slide a tad bit. And in terms of profit, it's expected to fall around 1.5%. Cigarette volume growth is likely on the cards because there has been no tax hikes even this particular budget. So that might see an uptick. But overall, the kind of inflation that tobacco leaf is seeing, that might put pressure on margins. So gross margin contraction on account of commodity inflation both in cigarettes as well as in the FMCG business might be seen. FMCG business likely to see a high single digit growth. In terms of the volume versus value growth, likely it will deliver a price led growth because price hikes have been taken in biscuits as well as snacks by ITC. In terms of agribusiness, it might see a double digit growth, but overall the street is expecting that the growth will not be as good as compared to how it was in the past few quarters. Paper business likely to see a low single digit growth, another quarter of pressure in terms of paper business. In terms of key things to watch out for, developments of recent acquisitions and commentary on the same, plus how much of a margin pressure will take place, and price hikes taken given the kind of inflationary environment that Q4 has seen. What will be the volume versus value growth? And lastly, in terms of demerger unlocking, value unlocking, how much of that has taken place and to what extent is something that will be one of the key things to watch out for. So this is the overall view as to what you can expect from ITC's Q4 earnings.
Okay, thank you for that, Mahima. The stock currently under pressure, seeing cuts of around 2% in trade today. But let's shift focus. Grow, India's leading stock broking platform, is gearing up for a $1 billion IPO. Early backers Tiger Global and Peak XV are set to sell partial stakes. This is via the offer for sale route. Let's bring in Agni on more on this.
So Grow is planning to go the confidential way with its initial public offering, and as of now we are being told that early investors including Tiger Global and Peak 15 are likely to sell their stake. Now none of it is set in concrete just yet. The offer details are likely to change, but we are also being told that the company's founders will take a pass on this one. They won't be selling any stake. Now who are the founders? We know that there are 4 founders of the company, including CEO Lalit Keshre, CFO Ishan Bansal, the CTO Neeraj Singh, and the CEO Harsh Jain. Now Grow was last valued in 2021 in a funding round where the valuation came up to around $3 billion. The company is currently in process of another pre-IPO funding round where GIC is said to be investing up to $150 million in the company. Now if this funding round goes through, the company will be valued at somewhere close to $8 billion on the upper end. Now remember, this is a developing story, nothing is finalized yet, so the details might change going forward, but as of now this is what we are bringing you, so stay tuned for more updates.
Well, thank you for that, Agni. But with that, it's a time to wrap this edition of Markets at 12. Stay tuned to NDTV Profit. More lined up on the other side.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
welcome. You're watching The Big Question. I'm Tamanna Inamdar. What started as a nearly 2,000 crore accounting discrepancy in IndusInd Bank's derivatives trading portfolio in March of this year has now snowballed into what the bank has itself termed as a case of a suspected fraud. The bank in its Q4 earnings call said that 172 crores of irregularity came to light in its microfinance business, with a fake fee income exposed across FY25. The suspected case of fraud has led India's fifth largest private lender to register its first quarterly loss in at least 2 decades to a whopping 2,300 crores. Just for perspective, what was penciled in as a loss for this quarter was about 300 crores. But the focus today is not about the IndusInd losses or its balance sheet. It's about the regulatory nature of this suspected fraud and perhaps the involvement of people working within the bank. It's about the system, the auditors, and the board of the bank. Do they hold no responsibility for a possible fraud that has taken place under their very noses? The other key question is about the top management who has recently quit, the CEO, the CFO. Is it enough to merely step down, or is it now time for central agencies to enter the investigation? This is how serious the matter is. Yesterday, the board pointed to an internal collusion between senior officials, former managerial personnel who overrode key internal controls, which may have led to the fraud. Not just that, the fraud has been concealed from the board and statutory auditors who claim they were kept in the dark. So the big question is, how did the IndusInd fraud go unnoticed for so long? Before we move to our conversation with top experts who understand the space inside out, let me go across to my colleague Vishwanath Nair, who's been tracking this story right from March. And Vishy, I think we can take credit today that we broke every bit of the story, and we didn't buy what the management and the promoters were saying at face value. We questioned it. Give us the timeline of how all of this has unfolded since March.
We didn't buy it, and I continue to not buy it. But let me take you through what the timeline of events is like. Now, all of this, of course, started on the 10th of March 2025. That is when the bank's top management, the CEO and the deputy CEO, both came on a conference call with analysts and said that they found discrepancies in the derivatives trading portfolio and that the financial hit because of these discrepancies was close to 2,000 crore. The bank also said during the call that they have appointed an external agency which will verify whatever they found through an internal check. Now, cut back to March 15th of 2025, if you can imagine, in these 5 days, obviously a lot of panic spread across the market, and depositors started pulling funds out of the bank. So the RBI had to come out with a statement saying that the depositors are safe. They don't need to be concerned so much about the issues that are happening at IndusInd Bank. The issues are currently being dealt with. Depositors can stay put. Then on the 20th of March, the board of IndusInd Bank said that they are constituting a fresh investigation. Remember that the management had already appointed an external agency to verify internal findings. This was a next step, appointing a fresh agency to look at the entire issue, find out the root cause, and also assign accountability in this entire matter. That was an important move by the board. Of course, it came significantly later than what was expected. Then a month later, on the 22nd of April, the bank discloses that we have found additional issues in the microfinance division, in the accounting. Specifically, their internal audit team was looking into these matters. EY was an agency that was helping this internal audit team. 5 days after that, the bank has had to come out with a notice saying that the external investigation that was constituted by the board is now complete, and that the financial impact of the derivatives issue was about 1,960 crore. Then the following day, essentially on the 28th of April, what happens is that the deputy CEO, Arun Khurana, announces his immediate resignation. He says that a lot of things happened under me. I was leading the Treasury Department, so I need to step down. A day after that, on the 29th of April, you had Sumant Katpale, the MD and CEO of the bank, step down, saying that under my watch, a lot of omissions and commissions have happened. I will take moral responsibility and step down. Till this point in time, everything goes swell. But then, on the 30th, again, so apologies for that, 30th of April, the bank says that a committee of executives is going to run the bank. That is an important sort of development. But yeah, on then May 9th, the bank comes out with a fresh disclosure. It is saying that we are investigating insider trading allegations against former management personnel. This was Sumant Katpalia and Arun Khurana, who had now quit. Then again, on the 15th of May, more disclosures come out saying that, remember the microfinance issue that we found out? Well, there's a 674 crore accounting gap that we found, incorrect interest income being booked at the bank, and that is a problem. Then again, in the other assets and other liabilities department of the bank found unsubstantiated balances of about 595 crore, which was also a problem. Both of these issues had been adjusted as of January. That's what the bank said. But of course, these are still issues that were continuing. All of this then brings us to last evening, which is when the bank came out and said, considering all these investigations, considering the reviews that have happened, we believe that there is reason to suspect a fraud has been committed against the bank, and that the people involved include senior officials at IndusInd Bank, as well as the former managerial personnel, which is Sumant Karpalia and Arun Khurana.
Okay, so you've laid it out beautifully, and which is the fraud bit we don't know yet. We know that something doesn't smell right here. The question is it enough to say that we're cleaning up our books, now we'll get a new guy in place and everything will be well? Nothing more to see here, please move on. That's really what we're asking. Dinesh Kumar Khara joining in. He's former State Bank of India chairman. Dipali Pant, former executive director at RBI. Hetal Dalal, president and COO at IIAS. It's an investor watchdog, and of course Abhizar Divanji, founder at Neostrat Advisors LLP. Welcome to all of you, and thank you so much for your time with us here on The Big Question. Mr. Khara, I'm going to come to you first. What do you make of this affair at IndusInd Bank?
Well, it is something which is a matter of concern, but of course it is a very clear reflection that the MD and CEO, who was a very integral part of the board, was expected to have enough controls in place, and such kind of things. First and foremost, these are the procedural issues. These procedural issues should have been tightened by the management itself, and of course that is the role and responsibility of the CFO, and of course the oversight is of the internal auditors and the external auditors. But what I gather that the auditors have said that they have not been shared the required information, but I think they could have probably gone beyond. And in fact, that is invariably the situation. Invariably, the auditors have a test check when it comes to their certifying the correctness of the books. So this is something which is expected of them. So now the board, having said that, they are in the process of identifying the gaps and will be strengthening the processes appropriately. This is something which is stated by the board. So I think, of course, the other piece is that this was reported, derivative issues were reported by the management themselves, and something which is a very clear reflection that they understand that what the implications could be, and they have reported. But nevertheless, the damage is something which you have seen, particularly for a bank of this size. The kind of course, they have got a fairly strong balance sheet, but nevertheless, they have got the losses which they have absorbed in this quarter. That itself is a reflection that there is a need for tightening the processes within the bank, and also to have a culture for compliance, which is very essential. Respect for compliance and a culture for compliance, which is essentially nothing but the tone from the top, which is something which is always, it actually defines the culture of the organization also. So to my mind, that is something which would be required.
You know, what comes to mind is that this is a sector which is so tightly regulated. I mean, it's a large private bank which has crores and crores of depositor money. Dipali Pant, I'm going to come to you on this question, ma'am. This is a sector that's so tightly regulated that it's mind-boggling to understand how this all went on. Because remember, the first we heard about it is some discrepancy in derivatives trading. And now it turns out there's much more, and we don't really know if this is the end of it.
Yeah, Tamanna, this is something really very grave, I should say. And you see, the Reserve Bank, the statement by the RBI governor stemmed a confidence run on the bank that everybody is aware of. And the RBI inspection report had also pointed out that there were considerable weaknesses in the internal systems of the bank, but the bank went on its merry way and those were not addressed. This also points to the fact that now it's very essential for us to adopt Ind AS for banks, because Ind AS has specific accounting norms which ensure that this kind of thing cannot happen, because a derivative transaction is either an asset or a liability in the balance sheet. Or if you're adopting hedge accounting, then you have to take it as on the date when you hedged it. And you cannot do hedge accounting as the IndusInd Bank was doing internally. You have to have an external agency for it. It is also very shocking that in the entire Treasury division, there was no concurrent, no external validation of the trades that were taking place. So there is a complete failure of governance, and I'm sorry to say, of the board as well. And I'm always reminded, Tamanna, of a Latin proverb I'm very fond of, which is qui custodiat ipso custodes. Now, who's going to guard the guards? If it is a leadership failure and a governance failure, to say that it's just an accounting failure is taking it just too lightly. That there was a disclosure of divergence in asset classification and provisioning as the bank would like us to have it is simply not enough. As of now, there is a very uneasy calm that prevails, but a reassessment of IndusInd's economic prospects show me very clearly the outlook for the bank is very negative in FY26 and 27. And just because they have enough capital adequacy or NPA provisioning doesn't answer the question of the governance failure.
No, so one is governance failure. So there's ineptitude and there's malintent. I think we need to start distinguishing what we're seeing here exactly. Abhizar Divanji, just on the question of the board and the auditors and their responsibility. Today the auditors say, I didn't have enough information. It's pretty much whatever's left of that same board who's going to find a new MD, isn't it? Does that sit right with you?
No, so when you talk about the relevant responsibilities, Tamanna, first of all, it is the management's responsibility, and I will link this responsibility to the trickling of disclosures that happened over time. So we had the management which was clearly responsible. It should have known all these issues any which way, even if it was a malified intent or a oversight or whatever else. So at the end of the day, I think the management was clearly responsible and should have known these issues. If the management says that it did not know of those issues, then that is, I think, a graver problem. So, and that is linked to, we had the CEO come on TV and say, oh, we have this issue and we are going to resolve it. And nothing beyond it, and saying that, oh, RBI may not have liked me, so my term has not been extended. The disclosures were limited to that.
Abhizar, I almost forgot about RBI did not like me, so that's why my term was not extended. It sounds very rich now in hindsight.
Right. And then, so the first line of defense is the company. The second line of defense is the independent internal processes which then report into the board. So that is the second level of failure, where we did not have the internal audit function identify this on a concurrent basis and report into the board. And this is what clearly the chairman of the board said yesterday, that, some of these issues were not brought to our notice and there was an internal audit failure. And he has hinted at some kind of a collusion within the bank and there will be an investigation. But having said that, I think at the board level, there is enough and more supervision. And I have said this in the past that, thank God that RBI appoints the CEO. Because if such an incident in a non-regulated entity would have gone unnoticed and the CEO would not have been sacked. So what has happened here at least is that the CEO has been forced to resign because of external forces coming in. Ideally, the internal forces should have worked. And the third level of defense is then the auditor, in my opinion. So I think we have to get that very clear. We tend to move to the auditor at the first instance. But there is lines of defense that come about. And then the other thing is that not everything is a colluded fraud. For example, if you talk interest income, these are system generated entries.
Yeah.
Correct? So obviously there could be a systemic flaw. That is also an important thing. The derivatives issue.
Abhizar, the word fraud has come from the board.
No, I understand that. That's what I'm saying. That when the word fraud has come from the board, I think one needs to be cautious as to how that fraud is kind of linked to a series of events where people have consciously done things. That is a fraud. Now, actually establish that and say that you've done this, I think is a in a way, some part of the bank, including the auditor, may be shirking responsibility somewhere and pushing the blame on a few. Again, the idea is that it may or may not be a few. It could be a systemic issue. It could have been lines of defense being broken, and those lines of defense being broken actually is a very significant impact, and that is what actually forms opinion and perceptions about the bank. Like one, and I know you will head to the investor side soon, but one big investor had told me once that while majority has control, minority governs perception, and that's what's happening here.
I think perception, I don't know about perception. I mean, stock was up today, so that's a whole different story of what happens in the markets. But Hetal, perfect segue from Abizar to you at this point. Fixing responsibility and discerning the difference between culture of non-compliance, etc., and malified intent. One part could be that everyone on this board or a lot of people on this board were just bad at their jobs. And the other could be that there's something fishy cooking here. Because for a management to come and say on a call that there is a suspected fraud when they don't really want to reveal that much raises massive red flags.
Yes, actually, if you hear the call, the chairman of the board also said that there were senior leadership which sort of allowed the breach of internal processes and systems. And therefore, to that extent, I think there is clearly some questions to be asked in terms of what roles were played by employees. Now, leave aside IndusInd Bank, if you just look at fraud very dispassionately, right? It really cannot happen without the connivance of certain set of employees. Depending upon the size of the fraud, you would argue, what levels those employees are. But in most instances, you will find some employees sort of tending to be involved. So if the board is saying that there is an issue of fraud, you're likely, and the board has actually said that some employees and ex-employees are sort of involved in this entire piece, then this is certainly something that needs to be investigated. More so, if you call it a fraud, there's clearly going to be more oversight and more layers of investigation which are going to come in. I think the question really is what is and I'm with Abizar in terms of saying that there is a first line of defense, second line of defense, and third line of defense. A lot of this is internal, right? There's a failure of the internal audit system itself. And the question, therefore, as Mr. Khara rightly said, is how are you strengthening the internal controls and systems and building a culture of compliance? So one of the big things we keep saying, right, culture eats strategy for breakfast. Well, culture eats most things for breakfast. And therefore, it is the board's job to also examine what is the kind of corporate culture within a particular entity or in the company that they are on and see how some of these things can be addressed.
No, so let me come back to you, Mr. Khara, on this point of what next. The regulator, I mean, some saying today maybe the regulator needs to come in with a broom at this point. Yes, by the end of June, the board will come with its names and some names doing the round. But the idea that one person will come in and then clean up the whole system and that will be a fix, do you think that that's going to be enough? What is the path that you would like to see ahead? Because at the end of the day, it's not only about IndusInd Bank, it's about faith in the Indian banking system, which gets shaken when things like this happen. That's the bigger issue.
No, I fully agree with you. And that's why, I made this statement that the tone from the top will be something which will be defining the culture in the organization. And from that perspective, the new CEO will have a huge responsibility on his or her shoulder. Because one, of course, they will have to identify the gaps which are there in the processes. We'll have to fix those gaps, and also at the same time, they will have to bring in some kind of a responsibility in terms of this non-compliance. That is the other piece. And going forward, how should they avoid such kind of occurrences? Which also means that strengthening the internal audit processes significantly, reporting structure to the audit committee also getting into some kind of a test check. And similarly, when the external auditors come, they will also look at the test check. The very important part, which is essentially relating to the MFI and also the interest income being booked for some of the and non-compliance with the IRAC norms, that is nothing but it should be, it actually warrants a review into the accounting system. How come such assets be identified as performing, whereas in terms of definition, it should have been non-performing? And similarly, booking something as a fee income, it is nothing but a very clear defiance of the internal processes and the guidelines. So I think it actually requires a complete and thorough revamp into the systems and processes, and also identifying such systems and processes which has led to such kind of lapses. So I think this is quite a comprehensive job which is required to be carried out by the incoming CEO and the management of the bank.
I mean, don't envy the person who comes in quite a bit of a cleanup. Abizar, do you see going forward liability on management who has stepped down? Because simply quitting and then saying, oh, I take moral responsibility may not be enough in this case. We don't know where it will go, but the moment the word fraud has come in, do you think an investigation is warranted?
If the fraud happens, then I think it's going to be the responsibility of the audit committee and of the board to actually investigate that fraud, and the people who are responsible for that fraud be brought to light. And if it is the ex-employees, then clearly the ex-employees will be held accountable for that part of the work, for sure.
In criminal investigations, I mean criminal investigations. It is time for central agencies to come in and look at what's happening over here.
Sorry, but to be candid, criminal central agencies don't have an excellent track record of turning things around. But I would say that effective investigation is important, and so that a matter is brought to an end, so that IndusInd can start off with a cleaner slate. I think that is more important, and that should be the focus.
So Hital, do you agree with this? Saving IndusInd right now is more important than bringing those who have done this to book, or are both important from an investor perspective? Is it enough for the same auditors and the board that missed all of the red flags to conduct this investigation, decide who comes next?
See, I think it's a little bit of both, right? I think, yes, the bank primarily needs to rebuild its confidence in investors. I think that's clearly shaken. And therefore, there is a great focus to figure out how much they need to clean up and get on. Now, the board has said at this stage that they're starting FY26 with a clean slate, and all the issues around accounting and fraud have been sort of booked into FY25. But I don't know whether that's really the end of the series. I think what we are going to see is new leadership come in. Most likely you're going to see an external, RBI is most likely going to get someone externally to come in, and you're hoping that you're going to see someone who's straight-jacketed, who'll tighten the systems, sort of follow the rules and responsibilities, and basically get the ship together. At this stage, I think that from an investor perspective, that is important. You have to understand that, all of this is not going to happen quickly. You're likely to see the bank just slowing down because it's going to be far more inward focused, at least in the immediate term, as new leadership steps in, just trying to get the ropes together. And therefore, from an investor perspective, trying to build that entire confidence back and getting back up and running is to my mind a priority. Yes, you do have to address the issues of the past. It's not that you can sort of walk away and say we've got a fresh start, and therefore the external investigations, given that these will be independent and you still have RBI oversight on this entire issue, should bring to light what are the sort of how many people are involved and what the elements of causation are, and therefore appropriate action should be taken.
Dipali Pant, if I may get your perspective on this, what needs to be done to bring back confidence in this whole issue and understand what really has happened, the culpability of those on the top who were running the bank while all of this was happening?
Well, Tamanna, I have a rather straight-jacketed regulatory view in this. Ideally, of course, you need a new man. You have to ensure that your systems and processes are in place. But I would also like to look at the culpability of those who created the whole mess in the first place. And I'm upset that they would be allowed to go scot-free. I mean, simply saying that now I've told you there's this fraud, there's this gap, I don't know anything about it, does not work. As far as the auditors, the whole definition of audit, A is for, analyzing, understanding, deducing, and then having some kind of an intuitive understanding of the patterns which you're seeing and then tracking the transactions. And if a good auditor cannot do that, then the auditor is not required, because that is the objective, and that is why external auditor is hired. After a bit, I think RBI should also be looking at all other banks so that there is no replication of this. Because you see, Tamanna, every system is only as strongest as its weakest link. And if banking runs on trust, now if people lose trust in foreign banks, in private banks, in banking as such, then there are a lot of people willing to come in, and there is already a lot of disintermediation happening. So this is a death knell, really, and I would have suspended, really superseded the entire board, and also taken very
I just want to quickly get views on that point. Should the entire board be superseded? Just Mr. Khara, your view on that?
Well, I think unless and until we really know that what responsibility is, because board eventually gets guided by what the MD and CEO will say. But yes, of course, board had a responsibility beyond that also. They could have, because when it comes to the audit committee of the board particularly, they interact with the executives of the bank. And when they interact with the executives of the bank, then they should have been in a position to assess what is the level of the compliance and how correct are their accounting reporting. Well, I think for me it is a bit premature to say that the board should have been superseded. But nevertheless, if at all they are found wanting, then of course. But as of now, I would not be really getting into that stage.
Okay, Abhizar, your view on that point?
I think we don't know enough.
Okay.
Depending on what the issue would be, horses for horses. Take Yes Bank, for example, they did change the whole board because that was the gravity of that situation. If the gravity of this situation is similar, that will happen. If not, I think appropriate action.
Yeah, but you know what, the astonishing part is this has gone from a derivatives accounting discrepancy to a problem in the MFI book, to micro lending, to NPA not being accounted for properly, to fee income. So it seems to be spreading. It's not just one thing deepening.
So I think one will have to get to the bottom of it, Tamanna, and then decide who are the people which need. There will be gaps.
Yeah.
And the gaps will be identified across the chain. Okay. And those changes will be changed. It could be the statutory auditor who may have to be changed. Who knows? But that would also happen.
I don't see how the same auditor can continue beyond a point. I mean, we'll wait and see. We're watching the story very closely. A band-aid right now on a gaping wound, saying, okay, here's the new guy, he'll fix everything, might not be enough at this point. But thank you to all of you for joining us on this conversation. I've run out of time. IndusInd Bank in focus. What's also in focus is the way our banking regulations run. What's also in focus is the top brass of IndusInd Bank. And can they really say, oops, this was a mistake? Well, that's all the time we have on the big question, but stay tuned. A lot more coming up on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Markets trade in negative territory, down more than 1% now. All sectors except the Nifty Media and Defense in red. Reliance is the biggest contributors to the Nifty's losses, while the broader markets also trade lower.
Adani Group EBITDA hits an all-time high of rupees 90,000 crore, records capex of 1.26 lakh crore in FY25.
VA Tech Wabag rallies over 8% on the back of robust Q4 results. Revenue growth comes in strong, but margins largely remain flat. FY25 revenue growth in line with the guidance that the company mentioned.
IndusInd Bank recovers after slipping nearly 6% on posting a net loss of over 2,300 crore for Q4. But brokerages cut target prices as they expect a slowdown in growth and profit.
Healthy gains for Fortis. Stock climbs more than 9.5% on the back of positive management commentary as well as inline Q4 numbers.
SEBI to issue directions on expiry dates this month after comments on consultation papers, says SEBI chief. On the sidelines of Associam Market Conference, he also reassures investors of NSE IPO plans, says outstanding issues will be resolved soon.
Sources tell NDTV Profit that SEBI is likely to finalize on the proposal to fix all equity futures and option expiries on Tuesdays or Thursdays. NSE has applied for Tuesday as their weekly expiry. Hello and welcome to Markets Profit Buzzers. Actually, my name is Puneet Zaveri. With me is Varsha today. Let's first look at how the markets are doing, because while we have a lot of corporate conversations lined up over the next half an hour or so, the markets have now been choppy today. We mentioned early during the morning that, in the F&O segment as well, that 24,500 is one of the key levels to watch out for. It's almost hovering around that level now. We almost reached 24,509 as the low, currently trading at 24,519. But largely, it has been a choppy day. Let's also look at first the heat map for the Nifty, because while there was large expectations of IndusInd dragging the Nifty today down, and the stock was largely in the in the red, we've seen a very quick recovery on IndusInd today. Apart from that, we've seen stocks like Bharti as well as Jio Financial in the green, but the rest 48 stocks of the Nifty down in red. Actually, IndusInd is actually not even the biggest loser right now in terms of the Nifty. It's the auto pack that's dragging both the Nifty as well as the broader markets, and we've also seen that on the Nifty auto. Let's also look at the sectoral heat map as well for all the sectors, and we'll see that Nifty FMCG as well as auto, these two are the biggest losers. We've seen some positive on the Nifty Media as well as something on the defense as well, but largely it's been quite a negative day. We've also seen the IT sector down in red today, despite some positive brokerage commentary from HSBC on Exaware as well as JP Morgan also affirming the positive view on IT. That's not helped the sector at all. Let's look at the mid cap and the small cap, because that has largely been in line with what the benchmarks have been. And even today, while the losses are slightly lower than the benchmarks, it's still down 0.6% on the mid cap as well as roughly about 0.3% on the small cap index as well. The other key aspect is also the BSE 500, if we can pull that up very quickly, because we've seen a lot of stocks react on news flow as well as earnings as well. Tata Teleservices up another 13%. There's some murmur on a potential fundraise that the company could do with the holding company. Prince Pipe is definitely a surprise, up 7.5%. That could largely be because of valuations only, because the numbers were nothing to write home about. But the street penciling in better recovery in FY26 compared to this year, that could be one of the key aspects. And Fortis is another one. While the con call was during market hours, as Varshita was mentioning earlier to me, the results were largely in line, but the commentary has been something very positive as well. And AB Fashion, Mahima will cover that during the day. There has been the demerger of one of the businesses, and that's the reaction of that. It's actually not 68% down. It's because of the corporate update as well. Now let's shift focus to the Adani Group, because the group actually has bettered its overall credit rating and has also de-risked its balance sheet, pruning debt. My colleague Anushi takes us through some of the key takeaways from this. Anushi.
And it's been a stellar year, stellar FY25 for Adani Group in general. I'd start off with 89% of the portfolio EBITDA rated AA minus or above is what we are looking at. Now, if you look in terms of the ratings also from 2019 to 2025, we've seen improvement in majority of the group companies that are there. Of course, Adani Enterprises in spotlight along with something like Adani Cementation, Adani Total Gas, all we have seen a subsequent improvement in terms of where the rating is concerned. Now, in terms of the cash book also, if we are looking at, they have a cash balance of 9,586 crore with a gross debt of 56,931 crore, which roughly translates to a cash balance to gross debt of 16.84%, while the minimum requirement is 5% or so. So in terms of this also, company has comfortably de-risked its balance sheet in the subsequent previous fiscals as well. Now, if you take the long-term debt in picture, PSU banks, there's about 18% of total debt from PSU banks that they have taken, while the smallest contribution we are seeing is from private banks. NBFCs and FIIs and global international banks have the highest weighting over here with about 25 to 26% of mix is what we are seeing. But what is interesting and what has stood out is the EBITDA of the Adani Group, and this is at the levels of 90,000 crore that we are looking at. Of course, here standouts being something like Adani Ports with a EBITDA of 20,471 crore, along with something like Adani Enterprises and Adani Power as well. These are the top ones in terms of where the EBITDA is concerned for the group companies that we are watching out for. So this core infra business also has powered the growth related to the company, with transport and cementation recording highest growth that we are looking at. In fact, cement has seen about a 69% of an uptick in terms of where the sector EBITDA is concerned. Now, if we look at the incubating infra business, they've crossed the mark of $1 billion of EBITDA, while Adani Ports has crossed $2.5 billion of EBITDA that we are seeing. In terms of recent performance also for the Adani Group, if you are taking Adani Group, they have delivered returns that are 6% higher than that of Nifty 50 returns that we are currently looking at. So overall, it's been a strong set of numbers that we are seeing for Adani Groups, and that is why it is in focus today.
Yes, thank you so much, Anushi, for all the details. Well, Jindal Poly Films is actually in focus. Let's pull up that stock also, because it actually tanks after Nasik plant fire incident. So the fire incident was at ARM's Nasik plant, and the production operation is at a part of a plant which has been temporarily disturbed, and the loss will be assessed in due course of time. That's what management says. But overall, if you see, the stock is down almost 3% in trade today because of the. But we exactly don't know what is the estimate damages that the company has seen. But moving ahead on the sidelines, Sosham's 16th Capital Market Conference, the SEBI chief talked about the concerns around F&O expiry dates as well as much awaited NSE IPO. Listen in to what he had to say.
Right now, whatever is a framework, it's there, and we will be issuing post the consultation paper. The comments we have analyzed, that committees have met, and soon we will be issuing further clarification on that.
So that will be like a month, 2 months?
No, I think within this month. NSE IPO, I think all I can say is that if all the outstanding issues will be resolved and we will move forward.
So by when? Is there any timeline on it?
Can't give you the timeline, but I think we should soon be doing it.
So have you received any assurances from the NSE side on some of the outstanding
NSE and SEBI, they are talking, and I think they're resolving the issues, and I'm very hopeful that it will be cleared and we'll move forward.
Well, moving on, Gulf Oil is in actually focus. Company came out with its Q4 FY25 numbers. Just to, read out numbers for you, they crossed revenue of around 900 crore yet again. Gross profit margin came at 42.9%, which is highest in 4 years. And PAT margin is at 10%, double digit for straight 6 quarter. And the net profit was below estimates owing to higher depreciation and interest costs. But, to speak more on numbers, what was the highlighting factor when it comes to Q4 and what is the growth outlook ahead? We are here joined by Mr. Ravi Chawla, who is the MD and CEO of Gulf Oil Lubricants India. Welcome, Mr. Chawla. Great to have you. Let me start with the overall volume growth. What was the overall volume growth when it comes to Q4 FY25? Also, if you could tell us the breakup of volume growth when it comes to your core lubricant and AdBlue.
Well, as you said, we've had a good quarter. In fact, it's a record quarter in terms of volume. In lubricants, we did 39,500 KL, which is giving us a 6.8% growth in core lubes. And even the year, we have ended on a 7% growth at 152,000 KL. AdBlue, we have again grown close to 9% in the year. The quarterly growth was a bit less, but it was flat actually. AdBlue, of course, has picked up in recent months, but still growing overall in the year. So really, it's been a year where we've continued to grow 2x the industry and increase our market share. And definitely we continue to look at this because our strategies, our executions, and within the core lubes, obviously 53% or 54% is B2C. The other is B2B, which is industrial, OEM, and infrastructure mining. So this is the split in terms of our mix, and we continue to gain market share and grow 2 times the market growth.
Got that point. Also, sir, I think you had given a guidance when it comes to AdBlue. You were expecting a volume growth of 10 to 15% CAGR over the next 2 to 3 years. So any comment on that?
Well, AdBlue has been doing very well for us. We have a large base of commercial vehicle customers, and we are amongst the leading AdBlue makers, diesel exhaust fluid. You're right. So we have been growing 10-15. In fact, we have grown a lot last 3 years. I would say this year it's grown close to 10%, and we still look at it growing 10 to 15%. Last few months has been slightly less because of the CVO cycle being there, and of course in the market we have now just launched a pack with a anti-counterfeit device, because we also see that there is a lot of other AdBlue diesel exhaust fluids coming in, and since we have a strong brand and our quality is also monitored at the VDA certification, we have introduced this device because we believe we should be talking about the genuine product also in the market.
Okay, understood. So on that note, sir, what is the volume growth guidance that you would be giving for FY26? Will you grow faster than FY25?
Well, over the last decade and more, we've been growing 2x the industry growth. So the industry growth has been 3 to 4%. We continue to look at that, and based on our market shares, we are strong in diesel engine oils and in motorcycle, but we have a lot of opportunity both in terms of market share and other segments of the market. And we have very strong OEM tie-ups. Our B2B is strong. Our brand is also in the top 3. So the guidance continues to be to grow at least to 2x the market, and in some segments more than that, where our market share is less than 5%.
Okay, and Mr. Chawla, so given the fall in crude prices, have you passed on that benefit to your customers by lowering the product prices? And if not, can we see some margin expansion in Q1 if crude prices remain at this level?
So base oils is a derivative of crude, as you rightly said. It follows a lag of, and there has been steady prices in terms of crude for the last few weeks. We have seen below 70. But what we also saw is in Q4 the exchange rate, because a lot of our crude, our base oil we are buying is imported. So the exchange rate did go not in our favor. But if we see a steady price that can be there for the base oils, hopefully, if that is the case and the exchange rate is steady, then definitely there is scope to look at some margin expansion. And in the B2C business, normally it is passed through either through schemes or pricing. And when this happens, when the raw material is steady, then there is a good chance to focus more on the margin expansion.
in FY26, where will your margin go?
Well, we have a band of 12 to 14%, ma'am, which we have been doing. And this quarter, of course, it was the best 13.6. We continue to give that and guidance that it will be 12 to 14. But if there's an opportunity where we have a favorable raw material cost and other factors like exchange rate and, of course, growing our mix better, then we would like to move to the next band of 14 to 16. But at the current juncture, it's between 12 and 14.
Okay, understood. And also, Mr. Chawla, so how much of revenue and EBITDA did you generate when it comes to your battery business in Q4?
So battery is a synergy business for us. We have a strong motorcycle brand called Gulf Pride. So this is an extension of that. We started many years ago. This is a VRL battery. And we have got a turnover close to around 80 crores in that. And it's more of a synergy business. But yeah, happy to share that we are still amongst the top 4. There are not many brands in the two-wheeler battery business, as you know, established brands. And that is also, we have started some batteries for the EV auxiliary, but mainly is the VRL lead acid battery, which we are marketing through our synergy outlets and distribution.
Okay. And also, you've so far acquired stakes in 3 EV-related businesses, if I'm not wrong. Then what is your plan when it comes to, increasing stake in these businesses, say, 2 years or 3 years down the line? Will a company control the entire or majority stake when it comes to these businesses?
So we have got 3 investments, as you rightly said. We had invested in a software as a service company, Tech Persec, which is Electrify brand. There we have 26% stake and we continue to work with them. Tyrex has been one of our recent partnerships, I would say, where we have majority and we are working with the founders to grow this business, which is the DC chargers. Happy to share that this year that the Tyrex business has tripled. Close to around 80 crores, 79 crores, and also doing very well, gaining 8 to 10% market share in key segments of fast charging. And I think this is where we continue to work with them. And the other investment is Indra, which is an international company. At a group level, at international level, we have majority stake. From the India balance sheet is 7.5%. We also trying to bring some of their chargers here, but also happy to share that Tyrex has also started making slow AC chargers. They have a semi-automatic line. So we are part of the, I would say, the charger business now. And we also want to leverage all our touch points, our OEM relations to see how we can grow in this leg of e-mobility. So these are the 3 investments we have made.
Okay, and so my last question to you would be, have you started supplying data center related fluids? How much is the contribution to the total volumes, and how do you see volumes for data center related fluids to grow in coming years?
So data center is obviously the liquid cooling which is coming into data centers is just started making its mark, and we had it's a very small volume per se in terms of not even 0.5% of the market if we look at the Indian market for automotive industrial. But to tap this opportunity, we are happy to share that we have developed 2 products which are for this particular application in our R&D center in Chennai, our global center. And these products have now been tested for materiality, the material composite compatibility. And we will be looking at taking these products and testing with the actual users who make these data centers, the equipments and all. So happy to share that 2 products are now developed and we can go to the next stage of testing it out.
Right. And so last question to you is, what will be the next growth driver, when it comes to Gulf Oil for the next 2 years?
So we are continuing to growing our business in India. Lubricants is still growing, so we are going to grow our market share in many segments where we are less than 5. We continue to grow 2x in all the other segments where we still have room for growth. Our brand continues to get stronger. We are investing in our brand. We just launched a big campaign in the motorcycle segment for Gulf Pride. Mahendra Singh Dhoni is our brand ambassador, and we also have Hardik Pandya and Smriti Mandhana. We have global assets like Williams in Formula One racing. So we continue to invest and grow in that. So I would say that is a core part of our business. We also have the new core, which is for us the EV piece. And that is again, the investments we have made. We want that to also grow. So I think Gulf is evolving as the market is evolving, but the core is also strong. And we hope that the new businesses we have can also give us new pools of growth and margin.
Right. Thank you so much, Mr. Chawla, for answering all the questions, and all the best.
Thank you.
Well, that was the conversation with Gulf Oil as well. Let's also, pull up a team lease, and because, we're getting into a corporate conversation with Mr. Ramani Datti, who is the Chief Financial Officer at Team Lease Services. In this particular quarter, the company actually posted a very decent performance as well. So Ms. Ramani, if you can hear me, a very good afternoon to you, and thanks so much for joining in to NDTV Profit, and thank you so much for giving us time as well. I just want to start off, with this particular quarter as well as the performance for the year. While in quarter 4, we've seen some reduction in headcount by roughly about 7,000 odd personnel. Is that largely linked to any one particular customer as well?
Yes, good afternoon. This quarter, we have already indicated that there is a planned absorption by a large NBFC client. So that's the main reason why we took a dip in headcount, because barring that one client, overall across all other segments, be it FMCG, retail, e-commerce, quick commerce, pharma, telecom, we are seeing good demand and good open positions. So overall this year, excluding BFSI, we have actually added about 32,000 net new employees in general staffing business. However, because of the hit with this particular NBFC client, it has come down to 27,000. And IT front, while the IT recovery is slow and there we haven't added any headcount, with operational efficiency and better mix of GCC, we have managed to expand margins slightly in our specialized staffing business. HR services Q4 seasonality wise is a good quarter for us because most of the university and education billings happen in this quarter, and that also has contributed to a substantial jump in profits for this quarter.
Mr. Mani, you did cover a lot of things, so let me just get into it one by one. Specifically, you mentioned about the one account on the NBFC side. We've also seen some new regulations come from the RBI for NBFCs to insource some of their, collection facilities or among operations essentially, and that's to take more advantage of there and have more control essentially on the field. Have you had any conversations with your customers regarding this?
Yes, definitely, because this regulation is already applicable for BFSI segments, the banks, and this got now reiterated for NBFCs. So we have been very conscious about this requirement. So that's why we kept our exposure to very minimal. It's only 7,000-8,000 because for many of the competitors, this exposure is a much larger number. So we have been conscious of this particular segment. And when the RBI has reiterated that these have to be insourced by the NBFCs directly, we planned this attrition well in advance, and we have managed to restrict it to only 7,500. Barring this, we don't foresee any other impacts that can hit, be it BFSI or other segments in our general staffing business. But overall, BFSI hiring itself has slowed down. So we are, right now, we are not having any major open positions in the BFSI segment overall. However, there can be a pickup that can be expected in around June, July.
Got the view. So largely, you don't see any kind of future risk arriving from this new regulation because that's largely in favor for banks, and you don't see that because that's a lower exposure for you compared to your peers. Got that point. I just want to take forward the point of specialized staffing, as you mentioned. Now, that's of course the very high margin business for you, and while a very small contribution in terms of headcount, it's a very high contribution in terms of EBITDA margin. So what's your outlook essentially going forward of increasing this share of business in FY26? Is this largely based on, I'm guessing it will be a lot from doing with the ITs and the IT sector and the GCCs. So any kind of outlook that you can provide for FY26 for this?
That's right. For our specialized staffing business, IT services contributes about 40% of revenues and GCC about 60%. A year back, the ratio used to be exactly opposite, like GCC was like 40%, 45%. That over the last 1 year has grown to 60%, mainly because IT services has been consistently bringing down volumes on the contract staffing side. And to be very honest, at this stage, we are not seeing any kind of pickup in the hiring for IT services, the domestic IT services. And GCCs, while the growth has been continuing in line with the last 1-2 years, for us to expand the revenues and volumes, we need pickup in IT services as well. Right now, we are projecting, given the current scenario on the IT outlook, we are projecting a low single-digit growth on revenue, and with operational efficiency and other internal initiatives, we are expecting a low double-digit growth on profits for specialized staffing business.
Got that. So that's the guidance essentially for both those, like essentially the outlook. I just wanted to take forward the point that you specifically mentioned for specialized staffing. And is there any kind of difference in margins for you specifically, whether it goes to GCC? Is GCC slightly higher margins compared to IT services? I'm not sure if you quantify this. Just wanted to check with you.
The difference is not that material, but in terms of absolute realization, GCC realizations are higher. So just to give you a sense of our average rate cards, on Indian IT services, the rate card is roughly about 45,000 rupees per resource, whereas in GCCs, it's about 90,000 rupees per resource. Our gross margin percentage and EBITDA percentage is same, but on one resource, we earn almost 2x of what we otherwise do on IT services front.
And for the next year, FY26, because we've seen FY25 was kind of like an anomaly because we see the headcount addition was slower. Do you expect FY26 to go to similar levels of the FY24 level of headcount addition of roughly about 35 to 40,000?
In general staffing business, yes. So we are expecting at least a 45,000 growth in overall headcount, contributing to about 10,000 per quarter net addition, with slightly higher during the pre-festive season momentum. And that translates to about 20 to 25% of our revenue growth for next year.
And anything that you can tell us about specialized staffing as well? Because, while the headcount compared to general staffing is quite lower, that's been driving the margin. So you're expecting, as you mentioned, double-digit growth for the specialized staffing, and will that only be led by GCCs? Because the outlook for the domestic IT services from these companies haven't been that great. And for certain companies, we've actually seen the last 4 quarters not been too many additions, and they don't guide anything for this year as well in terms of very high additions, at least in the domestic IT services. So is it safe to say that a lot of heavy lifting will be coming from the specialized IT services?
Yeah. In specialized staffing, I said low single-digit growth on revenue and low double-digit, about 10 to 12% growth on profits, mainly because of the GCC mix, because we are adding a good amount of clients, new clients, as well as headcount with our GCC client. IT services, as of now, we don't have any active open positions. Whatever open positions that we are working are backfilling of the regular attrition. So without that coming back, volume growth going back to double digit on revenue front is extremely difficult.
Got the view. Mr. Ramani, thanks so much for joining in and giving us a whole host of views on this quarter as well as FY26. We look forward to our next conversation, but thanks so much for giving us your time.
Thank you.
Well, that's all the time that we have on this edition of Profit Buzzers. Stay tuned for Profit Top Trades. Me and Varsha are going to continue the conversation. So we have a very special pharma conversation lined up. Stay tuned.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Hello and welcome to NDTV Profit. You're watching Profit Top Trades. I am Puneet Zaveri, and with me is Varsha. Another key aspect that we want to highlight is what's happening with the pharma sector, Varsha, and take us through some of the key aspects and highlights about this, because that sector has been buzzing ablaze now. About the stocks as well, what's some of the key aspects, and what's the next conversation like?
Yeah. So, actually, if you see in last 5 days, or rather from 8th of May, all the pharma stocks are buzzing. Even the pharma sector is buzzing. Now, there are few reasons for the same. One is the rally that is being driven by the positive growth outlook and the inline quarterly results that the company has seen. Stocks, if you see which are the stocks that are on rally, you have Torrent Pharma, Gland Pharma, Natco Pharma, Dr. Reddy, Sun Pharma. All these stocks were up since 8th May. Even Granules India is up almost 16% since May 8th. Now, one of the reasons is inline quarterly results which have been posted by Torrent Pharma, Lupin. Divi's Lab did beat the estimates. For Dr. Reddy's, if you see, revenue was in line, but EBITDA was a miss. So overall, if you see, inline numbers still now have been posted by the pharma companies, although Gland Pharma, Cipla and Piramal Pharma, they posted a missed kind of, rather they missed estimates. Now, the other thing why pharma sector is in focus is, or why we have seen this kind of rally, is positive industry outlook, rather optimistic FY26 guidance that has been given by companies till now. For example, Dr. Reddy's has been guided double-digit growth, 25% plus margin in FY26. Torrent Pharma has maintained its guidance for 70 to 100 basis points of annual EBITDA margin. Even Divi's Labs is expecting double-digit growth in revenue in FY26. Gland Pharma though ended with a flat revenue, but expected to grow the revenue in mid-teens in FY26. Lupin aspires to become a $1 billion US sales in FY26. So even Street, if you see, brokerages are expecting a good FY26. But on that note, let me invite Vishal Manchanda, who's the Senior Vice President at Systematic Shares and Stocks. Hi Vishal, always pleasure to speak to you. Vishal, pharma stocks are actually on rally now. As far as I know, this is because the inline Q4 numbers and positive outlook by the pharma companies. But how are you reading this?
Thanks, Varsha. Good afternoon. So I think pharma stocks have recently started pulling back. So they were correcting for quite a while, and now they started to pull back. I think one imminent reason that I see, apart from the earnings that has panned out so far, is that the US has said regarding the most favored nation a drug pricing policy that they were supposed to implement, they'll keep generics out of it. So having decided that, I think that gives relief to generic companies, so they won't see any further pricing pressure, while the tariff overhang still exists. So we might see the tariffs announcement also coming in, but we'll have to wait and see for that. Otherwise, I think the sector outlook is this year FY26 is going to be strong for most companies, while we'll see some challenges FY27 onwards.
Right. So, two questions. One, actually, I was on to ask you about this Trump executive order for slashing the prescription prices. Now, as you rightly said, that it won't impact generics, but specialty companies like Sun Pharma, these all companies will be impacted. So, any view on that, especially on the Sun Pharma?
So, on Sun Pharma, we'll have to wait and see how the details come out on the pricing policy. So my sense is, if at all they kind of try to reduce prices, there are two things that can happen. They can restrict this to, say, the top 100 drugs or top 200 drugs, and if that is the case, we'll see Sun Pharma out of the list. And this is what happened last time when Trump had laid out this MFN policy. So it was only for the top 100 drugs. So we'll have to wait and see what's the scope of scope of this, whether it will include all branded drugs or only the top 100, top 200 drugs. So I think the details will decide on what we'll have for Sun Pharma.
Okay, got that point. Also, Vishal, will CDMO companies who provide, APIs to this innovator companies, because I think innovator companies will also be impacted. So, will CDMO companies providing these services or API to innovator companies will be impacted also? Because if innovator companies selling those drugs at a very low prices, won't they ask this CDMO, Indian CDMO companies, or for that matter, any CDMO company to slash their prices?
So I think as far as CDMO companies are concerned, so generally these companies come to India for the lowest cost. Like the innovator come to India, primarily the purpose is to get the lowest cost. And I think there would be some pressure, maybe some pricing pressure, but if you look at things overall, when innovator would face pricing pressure in the US, they would kind of turn to outsourcing more to a lower cost destination like India. So probably the volume of work that they would want to outsource to India would significantly expand, while there will be some pricing pressure that they would want pricing to come down a bit. But I think volume should take care of that.
So basically you are saying the pricing pressure would be offset by the volume that these companies will get.
Right, because they would need to kind of reduce their overall R&D cost, and the best thing for them would be to outsource more, whatever they can, to destinations like India.
Got that point. Also, Vishal,
and then you have collateral pressure. There are collateral pressure that Trump has put on companies to do more manufacturing in the US. So I think how this eventually pans out, we'll have to wait and see.
Also, Vishal, I heard you saying that FY26 will be a strong year for the pharma companies, but we'll see a degrowth in FY27. Any reasons for that? And also your picks when it comes to pharma as a whole.
So I think FY27 is when we'll not see too many high-value launches coming in the US. So we don't have any visibility on a high-value launch happening for companies in FY27. And a large part of the high-value launch would start to erode in FY27. That happened in FY26. So on a net basis, I think US might be a drag for companies in FY27. So as my preference is, I prefer companies with lower exposure to the US. So I like Sun and Cipla, which have relatively lower exposure to the US in terms of the overall sales. So they are about 30% dependent on the US. And if I look at Sun, their generic exposure is only, I think, about 15%, and the rest 15% of the 30% is coming from the specialty portfolio.
Well, thank you so much, Vishal, for answering our questions, and all the best. Puneet, so basically, wait and watch is one thing when it comes to, pharma side, but good growth is expected when it comes to FY26, but FY27 is the watch out year when it comes to pharma, because there won't be any new launches.
Well, definitely, and thanks for taking that conversation forward with Vishal as well. And that's one of the key sectors over the last couple of months that we've seen been in the news flow along with auto, and that's largely because of the Trump tariffs as well. But apart from that, good growth is expected at least in FY26. Let's also shift focus, to a story now, because my colleague Rishabh has caught up with the NSE CEO Ashish Kumar Chauhan about the Indian market growth amid all the global uncertainties that have been seen. Listen into a slice of their conversation.
SEBI is likely to confirm the proposal for 2 expiry days. What are your views on that?
We have no information, only while in the conference now you've started asking me, that's how I've come to know, but we have no information. Whatever is SEBI's decision, we'll have to abide by.
So any progress or any developments on the IPO by NSE?
We have the same status that we have asked for no objection certificate from SEBI. And as and when that approval comes, we will prepare our draft red herring prospectus.
Sir, any sort of issues according to you that are leading to the abuse of prop terminals? What are you seeing on that?
Prop terminals, again, SEBI is having consultations with the market participants, including stockbrokers and all. And so as and when their decisions come, we'll have to implement them.
And also, sir, what are the sort of developments that you're seeing that NSE is doing to prevent frauds or cases like Gensol from happening again?
See, again, it's basically a corporate governance issue, and there are even debt market related issues, loan related issues there. And so effectively, many of these things will be taken into account while preparing the new slightly tightened regulations going forward by SEBI.
Sir, any sort of views that you have on newer investment products that should be coming out to tap women and youth also, like the SEBI chairman also said?
Currently, we have a large number of youths joining the stock markets. The average age of our investors, 22 crore accounts, 11.3 crore unique accounts, is around 32. India's average age is around 28, 29. So effectively, we are reaching that time where most youngsters are joining the stock markets, and naturally, out of that, 25% are women, and almost 20% of all households are now investing via NSE into the stock markets. And number of pin codes, India has more than 19,300 pin codes. Only 28 pin codes don't have NSE investors. So effectively, broadly, we have reached nooks and corners of India, and also the fact that 25% women who are directly investing via NSE into Indian stock market is a good achievement. Of course, we have a long way to go, and that's where SEBI's regulations in this direction to inculcate saving habits into equities or bond markets via stock exchanges for youth and women is most welcome.
Well, that was the NSE's here, Mr. Ashish Kumar Chauhan as well. But one of the stocks that was expected to be in the news flow throughout the day was IndusInd Bank. It's kind of been a dampener actually, because we were expecting the stock to be under pressure. It was down almost about 6 to 8% in the morning, hit a low of 725. Now actually trading in the green. And then this is, of course, after the company reported its Q4 earnings. It has been, reported a huge loss of 2,300 odd crores. But let's get in my colleague Harsh of what investors could do looking forward, and should they be worried? Harsh.
Well, I want to talk about what the IndusInd Bank management has said on the con call yesterday. One, what they've said, clear, timely disclosures are being made. Second, all pain is upfronted, factored and accounted for. 3, FY26 is a fresh start for them. The liquidity coverage ratio as well as the capital adequacy ratio remains fairly healthy, and the CEO selection is on course. Names will be sent to the RBI before the 30th of June. This is what the management has said in terms of what could possibly be construed positively. Now, should investors, despite all of this, be worried, and what should they be worried about? One, is the kitchen sinking fully over? Has all the rot within the bank in terms of its books and the way in which processes have been aligned, has all of that been cleaned up? Well, not so sure. Second, erstwhile CEO has guided no loss in Q4. So that's what the former CEO said, but we've seen a very, very large loss against that. Third point of contention or concern, new adjustments disclosed in the Q4 numbers. Now, management is saying that this is all that there is, but could there be more is really the question. Regulatory action against all that has played out is yet to be factored. Mind you, there is a fraud involved as well, and therefore, what would that lead to in terms of the bank's performance? 5, action in terms of what the bank is taking against the former CEO as well as deputy CEO. No executive directors anymore on the board of the bank. All the directors are now non-executive on the board of the bank post the resignation of the CEO. And could a PSU banker be nominated as CEO? If that were to happen, that's also a material negative. So some positives, some negatives. I've just highlighted all of them. Now, in terms of what brokerages, at least the ones which are positive, are making of this and reasons why they are positive. Jefferies maintains a buy. They've cut their target price from 1,040 to 920. They believe the cleanup was larger than anticipated. The new CEO is to lay out the path forward, so they'll wait and watch for that. They believe valuations remain reasonable. Macquarie on an IndusInd. They maintain an outperform, target price being 1,210. They say that the large miss and multiple events have now been recognized. Asset quality is still a concern for them. Stock trades at 5 times the annualized Q4 operating profit, which is well below peers. And the key monitorables: management succession, when do credit costs peak, sustainable margins, and governance. Those are the factors they'll look out for.
Well, thanks for that, Harsh. But let's move on to a corporate conversation now. We are going to be taking stock of Pearl Global after the company reported a decent set of earnings in Q4. Revenue was up almost 38%, coming at 1,200 odd crores. EBITDA as well has done very well, 27% growth, while the overall margins has just on an absolute basis dipped by 80 basis points to come at 9.9%. Net profit is up 32% as well. But to talk more about the results as well as the outlook for FY26, we are now joined by Mr. Pallav Banerjee, who is the MD of Pearl Global Industries. Mr. Banerjee, good afternoon, and thanks so much for joining in today right here on NDTV Profit. I just wanted to first start off, because there's a lot more to unpack for the textiles industries with the number of FTAs that have happened. But essentially, how would you sum up the quarter gone by for at least Q4 of FY25, and do you see that the growth momentum will continue over the next couple of quarters as well?
So if we look at the international markets, like I'll just pick most of the international markets where we supply to, for the last 4 to 6 months, we had seen a good trend, whether it is US, UK, Europe. Japan, Australia has been more stable, but otherwise, I think we have seen that trend that it was definitely coming back. So I think this will continue. Of course, with what's happening in US, there are a lot of reservation. People were thinking that the cost will go up, inflation will come in. But so far, we have not seen that. April sales also have been reasonably well for most of the retailers.
Pallav, good afternoon, Neeraj here. How do you look at FY26 in light of the fact that there are these uncertainties? I mean, I think yesterday I was looking at a note which suggested that because of this 90-day window that has opened up of a truce between US and China, US suppliers, in order to stock up for the July 4th weekend and otherwise, are rushing back to the Chinese manufacturers to try and pick up the supply, which might have actually spread across the region as well. So a lot of moving parts. I don't envy that I'm not in your post, but I'm just trying to understand how you look at it.
So you see, China still does have a significant tariff. Like, all the tariff is on top of WTO. So let's talk about garments. Then we have, for example, a cotton blouse, we at 17%. And on top of it, every other country has to give now 10% additional baseline tariff. And China, in that case, is giving almost about 37%. So that's already is there at this point of time. So most of the big brands and retailers had moved out of China, but some of them are still there. And certain products like toys, the gift items, accessories, so they're still big time in China. Apparel, most of the, as I told you last time also, we had moved quite a lot of goods have come out of China. Only the importers are still there. That means the importer wholesaler operates in US, the stockists, and some of these small retailers are still there. So in general, I am seeing that, this particular window that has come up is for all the Christmas goods, all the Christmas decorations, a lot of sweaters. In apparel, I think sweaters is still a lot of dependencies on China. So those are the ones people are rushing back into US at this point of time. But general apparel, we have seen that movement was happening for quite some time.
Yeah, well, I mean, all of this questioning, Pallav, is to try and understand if what you've done in Q4 or the last 4 quarters is something that can be consistently achieved in the future, because you're doing a tremendous job there. But before we get to numbers, Pallav, just a couple of other questions on macro. One I have, one Puneet has. So I read in your comments that you've given in the release that with this UK FTA being done, it helps India being at the par with some of the others. But I remember an earlier conversation that we had, and because you are present in a lot of these countries, you had mentioned that some of the exports that happen out of these nations are happening at a much better price point and efficiency than India. So could you just kind of put both of these things in context, what you had said earlier and what you mentioned in the release right now?
So what I said earlier was that your expectation, whether it will something like really explode, the business will explode or not.
Okay, that won't happen.
So there, the restriction that I talked about is the number of raw materials that is available. We don't have synthetics, we don't have certain products, which is not there. The raw material is still not in India.
Okay.
So yes, what we do about $1 to $1.5 billion of export of apparel that's going into UK, that might double, but it will be cotton and cellulosic product, which is easily available in India as of now. And we have to build up our capabilities and capacities for the synthetics products much, much strongly. So that's the difference that we spoke about. And talking about our business, yes, we have been supplying to UK from Bangladesh so far. And now what we are seeing is that because of these three countries which are also coming into this duty-free kind of status, which is your India, and I told that Vietnam also came in the December. So that's will give us that opportunity to much, much more. So our business, definitely we are looking forward to the UK component should go up by 2x or 3x immediately in the next 1 to 2 years.
Got that, Mr. Banerjee. Just want to take that point forward. You mentioned that a lot of your supplies to the UK is done from Bangladesh. But in light of what's happened with the India-UK FTA, would you also recalibrate some of the capex that would essentially be planned in Bangladesh to India as well? Because first, based on cost competitiveness, and secondly, also on the geopolitical or the crisis that's been happening in Bangladesh, do you see that as one of the key reasons to shift some of that to India? Because and is there any kind of cost competitiveness between India and Bangladesh for you? Do you see a differential there as well?
Okay, so 3 different questions. Let me try to, without forgetting. So Bangladesh is a very strong base for garment and apparel. If you see their economy, almost 80% of their exports are coming from only for apparels. And the whole ecosystem that has built up in Bangladesh is very, very strong. One, they have the FTA benefits. Basically, it's an LDC because of least developed country. They had a duty-free advantage or GSP advantage to some of these countries. So that they have encashed upon. And the cost of labor is still lower than India. But the biggest needle mover is in terms of efficiency of that ecosystem. So that's much, much stronger in Bangladesh as of now. And despite all this political turmoil and all the changes that it's undergoing, this particular segment of the industry in Bangladesh is not affected. If you look at their numbers, it has not come down. It's only inching up. In fact, even this year, the numbers are quite solidly up. So that, I think, apparel and Bangladesh is at this point of time very, very synchronized, and I don't think it is going to get decoupled very quickly. So when we talk about as a company, our investments, it's about where my return would be much better. And mind you also that we are not supplying to only one market. We do supply to US, UK, Japan, Australia, European Union. So when I do talk about our capex, first of all, the return and where the potential is to supply into all of those. Yes, India would be signing a FTA with EU also. I think there are a lot of talks. Most probably July will have the first phase of it coming up. So yes, opportunities are there. I think our major investment would be happening in Bangladesh and in India, I would say. And then comes Vietnam, where also we think some more growth is there.
Pallab, now, it's not too often, right? You had the best ever Q4, yes, but it's also the fact that it's a 40% growth in Q4, and for the year as well, it doesn't look too bad at all, right? 31% growth. You've done it at a very healthy ROCE too. Do you expect these statistics, or do you expect an encore of these statistics for the near term? As the base grows, it might be difficult, but for the next 1 or 2 years, are these replicable performances?
We have planned, or our internal strategy has been planned at the rate of, our top line should grow at the rate around 14%.
1-4.
Sorry?
You're saying 1-4? 14%?
1-4, yeah. 1-4.
Pallab, you've done 31% in FY25.
But this is so much of opportunity came up in this particular year. See, I told you last Bangladesh, because of whatever turmoil that was happening, the big players were going down. And we had a very strongly managed and governed company. So naturally, our governance was stronger. We could take a lot of market share. So when disruption happens, the stronger people will become stronger, always. So that's something we have experienced this year. I would say, if you're asking me what will happen in 2026, I am quite confident that this 12 to 14% with whatever is happening in the world is quite achievable. If some kind of, good surprising opportunity comes in, then we will again try to get to this number. Our readiness is always to be, at 25-30%. but planning is done at 14%. So that's how I have been doing the top line. And bottom line is slightly better because the leverage and couple of levers that we have, whether it is taking the advantage of these bigger numbers and over it's getting spread over a larger base, plus some of these investments that we have done, which has to clock in even more returns. So that will continue to grow at a faster rate than 14%.
Just one quick follow-up there. There is capacity addition that is happening. Does that come about in FY26 and your existing? Sorry, FY26.
We are adding capacity every year. Even if you go back 1 year back when the US had a huge inventory situation and everybody was shutting down their factories, but I was opening up factories at that point of time because I knew that this phase is coming. So we have taken use of that phase. That's why we are ready to go to a 30% plus also. And we will be keeping that readiness for future as well. We have done about 74 million pieces. Our capacity is close to about 90 at this point of time. We are adding to be about 100 by end of next year so that we can do, So in our industry, just to explain to you, I bring the capacity, but hiring of the people and engaging the machinery happens when the order comes in.
Yeah, of course. No, Pallab, okay, sorry, one very macro question, but I'm just trying to think, right? I mean, knowing by your credentials of what you've done in your past as well, and the fact that you are so organized, a strong balance sheet, strong growth prospects, what would be the largest, let's say, a Chinese company or some other global company be? And where would you be right now in terms of size? Could it be 1/5, 1/10, 1/20th, whatever it is? Sorry, excuse me for not knowing. And do you have ambitions of reaching that stage in the next 5, 7, 10 years?
Ambition, definitely. The largest player, I think, in our industry at this point of time should be around $3.8 billion or something like that, 3.5 to 3.8. It's a Chinese origin company, but they have diversified into many other countries now. That's, I think, Shenzhou. And most of the other players, like the Koreans and the Taiwanese, are in multi-billion, like $2 billion, $1.5 billion, $3 billion. In that range, there are a few players are there. So our ambition would be definitely to take head-on competition with them. And that's what we are trying to do. We are still at $530 million as of now. So it's a long way to go. But I think, yes, we had given a planning of almost about getting to that, that 700, 800 mark before 2028. And by 30, maybe cross that $1 billion mark. Hopefully.
Okay. Well, wish you all the best for that and more. Pallab Banerjee, fabulous show. Thank you so much for speaking to us today.
Thank you.
Well, that's Pearl Global. And Puneet, quite remarkable to see such growth prospects.
Definitely. And, because they're highlighted in the presentation as well, $18 billion of imports into the UK. And if that growth continues for a company like this, it's challenging a lot of legacy players as well. And definitely a space to look at going forward as well.
Yeah, let's see how it goes. Okay, we'll talk about Pearl and a lot others on the other side of this break. In fact, wrap it up on this edition of Profit Top Movers and India Market Close coming up next.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market move.
Thanks for tuning into India Market Close. I'm Neeraj Shah with Harsh Sehta, and let's pull up the market picture for you and show you what's happening in a scenario today. Well, about 1% lower. The banks too have fallen about 400 points, and I think this must be the lowest point at which the Bank Nifty is trading. If you can just once get the intraday of the Bank Nifty, then try and get in the Nifty IT as well. Well, not at the lowest point, but circa those levels. 420 odd points for the Bank Nifty. Nifty IT has taken a bit of a clobbering as well today, and it did show a bit of a bounce, by the way. From the low point of the day, the Nifty IT did bounce back only to now sink quite substantially, about 1.5% lower in the session today. At some point of time, we'll mark the US futures as well, but get in the mid cap and the small cap indices, get in the market breadth for a moment, and just try and see what's happening there too. So the mid caps about 0.65% lower in trade. Small caps well behaved relatively, about 0.25%. This smacks of some insti selling in the session today, particularly on the banking side. The market breadth is looking terribly. Look at the yawning gap. The crocodile's mouth is not looking all that pretty. And frankly, if you just look at the Nifty 50 heat map, it'll give you a sense of the kind of pain in the market today. The nature of the gainers has changed. IndusInd started off as the worst performing stock. It is right now the only one which is up over 0.6% in the Nifty 50. Quite something, isn't it? Some gains for Bharti and Hero, but otherwise, fair degree of pain. In fact, the Adani twins were in the top 5. They are no longer in the top 20 either. From the losers side, ONGC 3% lower, M&M 3% lower. There is weakness in some of the metal names like Hindalco, which is down about 2.5%. But it's across the board that you're seeing pain. Reliance being down 2% as well. So oil upstream has certainly seen a bit of a hit in the session today, though you could argue that Reliance is a bit more than that. But clearly pain on the large cap end of the market. And Harsh, not that the mid caps are bereft of pain, just that the small cap index is doing much better than the large cap index.
Yeah, some bit of outperformance there, Neeraj, you're right. And this has been a trend which is playing out, or rather played out yesterday as well. So a little bit more of that. The Nifty mid cap down around 0.6 odd percent. The Nifty small cap, let's pull that one up as well. And that's around 0.25% thereabouts. So some bit of outperformance which is visible there. But the real pain, of course, as Neeraj pointed out, is in the large caps. Let's talk about some names. And first off, on numbers and on results, something like a Prince Pipes up 6.5%. The margin rebound has been sharp for it on a sequential basis. And you can see that movement on the stock as margins recover. Guidance is that margins will recover by June of this year fully. VRL Logistics is the other one, 6%. What a strong set of numbers from VRL. Team Lease is the other one, 6% higher. Astral, Nalco are some of the other buzzers in trade. Let's talk about the ones which are not doing as well. And you have a GMM Pfaudler within that. 8G Infra, not surprised given the kind of numbers they've posted. Colgate as well, down around nearly 6% or so, and we will talk more about Colgate because that one's a big one. Mankind Pharma, again a disappointing set, 3.5% lower, and a Gulf Oil also down around 3 odd percent in trade. Among those within the broader markets which buzzing on the back of either some news or blocks, you're talking about Jindal Films, where one of their factories has caught fire, 7% lower on that counter. Zinca Logistics is down 2% on the back of a bulk deal. Garden Reach, despite giving away some bit of an order win that they had off last year of 2024, stock is perked up 11%. Defense as a theme is doing decently well today. So that pocket is something else that we will focus on. Let's pull up the Nifty Defense as well very quickly and zoom in and quickly check as to what that one is doing. There you go. It's one of the few indices, or probably the only sectoral index sitting in the green with Garden Reach, its top gainer. Okay, I have with me Kush Bora, founder kushbora.com, to speak to us about markets. Kush, what are you making of the move today, and what can one expect maybe tomorrow to close the week off?
Hi, Harsh. First of all, very good afternoon.
Good afternoon.
I think this is turning out to be a buying opportunity. That's what the data suggests from even a near-term perspective. I'll give you a couple of factors for that. Yes, 24,700 support that we spoke of has been broken. I mean, it did hold up yesterday, but today it's given way. And now we're looking at a major support zone from 24,400 to 25,500. Even the put options data suggesting that we might hold up that level. Also, the PCR has gone close to 0.7, which is suggesting that any further dip and we'd be hitting oversold territory. So a rebound is likely around the corner. Also, if you see the markets are quite down, at least the broader or rather the headline names, but the VIX is also cooling off. I don't think there is any kind of panic that is set in the market. So the VIX is also a little lower at the moment. So all in all, I think what's happening is that with the kind of week that we saw yesterday, we're consolidating this week, but with quite a bit of negative bias, more than what one would have expected, and to one's comfort. Also, just to add to that, as you and Neeraj rightly mentioned, no major sell-offs, at least on the index level in the mid and the small cap space. So a couple of things suggesting that yes, this could perhaps well be a buying opportunity. I'm not suggesting a buy call just yet, and the reason why is because we are actually trading at the low point of the day. So once we see any kind of a rebound, I think this could be a buying opportunity with a stop loss around the 24,300 mark or higher levels of 24,800 and 25,000.
Okay, so not as yet, even though the levels look tantalizingly promising. I wonder, Kush, if therefore that leads you to give stock ideas which are on the long side. And by the way, Kush, let's try and see if you can also give us a short idea on the futures today.
Sure. I will. Just give me some time on the short idea for the futures today, but sometime during the show, I will for sure.
Okay.
Yeah, as far as the idea goes, the calls go for the day. LT Foods and AB Capital, these are the two stocks that I have on my radar. You look at the setup for both these stocks, very positive. Weekly structures also very beautiful. AB Capital in particular, if I begin with, then 218 was a good resistance for the last week or so. That's been cleared. The stock is holding ground, marginally negative. In a market like this as well, I think we'll take that as a relative strength. So for targets of 225, 228 with a stop loss around the 217 mark. AB Capital is a long. The other one is LT Foods. Here too, very similar structures, just that the volumes on this one are even more attractive as they are on AB Capital. The mild resistance point was 390 mark for about last 1.5, 2 months. That's been taken out yesterday. The stock is sustaining above that and in the green. And today also the volumes are fairly encouraging. So on the long side, you've got targets of 415 and 430 with a stop around the 383 mark. LT Foods is also a long call.
Okay. Kush, wonder what you make of the defense counters.
Again, Harsh, very similar view as I had, some time ago, which is book profits and look to re-enter some of these names once again. I don't think the dip has been so meaningful to look for a re-entry just yet. You look at something like a BEL, the stock's not even corrected, as of now, but it's gone into overheated territories. So yes, on the other hand, rather, look at an HAL. It did give you that dip from 51, 50 odd levels all the way down up until 48, 50, and it's now giving signs of a rebound. So the dip hasn't really been as meaningful. But yes, I mean, I will look for further buying opportunities, but I'm looking for a slightly more meaningful dip at the moment. Stock like a BEL, even an HAL, on rebound, I would exit partially, hold the rest, and look for re-entry, at slightly lower levels, maybe at cuts of 5, perhaps even 10%. And there is all possibility that, in the coming weeks, you might even get that.
And Kush, quick take with regard to a Fortis Health. Stock is up 7.7%. I know, I mean, numbers yesterday, but this kind of a reaction. Tell us what's happening.
Harsh, on a slightly separate note, it's actually been surprising, this result season. Of course, I don't track a lot of these stocks from a fundamental lens. Of course, you do. But I've been surprised with the kind of reaction some of the stocks who've given good results and not performed, and some stocks which have not given great results and also shot up. It's been a little baffling to say the least. But then again, fundamental stock by Forte. Now, as far as Fortis goes, there's been a very good movement. On a weekly basis, if you see, there is a very nice ascending triangle formation that comes into play. And on the higher side, that resistance level comes in at 735, 740, that zone. It's a very good move today. Stocks come off the highs, precisely around those levels. So if you see 40 odd levels, those levels have been the high. If you get a close above this, I think Fortis is in for a much stronger run from here. So if you have a position, my suggestion would be to continue to hold. This is a very good setup. A trailing stop loss on this one, if you have a position from lower level, would be at 705 levels.
Okay, Kush, stay on. So much more to talk about. The interesting piece today, though, Harsh, to my mind, I mean, there are 3 or 4 names, right? And you will talk about IndusInd in detail, so I'm not going to do that. You're best placed to do. But that is that one stock which has had a very interesting move and a set of interesting announcements. The other one is Interglobe Aviation.
Yes.
And very interesting fundamental thesis in that the reported numbers are great, but there is a bit of a cloud or 2 clouds, if you will, in that the recent fundamentals may not be very good because there's a lot of cancellations, etc. And there's normal talk of the promoter stake sale coming back to be sold is that overhang. So a bit of pulls and pressures, difficult to call that. I thought those 2 kind of symptomized how the trade is today, a bit of indecisiveness.
Yeah, and you can see that from the reaction as well. Despite such a solid set of numbers and the stock being perked up at least early on in trade, now you're seeing a muted kind of move on the stock price, around 0.5% or so in the green.
And IndusInd on the other hand.
Yeah, and IndusInd on the other hand, ironically.
The top gainer on the Nifty.
The top loser and thereafter the top gainer. And has been the case pretty much all through the day today, Neeraj. Yes, so that's the other one. Okay. But you know what? Let's go across. We have a management conversation lined up for you. We have Abhishek Agarwal, Executive Director at Godavari Power and Ispat, joining us. Good afternoon, Abhishek. As always, good chatting. This is Harsh here. I want to, Abhishek, start off by asking you, just sum up how FY25 has been and what the outlook and the strength with regard to FY26 looks like, because you're going up the product value chain slowly and gradually. How's that journey going, and what's the FY26 outlook therefore?
Very good afternoon, Harsh. Thank you so much. So for FY25, I think the ride has been quite stable. There were ups and downs, but it's commodity, so market plays its own role. We were able to achieve the desired numbers as projected for the entire year. Every value segment, we were able to achieve 100% capacity. Although if you compare year on year, of course, the numbers are a little down, but that's due to market fluctuation, nothing serious. For FY26, if we move forward, we have raised our pellet guidance from 2.45 to 3 million. That is because our new pellet capacity of 2 million will be operational end of this Q2. So from that capacity, we're looking at a 0.6 million addition for the FY26. So that's why the pellet volume is a little higher for FY26. Rest capacity remains the same. So, and looking at the current market dynamics, we should be able to achieve what we have, thought of.
Abhishek, give us perspective. So what was softer in FY25 and how likely is that to change, and how quickly is that likely to change?
See, softer, of course, was the steel demand. That's why the entire supply chain, the prices were down almost 10-15% from the peak. In between, due to the imposition of duty on the imports from China and other countries, sentiments changed. So there's an uptick of almost 10% across the value chain. The demand was quite decent. But as we approach the monsoons, the demand is again little sluggish. So I would say FY26 should be as same as FY25, more or less.
So, Abhishek, sorry to come in here. I'm just trying to get this clarity. The volume guidance that I'm reading for FY26 on, let's say, pellets or mining, right, is 3 MT, whereas I think in FY25 you probably did 2.34 and 2.45 respectively.
Correct. So that's why, yeah.
So it can't be flat, right? You're effectively guiding to about a 25% growth in at least those two.
Yes. So that's why I mentioned pellet capacity will be at 3 million tons because my new pellet capacity will be operational in Q2 of FY26.
Okay. No, but is that the capacity or is that the guidance that you're giving that you will kind of do in terms of volumes?
Just to correct, it's the guidance volume we're giving for FY26.
Got it. So it's about a 25% growth that you are giving on both pellets as well as iron ore.
Yes, very much. Because we expect the new mining EC, which is in the process, will be with us by end of Q3. So in Q4, we can see additional volume from mining coming up from Airongri. And plus, we've also restarted a Boratipu mines, which was not operational from last 2 years. So from there, we're looking at a volume of about 0.4 million. So if we put together all three reasons, so mining capacity will be 3 million and pellet, because of the new plant, will be 3 million again.
Kind of utilize this whole capacity.
Yes.
Okay. And how's pricing working, Abhishek?
See, pricing right now, the pellet prices are about 9,500 levels, domestic market. Q4 was about 10,000. But again, you see Q3 was about 9,500. So a plus minus 5% is not a big difference. So depending on the sentiments and the market, demand, the prices are hovering between 9,000 to 10,000 rupees.
So FY24 versus FY25, when I'm looking at the full year numbers, Abhishek, we've not seen significant uptick with regard to top line. In fact, last 3 to 4 years. When is it that we get to see that? Because nearly, as Neeraj and you were conversing, nearly a 20% uptick on your core products. Should that at all lead to an uptick with regard to top line in FY26? Is that likely?
Yes. So the top line for FY26 should be higher by at least 15 to 20% for two reasons. One is my new pellet capacity will be operational. From there, we can see a volume of about 0.5, 0.6 million. So that puts about, a 10% uptake in top revenue. And second is my new structure rolling mill, which we have commissioned in last quarter. From there, we can see a value-added product of capacity of close to more than 1.5 lakh ton will be added this year. So my rolling capacity against last year will be almost up by, close to 40%. From these two accounts, there will be a additional 10 to 15% of top line for FY26.
Okay, so effectively, we are looking at a growth year for FY26 at the very least. And does this continue for FY27? I'm just trying to understand because I don't quite hang off what your expansion plans are currently. If you are anyways operating all of these capacities at full extent in FY26, what happens beyond FY26, Abhishek?
See, FY27, the new pellet plant will be fully operational. So against 0.5 million in FY26, it will be about 1.5, 1.2 million capacity. So straight away, 20% jump will be there from pellet volume in FY27. My mining again will be at full capacity. So against 3 million FY26, my mining will be again about 6 million tons. So it's a complete 100% integration. And parallelly, we are very close to, getting the desired approvals for my new steel plant. Of course, it won't have the type revenue, but yeah, the work will likely start end of FY26 for the new steel plant as well.
Got it. So Abhishek, good growth prospects, assuming that pricing remains stable. Two questions. One is, how is demand per se? We keep on hearing mixed views about the kind of capex and the kind of demand that is happening. So one, tell us how is demand looking currently? And in order to do all of this capex, etc., would you need to raise any further capital in the near term?
First, on the demand side, see, demand, as you said, it was good probably 2 months back. It's a little sluggish right now, but it keeps happening. If you see the entire year, there's a trend where demand will be good for a couple of months, 1 quarter, then it goes down a little bit. Plus, of course, rainy season monsoon is always weak for India in terms of demand. So, but gradually, I feel the demand should come back post monsoons. So it's a part and parcel of the business. On the second side, which is on the capex side, so for the current year, we envisage a capex about 1,000 crores to finish up the current ongoing projects, which is the pellet plant, the expansion in the mines, along with beneficiation, and few energy efficient, capex we have taken this year. That will be done this year. FY27, we are hopeful to start the work on the new steel plant, which will be a greenfield project. So when that starts, so the entire capex now will be diverted to that particular project.
Got it. Okay. Lastly, any new products or product pipeline, anything newer that is getting introduced at your end in the next 12 to 18 months, Abhishek?
Rather, it should happen in next 3 months only. So currently, Godavari steel billets, along with the rolling mill which we just installed, has got the PGCL approval, power grid approval for the mild steel category. Now we have already applied for the certification of ST, which is called high tension category, A350 grade, which is mainly used for transition towers. So the inspection has already taken place last month. We are hopeful to receive the certification and approval by end of June. So from July onwards, we'll be able to offer a complete product range for PGCL products using Godavari billets from RS Path, where the rolling mill is commissioned right now.
Okay. Abhishek, thanks for joining us this afternoon, giving us all of that perspective, and wishing you all the very best for FY26.
Thank you.
All right.
Always pleasure talking to you guys.
Thank you. Thank you. Unicem's result actually flashing at the bottom of your screen. PAT is up at 53 crore versus a loss. Look at the revenue number, 28% higher. EBITDA up nearly 4x at 84 crore versus the 21.5 crore number. Margins at 14.5% versus 4.5% last year. But of course, stock doing very well for itself, 7.1% higher as we speak, some good spike coming in. I'm going to quickly take it across to Kush as well. Kush, a Unicem, that spike in the stock, would it interest you at this point?
If the stock is able to sustain above the 650 mark, then only, because ever since that fall started early or rather late September, there has been a falling trend line resistance that the stock has not been able to cross, although it's taken on the 20 and the 50-day moving average, still under the 200-day moving average. And as I said, while it's just, only just above that, falling trend line resistance, I'm not sure if it will be able to sustain above that. If it does indeed close above 650, then I think this momentum could well continue. And then you're looking at higher targets of 695 and even a 725. So yeah, it's a conditional buy if someone wants to enter afresh. But if someone has a position, then you could very well continue holding on with a trailing stop loss near the 630 mark. Also, while we're at it, if I can give that short call very quickly that Neeraj and I discussed, I think one stock which is in a bear grip for some time, about a month and a half, is VBL, Varun Beverages Limited. Also, if you see the call options data, every time the stock dips, the call option writing actually starts to get very heavy on the downside. So if someone wants to consider a short trade, then VBL is your stock. 460 and about 452 are targets on the downside, and on the upside, keep a stop loss near the 478 mark.
What a strong set from Unicem.
Fabulous. But let's see, we'll try and get the management to try and understand how can this continue. So that is something to watch out for. There's exceptional uptick in margins for sure. So that is one thing to keep in mind. And pharma, I think all forms of pharma, as Varsha did a piece in the morning as well, somehow it's had a very good earnings season. And the last 4 or 5 days as well, I think the reportage from pharma companies has been strong and continues with Unicem. It's a smaller one, but it continues. So that is the other interesting piece. But hey, Harsh, Varun Beverage is on the short side, something that we should keep an eye out for. And when Kush Johnson next week on the same show, we'll figure out if indeed how has it played out as well. Interesting to see a short call on Varun Beverages. But back to basics maybe is what some people believe, and certainly Dheeraj Agarwal, MD of Ambit Investment Managers, believes, as he believes that corporate results have been disappointing. Listen to what he talks in terms of spaces that he believes investors should place their bets on.
How do you pick now? What are the filters that you would apply for that bottom-up strategy? Because, there is no real glimmer of hope from what you're saying in the corporate results either.
No, you have to go down. It's back to basics, right? So when the easy thematic investing stops working, you have to go down back to basics. So you have to look at market share, margins, top-line growth, balance sheet quality, and the balance sheet parameters like ROE and ROC is back, very, very basic research. So it's tough because winners will be harder to find in a tough environment. It's actually easier because it's back to basics. I mean, just one theme running away. I mean, there could be one or two pockets like defense, as Neeraj mentioned, is doing well. The valuations are a bit expensive, but it's a very, very strong theme at this point of time. But in general, you'll find the hardcore bottom-up, basic research and basic analysis will work again.
Okay, So that's the very interesting view coming through. But switching focus, the Adani Group has bettered its overall credit rating and also de-risked its balance sheet to a certain extent. They've pruned debt. Anushi takes us through the key takeaways of what's come through. Anushi.
Right. So now what we are looking for Adani Group in particular is the improvement in their credit ratings. Now across the group companies, if we see what has happened in terms of where Adani Enterprises is, Adani Green Energy is, we are looking at a subsequent change in the ratings for all of these companies from what it was in April 2019 to what it is in April 2025. Just for context, if we see Adani Power also, what was the rating in BB Plus has now changed to AA, so double A. So that's the overall picture that we are seeing in terms of where the credit ratings are concerned for some of these businesses. Of course, rating change across the board that we are looking at for the group companies. But apart from that, it's the cash book and the balance sheet which is in focus. Now, if you are looking at the cash book which is there, they had a cash balance of about 9,586 crores. This in context to the overall gross debt we are looking at is at 56,931 crores. So if we take the ratio also between that, so that translates to about 16.84%, which is much higher than the minimum requirement of 5% that is there. So that is something which is interesting that for the Adani Group companies that we are looking out for. In fact, company has a comfortably de-risked its balance sheet over the course of these last few fiscals that we are looking at. But apart from that also, in terms of, let's see how the breakup is in percentage of total debt. So PSU banks about 18%. USD bonds 23% is what we are seeing. Along with that, NBFC and FIIs have about 25%, while others like DIIs and private banks have a comparatively lower mix in terms of where the long-term debt emits from, and global international banks about 26% is the kind of ratio that we are looking at. But it's the EBITDA overall which has been impressive for the street, especially this is with an overall EBITDA standing at 90,000 crore that we are looking at. Of course, key contributors being something like Adani Power with almost a 24,000 crore of EBITDA that we are looking at. Adani Enterprises there as well, but even Adani Ports is in focus here, seeing these kind of higher numbers that we are looking at. Yeah, that's at the level of 20,471 crore that we are seeing. What's kind of fueling this growth if we are looking at? So transport and cement, both of these have recorded growth. Cement in fact up over 69%, almost 70% is what we are seeing. If we talk about the core infra business which is there now, the incubating infra has crossed about $1 billion of EBITDA, while we talk about the other vertical which is there, that's Adani Ports, they have crossed $2.5 billion of EBITDA as we speak. So it's the improvement in terms of where the margins have concerned. We are looking at a consistent improvement in the margin profile as well. Now, in terms of how it has performed in comparison with the Nifty, Adani Group has delivered returns that are 6% higher than that of Nifty 50. So, investors are also looking forward to Adani Group's performance. We've seen subsequent improvement in across all the key Adani stocks which are there, and that is why they are in focus. It's the improvement across the key verticals and the metrics that we are seeing. Back to you.
Okay, so that's the view coming in with regard to how, or rather the metrics coming in with regard to Adani Group. Let's quickly take a break though. On the other side, what we're going to do is we'll get you the key stock of the day, and we'll also start talking individual names, especially the ones that are buzzing, something like a Colgate, something like an IndusInd, some perspectives coming your way. Stay tuned. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers. Welcome back. The numbers for Emcure Pharma on your screen. The pharmaceutical space a buzz, and some of these numbers coming thick and fast at you. 3.5% higher. Let's pull up the stock as well. There you go. You're seeing a sharp spike on the stock. Profitability surging. 189 crore is the PAT number for Q4. I'm just trying to pull out what the PAT for Q3 was at, 156. So even on a QOQ basis, looking very, very strong. That EBITDA surge also is around 30% and margins doing very well for themselves. 19% margin number. Just gets better for Emcure. So a very steady set, and obviously you can see the spike and the reaction on the counter. Also joining us at this point is Avinash Gorakshekar, Director at Profit Mart Securities. Avinash, I wonder if you have a view with regard to how pharma is doing and whether you have any favorites within that pharma pack.
So I think clearly we are positive on the large cap, pharma basket, especially companies like Lupin, Sun Pharma, Torrent Pharma. I think clearly, from the newer categories like you mentioned, Emcure, we don't have a coverage. But I think, the kind of product categories Emcure caters, I think largely, they have a very dominant market share. And I think this quarter seems to be a very good quarter for them in terms of margins, in terms of top line growth. So we'll have to wait for the management commentary and the kind of guidance they would be talking about for the coming financial year. But I think numbers are definitely better than what the market expected. And that's why, you're seeing a very strong reaction to the price. So I think it's better to wait and watch, but definitely I think these numbers are clearly a precursor of the kind of performance they have done. And I think hopefully the coming year should also be a stronger year.
And what do you make, Avinash, of some of the other earnings that have come out? You had the likes of an IndusInd also come out with numbers. I want your quick take with regard to what you took out of the numbers. Do you believe that the pain is behind in terms of at least the recognition of all the stress that has played out?
No, I think my guess is Harsh, would prefer to be a little cautious on IndusInd Bank, considering the fact that, now reports have come in that, of course, these are unconfirmed reports saying that some employees were also involved with the fraud. So I think, unless and until there's a proper investigation, I think, just to jump on and to buy the stock would be a little risky, because clearly markets and most of the analysts would be looking at a very stable performance, at least in the June quarter. I think, last time, I believe before the business outlook was shared, the management clearly had indicated earlier that, the fourth quarter could be a normal quarter. Things are under control. But I think when you saw the fourth quarter numbers, I think, the market was horrified that there was an operating loss. There was a huge kind of write-off. So I think, these things are going to keep the stock under pressure. Maybe today, the stock is up. But if you ask any kind of portfolio manager or analyst, I think the comfort level is definitely not there. So maybe at least another couple of quarters before we see, the recovery happening, because clearly I think this is going to be a big investigation. And I think, obviously in the analyst call, there could be many questions which the management would have to answer.
Remedies is the other one where numbers have come out. And again, the top line has dipped below the 400 crore mark. The first time in nearly 10 quarters that has happened, except December of 2022 when the top line was at 399 crore. So pain over there as well. You can see the sharp reaction on the stock price, which is on your screen. Profits have turned into losses, and the Q3 loss number seems to have just increased or expanded in Q4. So some bit of pain coming through with regard to an Indoco Remedies on your screen, 7% lower. But time for stock of the day. Colgate-Palmolive India is that one. Stock has slipped again on the back of Q4 numbers, 6.5% days low for the stock. Mahima here, we're trying to break down both the numbers. And Mahima, what exactly, in your opinion, is Colgate facing at this point? Why isn't there growth?
Right, so oral care as a segment this quarter has not done well, even if you compare to its peers. Dabur Care saw a degrowth of around 5% in terms of its oral care business. HL was the only company which saw a growth in low single digit when it comes to oral care. So that is one of the reasons why Colgate has seen pressure in terms of its top line growth. Revenue was a slight miss when it comes to estimates. Otherwise, numbers were largely in line. Muted numbers were also on account of higher consumer promotions that have taken place, and that has also impacted the bottom line numbers. In terms of volumes, likely volumes were flat for the entire business, and there was a negative pricing growth of around 1 to 2%. Soft urban demand continues to weigh on the top line, and in terms of competition, that has also intensified in this space. As per the management, the oral care campaign and movement that they have been carrying out is yielding results, and according to them, first half is going to be better in terms of the top line growth. In terms of numbers, revenue was down around 2%, EBITDA was down 6%. Margins, however, were better as compared to what the street was expecting. They came in at 34.1% versus that of estimated of almost 33%. Net profit was down 6.5%. EBITDA was also down due to an uptick of 8% and 7% in employee expenses as well as advertisement expenses respectively. And lastly, as I mentioned earlier, also peers as compared to Colgate, HL's oral care saw a single digit growth in terms of volume, but Dabur oral care was under pressure and saw a degrowth of around 5%. So oral care as a segment has not done well, and which is why the same impact we've seen in the earnings of Colgate as well.
Okay, so that's on Colgate. Thanks for that, Mahima, for breaking that down quite comprehensively. Avinash, what do you make of the numbers for a Colgate?
No, I think Harsh, numbers have been quite disappointing. As Mahima pointed out, the entire sector is underperformed. I think if you look at Lever, Dabur, and now Colgate, my sense is that this kind of profit growth is not going to excite the markets. And I think if there is no sustainable and strong revival in earnings growth for Colgate, hopefully in the current year, then I think the stock could possibly see further selling pressure, considering the fact that they have only one business to depend on. And if this segment is going to underperform, then I think the markets are definitely not going to like it. I think even at the current odd levels, valuations are not very cheap. They're fair to expensive. So I think, investors can hold on. It's a blue chip stock. It's got a lot of cash on the books, has a dominant market share. But unfortunately, the market has not grown to the extent what investors were expecting. So we would prefer to avoid it. No fresh buying suggested at these levels.
These levels, Kush, what's your take?
Well, definitely a wait and watch. At the moment, it's coming at the 2480 kind of a 61.8% retracement that the stock had seen once the rally started from 2300 odd levels. But with the kind of dip that it's seeing, will not be surprised to see it retest the low levels of 2330 that it had made. If it does indeed hold above those levels, then at best it could go into a sideways time-wise consolidation. But I think any kind of major spike would perhaps be missing, because the double top formation near the 2750 mark and then the breakdowns from there on is not a very healthy sign. So look for support near the 2330, 2400 zone. And as I said, at best, perhaps the stock could go into a sideways consolidation mode if that level holds.
Okay. Okay. Then the clutch of numbers which have come out, which have, the companies have delivered good results. Some of the stocks have run as well. So 3 days ago, there was Banco Products, which came out with a very good set of numbers. The valuations are okay, and the stock has done well over a 5-day period. Today may be down today. Then Viatech Vabag today. There is, of course, VRL Logistics, which has done well on the numbers, and I believe the stock too has done rather okay. And I believe Unichem Labs, which came out just a while back, must still be up in the green because of the kind of performance that it gave. So keep those stocks in mind. A bit of a cool off, but still in the green. Avinash, did you get a chance to look at any of these numbers?
No, I think Viatech Vabag, I think is interesting. I think Neeraj, they are into the water space. They are into EPC. They are into water pollution. And I think today evening they have an analyst meet in Bombay. So I think numbers have been pretty robust. I think 100 crore PAT in the fourth quarter compared to 75, 76 crores. And I think overall the order book continues to be very solid. I think they've also given indication that some Middle East orders are expected to come in, which are large orders. So I think Viatech Vabag can definitely be an interesting bet, because considering the fact that a lot of investment is expected, from the overseas markets, plus domestic markets are continuing to do well. So this could be a good kind of capital goods and a kind of a water infra kind of positional play. I believe FY26 also should be a lot better. So there's no doubt. As far as Banco products are concerned, it's a small auto ancillary play catering to the radiator market, and I think it's been a niche player. Despite the fact that the stock is corrected, I think profitability, in this fourth quarter and the full year has been quite very strong. And I think hopefully, if the commercial vehicles and the tractor and the the large vehicle volumes increase, because Banco has got a large presence here, that would definitely benefit them. So I think Banco definitely deserves to be bought on a decline. And Viatech definitely, if it corrects, say below 1500 rupees, I think worthwhile to add in your portfolios.
Okay. And in fact, we spoke to the management of Viatech Vabag, who spoke constructively about the kind of growth rates going forward. Here are a slice of that conversation that he had with us.
No, I think our smallest, I would say our averages have gone up, and we don't now generally take small ticket size. We are a big player. We are amongst the top 3 companies in the water sector globally. So our ticket sizes are significantly going up. You saw even in this year, we took an order which was almost $370 million along with our consortium partner. We have already given a preferred bidder status for about 3,000 crores of orders, which in the next couple of months will fructify. These are again a mix of medium size and large size ticket orders, and all the orders that we are looking at today. And our focus area is mainly Middle East and Africa, where the ticket sizes are much bigger than India. So our ticket sizes will go up as we move forward. We will look for larger, more technically complex and marquee projects with marquee customers.
All right. It's looking like a bit of a painful afternoon, and the only thing that's working is results that are good. Companies that have posted decent results are seeing some kind of an up move, and then there are outliers here and there. Tata Tele, for example, has been a winner right since this morning because of reports that Tata Sons is going to infuse more capital to tide over the AGR pain. News flow in Shipping Corporation of India, Garden Reach also with new orders coming in. So those are some outliers, but overall some pain in the street. Another stock though that has been soaring in trade is TeamLease. Let's see if it's still held up. So numbers, there's some companies which have decent set of numbers. TeamLease numbers was quite a positive surprise, isn't it, Puneet?
So definitely compared to its peer Quest Corp, this was a strong quarter. The company mentioned that in this particular quarter the headcount was down by roughly 7,500 personnel, but that was called out in the previous quarters because of one specific NBFC account that has decided to insource that function which was earlier outsourced. Apart from that, the company has mentioned that they are expecting the specialized staffing business, which is largely led by the IT peers, will be doing much better over the next year or so. They've also said that the specialized staffing business currently has 7.7% EBITDA margins versus just 1% margins in the general staffing, which is the traditional business of the company. So definitely that is something to watch out for. They've mentioned that 60% of the specialized staffing is now part of GCCs, which is for the IT functions essentially, and that will continue to grow in double digits. That's what the company is expecting. We also spoke to specifically the management of the company, Mr. Ramani Datti, who is the Chief Financial Officer at TeamLease, and she mentioned about this insourcing function, which led to the headcount reduction in this particular quarter. Listen into that conversation.
This quarter, we have already indicated that there is a planned absorption by a large NBFC client. So that's the main reason why we took a dip in headcount, because barring that one client, overall across all other segments, be it FMCG, retail, e-commerce, quick commerce, pharma, telecom, we are seeing good demand and good open positions. So overall this year, excluding BFSI, we have actually added about 32,000 net new employees in general staffing business. However, because of the hit in with this particular NBFC client, it has come down to 27,000. And IT front, while the IT recovery is slow and there we haven't added any headcount, with operational efficiency and better mix of GCC, we have managed to expand margins slightly in our specialized staffing business. HR services Q4 seasonality wise is a good quarter for us because most of the university and education billings happen in this quarter, and that also has contributed to a substantial jump in profits for this quarter.
Okay. One more stock that we're talking about is Astral Pipes, and we have with us Puneet, who's been tracking that company as well. Another solid set of numbers.
Well, definitely, and the key reason I think why the stock price is up also because of relative outperformance versus peers. Now, we also had the Prince Pipes numbers coming yesterday. They reported a fall of 40% in EBITDA. On the other hand, Astral reported a 3% growth, and that was also outperforming the peers like Supreme Industries that came in with the results a couple of weeks ago. And I think that's one of the key positives for something like an Astral. Now, over the last 3 to 4 quarters, PVC prices were very volatile, which is the key raw material for piping companies, and this quarter as well there was some volatility, but not as persistent as the last couple of quarters, and hence the company in this volatile environment has been able to deliver almost flat margins as well as a flat growth in terms of revenue as well. And I think the street is kind of liking that because we might be in the bottoming of the cycle of PVC prices, and FY26 could be a better year than FY25. That's what the management has also said. Based on the PVC price volatility, over the next couple of quarters it should subside as well. And we also spoke to Mr. Hiranand Savlani, who's the the CFO of the company. He did mention specifically the impact of drop essentially of the polymer prices and what it could do to the business going forward. He's expecting the next couple of quarters to be something to watch out for, and how the company is actually protecting its margins in this particular time frame. That's the important part. Listen into that conversation.
You see on a yearly basis, the polymer price will drop by close to about 18%. So when there is a drop in the polymer price, our industry is the pass-through industry. The very same day we pass on this drop to the market. But if you see the number, in spite of so much of challenges, we are not able to maintain our volume growth, but also we are able to maintain our EBITDA margin. In this difficult time also, we have grown our GP also by 1%. So clearly you can see when the industry was degrowing by 5-6%, our company was able to grow 3-4%. So clearly we have gained the market share in this difficult time. Secondly, whenever the polymer prices are dropping, there is always the inventory losses. That in spite of absorbing that inventory losses, we were able to not only maintain our EBITDA margin, but improve our EBITDA margin on a year-on-year basis. So that was also the another good thing about the company. So all these things suggest that now the worst is behind us. Whatever the bottoming out was to take place in the polymer price is almost going to be done in this quarter. And from here on, some stability will be there and some improvement into the polymer prices will also be there. So most of the loss was because of the destocking by the dealer and distributor community. Normally, dealers and distributor both put together sit with between 6 to 8 week inventory. Now they have come down to almost 2 to 3 weeks inventory. So that has given us the big dent, not only to us, but the entire industry. But it is one good thing about Astral is that we were able to maintain our margin, while other players in the industry, most of the players have lost almost 25 to 40% kind of EBITDA last year, while we were able to maintain our EBITDA.
Okay, another winner from Astral. Kush, Bora, Avinash, Gorakshakar with us. Kush, any of these two that you're tracking, Team Lease and Astral that we've just discussed?
Astral's a bit interesting because the stock was under a bear clutch for a very long time. For the last about 2.5 months, it's seen some consolidation and it's now giving a breakout. Of course, it's on the back of the numbers and the commentary that you just laid out. But the stock closing at the high point of the day, I think that's a big positive. Some supply zone near the 1500 mark, but that's still some distance away. So if you have a position, continue to hold. If not, you could still make one for targets of 1500 and about 1570. And a stop loss for this one comes in close to the 1380 mark. So good moves on this one, volume back. And as I said, on a day like this, if it's holding ground and closing at the high point of the day, that's a big positive.
Okay. All right. More on, I think, in a sense, whether it's buzzing or not, or down or not, it's definitely the stock of the day in various senses of the term. I'm talking about IndusInd Bank. So statement has come in from Ashok Hinduja, the promoter. The stock has actually slid a bit after that statement. He says, and I quote, "I express my continued unequivocal trust in the chairman and board of directors of the bank. This shall be a new dawn with a sanitized slate to regain position bank enjoyed for many decades. IndusInd Bank's regulator stance in addressing issues in an orderly manner with suitable guidance is commendable. Should any further equity be required, IIHL remains committed to supporting the bank." I think that's important. He says we remain committed to supporting the bank as well. In fact, let me go across to Harsh, who's been tracking the story closely for the bull versus bear case. Harsh, good luck with the bull case on it. I suppose how bad can it get is the first thing in the bull case?
I'll take a cue from what Mr. Hinduja said to support my bull case to start off. Of course, let's look at the stock price for just a minute before I start. It started off around 4% lower, thereafter staged a full recovery, touched the day's high, and thereafter we've seen a flattening in terms of the stock price. And this is despite weakness on the index. So that must be kept in mind, and that perspective must also be taken. But stock doing decently well, 1% higher in trade today. Let's talk about the bull versus bear case now. And I'll take a cue from Mr. Hinduja. He believes that the larger negativity, the kitchen sinking, seems to be done. Commentary seems to suggest FY26 is going to be a fresh start and bullish with regard to FY26. Believe that books are now completely cleaned up. That's what the commentary seems to suggest. But analysts still building in risks. They believe that issues will likely emerge and there will be some bit of drag, especially in FY26, of everything that's played out in FY25. So that to be kept in mind. Now, the second piece is with regard to how your microfinance has played out. Growth has been calibrated in this quarter and slippages have improved when I'm looking at it sequentially. But MFI issues within Bharat Financial have faced consistent problems. So Bharat Financial has faced consistent problems. MFI has been a key concern for IndusInd over the years, and that continues to be a challenge. So that's where the bear case lies when you're looking at it more objectively. Let's look at the third piece, which is liquidity and capital adequacy. For the moment, there's no concern with regard to that. So it allows good capital, well capitalized, good amount of growth expected, at least from a capital perspective, but that's not coming through. Growth currently is absolutely absent. You've seen negative 6% YOY growth on the balance sheet at the start of this or last financial year that guided for 18 to 23% growth. All of that is now behind, and growth is absolutely absent. You want that growth picks up because that will reflect confidence that the management has in the business. Change in leadership, that may lead to a bit of re-rating as well. That could be a bull case, but it has to be a change for the good. Someone from the private sector coming in could well be construed very, very well. There's a fundamental concern if a PSU banker is appointed. That will mean that the RBI is being cautious, treading with caution, and it will not be taken well by the street either. And this re-rating of the stock in terms of valuation may be justified. Brings me exactly to that point with regard to valuation. At this point, it's well below average. At 0.8 times 1 year forward, the price to book definitely looks tempting. But overhangs, processes, asset quality, leadership, all of these come with that valuation. So something to be kept in mind. How many of these overhangs can get solved and at what cost will be the question. Last off, what are analysts looking in terms of the bull versus bear case? You have a Macquarie, a Jefferies, a Bernstein, all three of which are positive on IndusInd. They've held their target prices. They've not downgraded the stock materially. Jefferies has reduced its target price by 10% thereabouts, but 920 being that target price, not looking bad. But other than that, there's been a slew of downgrades and target price reductions across the board that we've seen on IndusInd.
I find the point about a PSU banker as a negative quite interesting, because it's also likely. One would think even the reverse could be true. Maybe RBI taking a firmer handle on it could be seen as a positive. But SEBI is also in the fray. In fact, the SEBI chief at a function today, at an event today, made a statement saying that SEBI is looking into any egregious violations made in the IndusInd Bank fraud incident. Listen in.
Board yesterday said that the Mint has submitted its report to the government. So any step that SEBI is taking on that and regulatory agencies?
No, I think the RBI is looking into that. Whatever the SEBI has to do in relation to whatever SEBI's remit is, SEBI is doing.
Avinash, it's a saga that refuses to come to a close, happy or sad, and more likely that it's continuing in a way that is not very beneficial to the minority shareholder at the very least, or all forms of shareholder. Now, my question to you, Avinash, is this: that if indeed it goes the RBL way, when there is a PSU banker coming at the helm, and we know what's happened to RBL since then, right? It's 3 years out. We're probably now starting to see signs of stability, if at all, but it could take an amount of time, right? So if that is the way this is headed, if so, and if you are a holder of an IndusInd Bank shares right now, would you still get out of it, or would you believe valuations are now comfortably baking all negatives in?
No, I think, Neeraj, my personal view is that I would like to get out because, frankly speaking, as you rightly mentioned, the negatives don't seem to be ending. And I think this seems to be a bigger kind of, fraud or, scam. I think now no one was aware that even, as the company reports suggested that some employees were involved in this. So I think unless and until we get more clarity, I think the most important thing is now to regain the credibility part, because I think for a bank, this is the most important aspect, both from the depositor, both from its customers' point of view. And I think this event has not happened all of a sudden. I think it was initiated a long time back, and I think now all these developments have come to light. So my sense is that the coming 1 or 2 quarters are going to be equally challenging. I don't think things are going to drastically change. It will take a long time before confidence is rebuilt. And I think most of the analysts who are penciling a normal growth, I think, clearly, I think what comes in the April to June quarter is going to be very important, because I very clearly remember initially when the derivative loss was reported, I think the management clearly hinted that the fourth quarter would be normal. everything is comfortable. The business outlook was also not very scary. But I think now with these numbers having come out, I think at least it's very difficult to believe whether this all this developments will be completely cleared in the next 2-3 months. So maybe till September, I think it's going to be a little volatile period for the bank. So it's better to exit. I think you could see lower levels. I think today the stock is up, but my sense is that fundamentals would definitely be believed only when the credibility is restored, and it would take a little more longer than what the market expects.
Okay. All right. So IndusInd Bank, no, stay away stock, 1.5% up. Is there a short-term trade here, Kush Bora, where angels fear to tread? Should the brave heart go as far as IndusInd Bank is concerned?
I mean, if any of those bravehearts invested in Idea or a Yes Bank or even an RBL Bank for that matter, they could perhaps.
You know who you are. So, okay.
Yeah, absolutely. No, my idea is, don't go, into such a risky trade. We've got lots of other good bets. And as I just mentioned, Yes Bank, RBL Bank, when the market doesn't like the corporate governance side of things, the price action usually takes years to sort of come back. So, as Avinash rightly said, if you have a position, best to get out. Just let the event play out, and we'll see, how the prices react. At the moment, it's a complete no-no from a technical standpoint.
All right. You know what? We're going to slip into a very, very short break. Some, of course, views coming in thick and fast, but we'll slip into a short break. On the other side, we'll continue to take views. We quick thank you to both Kush and Avinash for joining us and giving us those views and perspectives. But on the other side, we'll continue to get you individual stocks, action, and views. Stay tuned. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers. Welcome back. Thanks for staying with us. A couple of earnings coming through as well. While we were having that chat, you have something like a Subros. Let's look at where the stock is at this point. But a decent set of numbers coming through on Subros. You can see that spike and a bit of a cool off on that one. Asantha Tech also is the other one in focus on the back of numbers. Let's quickly pull up that one as well. Very similar chart pattern. Auto Ank, Tamanna, has been one of those which have been in focus for various reasons. And some of the Auto Ank numbers, at least the two that's come out today, they look quite impressive. So looking like a decent set overall coming in from an auto perspective.
Yeah, auto will be in focus as well. I don't know. I mean, there's a new Tata Motors launch today, and
yes.
we'll see what's happening there. It's not a convincing story. Autos basically at core, so then auto anks can go only that far beyond the point. So maybe a better play would be auto anks, and that's why you're seeing Subros numbers you're talking about. In the trade was also okay. I don't know. Sudeep, I'd like to know your view on whether you think that the auto story is convincing enough, that there is some turnaround around the corner that we haven't seen yet.
Well, as far as I'm concerned, I think Auto Ank is a better story, and there are multiple reasons. Look, if you're an automobile company, for you to move from ICE to EV is a huge process. Pretty much everybody is trying it, but one doesn't know who will succeed, how things will pan out, and all that. But look at fundamentally, as far as Auto Ank is concerned, the transition from ICE to EV is not that difficult, and most of them have already seamlessly done that. The opportunity size also is significant because they are not only catering to domestic OEMs, but they are trying to cater to global OEMs, and some of them have been extremely successful in that. Definitely there is a significant cost advantage. We have the skills as well. Some of the Indian auto anchors have acquired businesses all over the world and become world class. So auto anch has its own life. I think it's much beyond Indian auto OEMs. So we have to look at them in a slightly different glass. So yes, auto anch is something which we can look at. You have to be, of course, selective, and of course, there is this tariff uncertainty which is looming around the corner. We have to keep all that in mind. But between auto and auto anch, definitely auto anch.
In that space, Sudeep?
Yes.
Top picks in that space, favorites in that space?
Well, Motherson, Sambandhana Motherson continues to remain favorite.
Okay.
There are others. Even this company which is coming out with an IPO, where the IPO is on, I think Bellrise, I think it's a very good story, and I am definitely advising investors to go for it.
Rajesh, what about you? Are you looking at this space at all favorably?
Yeah, so Nifty Auto, it's a mixed bag kind of behavior in auto space. Some of the stocks are still looking attractive on the near-term, short-term perspective. So I think from auto on the two-wheeler space, Bajaj Auto is looking attractive. That stock is looking promising, as stock is comfortably holding above 100-day moving average. So I think Bajaj Auto may extend its gain, and possible target towards 9,200 we may see. On the auto ancillary space, I think one can look at Minda Corp. That stock is managed to give breakout of weekly downsloping channel. So I think if it continues to hold above 480 kind of zone, so here we may see some traction towards 550, 570 zone on the higher side. So there is a sign of reversal on Minda Corp after a correction. So this stock can be looked at. And again, on the tire space, I think one can focus on Apollo Tire. That stock is looking promising. So Apollo Tire can extend its gain as the stock is consolidating at higher band of this rally and sustaining about 200-day moving average. So next target for Apollo Tire would be around 525 to 530 on the near-term perspective. So this stock is also looking attractive with stop loss of 478.
Okay, Apollo Tire, Bajaj Auto, some picks there. But Rajesh, what are you making of the index? I mean, quite a painful afternoon, to be honest. But 24,600 holding up for now. What are the next levels you're seeing?
So it's a volatile market, and in today's corrective move, Nifty almost tested its 20-day moving average. Very sharp recovery we have witnessed, especially in last 15-20 minutes from those level. So 20-day moving average is placed at around 24,450, 470 zone. So I think that level needs to keep as a stop loss those who are near-term trader on the Nifty. If any breakdown happens below 24,450 zone, then we may see further more correction in the market, and then downward trajectory we may see towards 24,100. But looking at the near-term, short-term structure, I think till these levels are intact, I think market will try to attract some buying action around those levels. But on the higher side, the major supply zone is placed at 24,750. Once Nifty crosses above 24,750, then we may see some short covering action. But for some couple of days, I think there could be some consolidation in range of 24,450 to 24,750. Bank Nifty has attempted sharply in last half an hour of trade. And I think now it's negotiating with its immediate call concentration area of 55,000 level. So if at all Bank Nifty crosses 55,000 level in today's trade or in next trading session, here we may witness some short covering action, because Bank Nifty has shown some bit of recovery and the sign of reversal from a current level. So 55,000 needs to watch closely. If we crosses, then Next target 55,400 we may see in the Bank Nifty at this juncture. 54,700 needs to keep as a stop loss if you have bought at the current level for Bank Nifty.
54,700 at the stop loss for Bank Nifty, quite a range there. I just want to get a sense of what your picks would be at this hour. You have about 20 minutes left to go on trade, Rajesh. What are you looking at?
So one long, one short. On the long side, Clean Science is looking very attractive. The way stock has recovered after a brief consolidation on a weekly chart, there is a breakout of contracting triangle on the weekly chart. Stock is now trading above 100-day moving average. Chart pattern indicates that these stocks can extend its gain, and possible target towards 1355, 1370 we may see in the near term perspective. So buy and accumulate would be the strategy for this stock. Though stock has moved sharply in last 5-10 minutes, so one can buy and accumulate this stock. On the downside, we are suggesting stop loss towards 1285. Target would be 1355 to 1370. On the short side, ONGC is looking a little weak. Stock is struggling to cross its down sloping trend line on the weekly chart, and now stock slipped below to its 20-day moving average. So I think until the stock not crosses about 248 zone, I think here we may see some more pressure. Possible target on the downside we can see towards 228 for ONGC. So one can go short in this stock with stop loss of 244.
Some stocks which are perking up in trade, by the way, and India Glycols is one. Should try and pull that one up. Some sharp moves in the last few minutes of trade, so 6% higher for that one. So good solid move. Interarch Building Products is actually surged quite significantly, so that's also something you want to keep an eye out for. Megasoft amongst others which have done very well. But one stock, it may have cooled off a little bit from the highs of the day, that is VRL Logistics, but it's shining in Q4, bolstered by high margins following the kind of performance that Delivery delivered as well. What's leading to this growth? Anushi Johnson to talk a bit about that. Anushi, off the highs of the day, but nothing takes away the fact that the quarter looked pretty solid.
Right, it's been a strong quarter for the business, especially on the margins front. If you look at now, while they did see about a 5% of a revenue growth, it was 940 basis points of an improvement in terms of margins that we are looking at the levels of 23% as compared to 13.7% of last year. Net profit also saw more than 3 times of a jump from 22 crores last year to about 74 crore. Now, what is the reason as to why we are looking improvement in terms of these margins? Firstly, despite freight costs, now they have seen an increase. So discontinuation of lower margin business as something that has led to this kind of an uptick that we are looking at in terms of margins. So even overall fuel cost, if we are seeing, that has declined by about 4% on a year-on-year basis. However, this discontinuation of low margins did have an impact in terms of the volumes which were there. So that is on one negative that we are looking at. In terms of where the operational performance is concerned, so they did see about tonnage delivered to the likes of 1006. This is of course in the 3 units that we are giving. So here it was like a minus 11% of a downtick that we'd seen, and capacity addition also saw about a minus 1% of a downtick. But again, the story builds on the expansion story in terms of where the margins are concerned, and that's why the stock is in focus today.
Okay, thanks Anushi, thanks for that. Sudeep, logistic players this quarter, and good afternoon of course Neeraj here, but logistic players this quarter, I mean some of them have delivered some good numbers. I mean, is this the start of a decent move for logistic companies, or is it wrong to generalize it?
No, Neeraj, you're right. I think I've been waiting for quite some time. In fact, Delivery is one stock which I always liked, but unfortunately post-listing they have not performed. Operationally, they were not doing well. I think finally we are seeing signs of operational significant improvement. And look, partial truckload is one segment where now they have started making inroads, and the performance in PTL was really good, surprisingly good this time for Delivery. And that I think helped them improve performance. Of course, the express parcel service business, which is another big segment, the performance was not up to the mark there. And with e-commerce picking up, e-commerce deliveries picking up, that also is expected to pick up in the near future. So yes, I'm also seeing a trend of things improving in the delivery business. Of course, VRL Logistics, I think they're clearly focusing on margins as opposed to the revenue or turnover. And I think that's a good thing to have happened. I think even there, I think the loads are going full, and that is helping them increase the margin and operate in a much more efficient manner. Let's hope and pray that this continues for the sake of this sector, because they've been suffering for quite some time.
So that's on something like a VRL Logistics. Rajesh, wonder if you have a technical view on this one.
So after today's move, stock has managed to give breakout of its previous swing high of December 2024. So I think on VRL now, if it's sustainable 580, 575 zone, I think some furthermore follow-up buying action we could see in the near-term perspective. So at this juncture, we suggest to keep stop loss of 575 if you are already long in this trade. Looking at the momentum on the near-term chart, I think sooner or later there could be a breakout above 610. That is the major supply zone for the stock on the near-term short-term chart. So if that breakouts succeeded, then next target towards 640, 645 would be there for the stock. So I think, yes, one can hold the position with stop loss of 575.
The only thing really which is unassailably working in the markets for the last few days and continuing today is defense. Defense stocks still on the rise. Look at a Garden Reach and what's happening with the Garden Reach, 9.5% up. Started the day with news that Bangladesh has struck off one of its deals of $21 million. But then Indian Navy, there's an order from the Indian Navy that they are likely to bag. One way or the other, Garden Reach shining, so is Sola in, Cochin Shipyard, Paris, the whole lot of them. I mean, Rajesh, is this a trade that you'd still look at?
Yeah, so most of the defense stocks are doing good, and the Garden Reach, the way stock managed to give a breakout on the weekly as well as on the monthly chart, and now stock is almost trading at the all-time high trajectory. Here we could see furthermore, upward journey for the stock, as very strong buying has been seen in this counter in last couple of week from the recent swing low of around 2000 level. So I think if it continues to trade above 2620 2640 level, the next target we can see towards 2950 to 3000 kind of zone for Garden Reach. So I think, yes, one can buy and accumulate this stock. Very strong chart structure, series of higher top higher bottom formation across all time frame. Stock is showing bullishness on the daily chart, very strong breakout of rounding bottom formation. So I think, yes, all parameters are suggesting that we may see target towards 3000 going forward.
Target towards 3000 going forward for Garden Reach. You'll buy right now at these levels, or you'd wait for a dip?
Have already initiated the buy on this stock, and we have projected target towards 2950 to 3000 for this stock on the short term perspective.
Hey, wow. Sudeep, what about you? Are you feeling that gung-ho about defense even right now, and which would be your favorites here?
Well, I'm very cautious on defense. I think there's no fundamental problem with the companies or their performance or the order inflow for that matter. I mean, all this is great, but the valuation definitely looks rich. And if you are a long-term investor and looking at a 3 to 5 year kind of time horizon, maybe yes, you can enter. But if you're looking at a shorter time horizon, I think the valuation leaves very little upside movement possibility in the medium to short term. As far as the overall defense pack is concerned, we like defense electronics, and BEL, Bharat Electronics, has been our favorite for quite some time. I've been recommending that for almost a year. And I think, post correction, it has recovered very, very sharply. It serves, all three arms of the Indian Armed Forces, which is Air Force, Army, and Navy. And the opportunity size is significant. The today's warfare requires electronics, and its presence is absolutely everywhere. export opportunities are also coming, and they are moving into adjacencies like metro rail networks. And Bharat Electronics, above all, has been a strong balance sheet and efficiency in their operations have been commendable. So, under these circumstances, a re-rating of this counter is possible. It's already moved up quite a bit, but still, if you have a little patience, it's worthwhile getting even now, because we believe that a re-rating in this counter is possible.
Re-rating in BEL is possible, says Sudeep. Well, Fortis is another stock that has been buzzing in trade on the back of Q4 earnings. Earnings actually came in yesterday, but brokerage notes as well as management commentary keeping the stock buzzing. Varsha, what's working for Fortis?
Yeah, so as you rightly said, so yesterday company came out with its earnings, but the numbers were in line, but it's the management commentary that is, because of this, the stock is buzzing. Let's see what management has to say. So they're expecting a margin expansion from current levels. Revenue growth is expected at 14 to 15%. RPOP, that is the main thing when it comes to hospital, that is average revenue per occupied bed. Growth is expected there to be around 5 to 6% with balance coming from the volume growth. They're also expecting 2% increase when it comes to profitability. And international patients, if you see, to remain stable at 8% of the revenue, and they're actively looking when it comes to acquisition opportunities. They've also acquired facility that will add 228 beds to its network and increase its presence in the Punjab region. Overall, if you see on the brokerages, let's see what brokerages are saying. Nuvama has retained buy with target price of 770. They believe that the company is amongst a few players on a margin ascent trajectory over next few years. One of the reasons is because they are going for the brownfield project or the brownfield expansion, which will aid profitability versus greenfield expansion. And Agilis, that is their diagnostic arm, is poised for a recovery. Diagnostic revenue growth likely to drive margins to 25%. Nomura has also maintained buy with target price of 700, and they say that hospital, there will be continued growth when it comes to hospital, and diagnostic margin will rise. Capacity addition is on track, and they plan to add a total of 1,976 beds over FY26 to 29, which will be the next growth driver when it comes to Fortis, according to Nomura. And majority of this expansion is brownfield, as I said. In fact, we spoke to the company's MD and CEO Ashutosh Raghuvanshi, who spoke about their outlook for FY26. Listen in.
You're right that it is the exceptional items which have dented the profitability. However, operationally, if you see that this quarter has been quite decent, we all expect that we keep on improving our performance, and quarter on quarter, we have seen improvement in our EBITDA levels. This quarter was around 21.7%, and that is what we expect to grow further from here. So the numbers on both the hospital side as well as on the diagnostic sides were quite in line with our expectations.
Clutch of stocks there. Rajesh, it's about 8 minutes left. So a word on Fortis, of course, but also couple that up with your top closing strategy.
Fortis is looking bullish. Stock is moving in upsloping channel on weekly chart, so that clearly indicates that sustained uptrend in this counter. After today's up move, now stock is approaching towards its previous swing high of January 2025. So I think any breakout happens above 735, 740 zone can take this stock further higher to 800 to 840 zone on a positional perspective. So our view is bullish, and we are maintaining our buy on Fortis. Buy on dip should be your strategy. On the downside, 685 should be your stop loss on a positional perspective for Fortis at this juncture. For BTST trade, ABB is looking attractive. Stock after correction, now stock is consolidating in very narrow range since last couple of weeks. On the daily chart, stock managed to give breakout of near-term consolidation range. Looking at the structure, we believe that ABB can extend its gain. For BTST point of view, we are projecting target towards 6,000 to 6,050. Keep stop loss around 58, 55 to buy ABB at this juncture. Another stock that we are focusing at this juncture, that is United Spirit. Here also there is a possibility that stock may attempt to give breakout of 1580 in the tomorrow's trade, and I think if it crosses 1580, rally can extend towards 1620 to 1630 for United Sprit. So this stock also can be keep on a buying side for BTST point of view with stop loss of 1558.
Yeah, so BTST opportunity on United Spirits as well. I wonder what the view on BSE is. BSE stock has been under pressure after news that SEBI is likely to finalize a proposal to fix all equity F&O expiries on Tuesdays or Thursdays. Charu joining in with more. Charu, to our understanding, NSE is going to request for expiry on Tuesday, which is something that SEBI could agree to.
Yes, so India's leading stock exchange, National Stock Exchange, has gone ahead to the regulator and asked to be allowed to use Tuesday as their weekly expiry day. Now we must understand that SEBI is very likely to finalize its proposal to either use Tuesday or Thursday as the expiry day by the stock exchanges. Only 2 expiries per week are going to be allowed, and NSE has gone ahead and asked for Tuesday to be their day. We must also understand that BSE already uses Tuesday to be their weekly expiry, and there has already been a lot of back forth between which day an exchange can use. These 2 exchanges especially because they keep on they have in recent past changed their expiry days quite frequently in terms of who will be taking Tuesday and who will be taking Thursday. While there is nothing explicit in the provisions which are likely to be finalized by SEBI to not allow the 2 exchanges to function on the same day in terms of their expiry days, there also, as per some experts, remains some reluctance in allowing Tuesday to be given to NSE. So we are not sure what is going to be the final decision. However, it is under consideration and a request has been made.
Right now, whatever is a framework, it's there, and we will be issuing post the consultation paper. The comments we have analyzed, that committees have met, and soon we will be issuing further clarification on that.
So that will like a month, 2 months?
No, I think within this month. NSE IPO, I think all I can say is that if all the outstanding issues will be resolved and we will move forward.
So by when? Is there any timeline on it?
Can't give you the timeline, but I think we should soon be doing it.
So have you received any assurances from the NSE side on some of the outstanding
NSE and SEBI, they are talking, and I think they're resolving the issues, and I'm very hopeful that it will be cleared and we'll move forward.
All right. Well, we're just about to start wrapping up. Sudeep, just one quick final word. Would the pain in IndusInd Bank be an opportunity, or would you just let it be?
Well, if you're looking at a slightly longer term horizon, you can consider it as an opportunity. But look, things are not going to settle down, and bank is not going to come back on a growth path till about a year. I think these kind of things, and we have seen this getting played out in Yes Bank, in RBL, and to an extent in Bandhan Bank as well. It takes minimum 1 year for things to settle down and come back on growth track. So 1 year, I think it'll hover in this range only. A breakout, if at all, it will happen post that, based on performance, based on stability, which the bank achieves after that time span. So unless you are looking at 1 year plus time horizon, I think it's better to stay away.
Better to stay away. Thank you so much, gentlemen, for coming and speaking with us. Out of time, and we let you go, therefore. Let's quickly look at how the Nifty is taking shape at close. The Nifty 50 index, slightly subdued kind of a move and a day, but we're off the day's lows. That's the key positive. Let's look at the intraday as well on the Nifty. Surely off the day's lows. We've seen a bit of a spike on all 3 of the indices, both the Nifty as well as broader markets. That's what we're seeing right at the fag end of today. It's going to be a very interesting Friday. And close to the week as well. Let's look at the Nifty Bank as well, and let's see the move that one has made. Outside of those initial spikes, it's been a fairly range-bound day of trade, and the spike on the Nifty Bank right towards the end is what's really standing out for me. From the day's low at 54,576, we're closing 200 points higher, or rather 400 points higher on the Nifty Bank. From 576, we've closed in at 975. So extremely strong move, 400 points from the day's low. That's what's really standing out. Let's look at some names on the Nifty Bank as well, and within that pack as to what's doing well. IndusInd, of course, standing out, but outside of that, frankly, the gainers far and few. I believe that the losers have pulled back, and that's what's played out on the Nifty Bank. Let's look at the heat map on the Nifty 50 index as well. And the breadth, of course, difficult, but has improved substantially over the last hour and a half or so. IndusInd still standing out. JSW Steel among those stocks which are also standing out. Bharti Airtel, what a few days that one has had. We've closed for the day. Hero among others doing okay. But what's not doing well? Plenty. We've had nearly 20 plus stocks declining 1% plus in trade on the Nifty 50. So quite a few stocks seeing pain. ITC will be in focus on the back of expected numbers. So that will be one stock you'll want to keep track of. Let's look at the broader markets. First, the advanced decline. The breadth was difficult, but likely got better right towards the end. That's exactly how it's played out. Around 1200 odd, 1250 odd declines to just about 950 advances. So that's at close. Let's look at the Nifty mid cap. There you go, 0.3% higher. Again, from the bottom of the day, we've done very well for ourselves. We've seen a solid bounce from 2632. We're up around 120 odd points in the last 20 odd minutes. So fairly good move right towards the end. Small cap index also mirroring that move. Fairly good recovery, closing absolutely at the flat line. The small cap index as flat as it can get, 100 points from the bottom of the day. So that's on broader markets. Let's look at the BSE 500 quickly to look at some names which have moved. Tata Tele for a second day in a row, the top gainer on the BSE 500. Fortis Health, understandably so, on the back of numbers as well as commentary, both of those shining. Look at a Solar Industries up 6% again, second day in a row. Astral is up 5, Prince Pipe again on the back of numbers up 5. AB Fashion, there's been an adjustment there, but outside of that, you're looking at Colgate again on the basis of numbers that move. GMM Pfaudler also on the basis of numbers. Raymond seeing a bit of a cool off after a few good days of trade where it was up 5% each, and Piramal Enterprises the other one, and GIC down 3 odd percent. So those are some names. Let's look at what to watch out for tomorrow. Interim dividend on a few companies, all of those flashing on your screen. Let's also look at what adjustments need to be made. There'll be a rights issue, Mahindra Lifespace and SCPC, both of those, and BSC. There's going to be a bonus, 2:1. All of those in focus. There's going to be a buyback, Dhampur Sugar, record date being the 23rd of May. And then there's Venus Pipes, 20% shareholding to exit lock-in. Those are all the numbers that you'll want to keep your eye out on. Of course, Ashok Leyland will be the big one. BEML is the other one, which will be in focus. Fusion Finance, wonder what's happening on that one in terms of how numbers will play out. But outside of that, Ramco Industries, JSW Steel will be the other big one within the Nifty 50 basket, which will come out with numbers. So that as well as the QSR space. We've seen a couple of numbers from the QSR space. Devyani International still pending in terms of numbers. So that and ITC, I believe. So all of those will be in focus. But for now, from Tamanna, Neeraj, myself, and everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with.
Hello and welcome to Market Express, your fast-track source for the latest updates from the markets along with national and international news. I'm your host Himakshi Bahugna, bringing you the key stories and breaking developments to keep you informed and ahead. So let's dive right in. Viewers, the benchmark indices like the Nifty 50 and the 30-pack Sensex declined about 0.7% to end Thursday's session in red zone. The broader markets lost some weight too, but outperformed the main indices. ONGC, M&M, Wipro, Hindalco emerged as some of the top losers. Unlike yesterday, most sectors ended in red, but Nifty Defence continued to weather the storm and sustained being the leading gainer. FMCG, IT, oil and gas and pharma declined the most. Market breadth ended skewed in favor of the bears. Rupee ends at 1 month low against US dollar, falls 37 paise to end at 86.01 against US dollar, the lowest level since April 11. IndusInd Bank's net loss widened more than estimated in the January to March quarter as the private lender disclosed that it is dealing with additional accounting discrepancies. The bank posted a consolidated net loss of 2,329 crore rupees for the quarter under review. Now, the board suspects the occurrence of fraud against the bank and the involvement therein of certain employees having a significant role in the accounting and financial reporting of the bank. And after IndusInd reported a massive loss and suspected an internal fraud, brokerages this morning came up with their notes on the troubled bank. Jefferies maintained buy but cut the target price to 920 rupees. It believes that the new CEO will pay the path forward, adding that valuations look reasonable. HSBC downgraded the stock to reduce and said that the bank has effectively been pushed back to the pre-2009 era. And lastly, Macquarie noted that it will actively monitor the management succession, peak credit cost and sustainable net interest margins. Team Lee's quarter 4 results show a 2.2% revenue dip to 2,858 crore rupees quarter on quarter, but EBIT surges 58% to 34.1 crore rupees, boosting margins to 1.2% from 0.7%, driven by a 3% drop in employee expenses. Net profit rises 23% to 35 crore rupees. The group sees a 7,500 headcount decline, but adds 2,500 trainees this year. Looking ahead, Team Lease focuses on growth, margin expansion, capital frugality, and strong governance to drive its strategy forward. Nuvama maintains buy on Team Lease with general staffing recovery eyed for quarter 1 of FY26. MK maintains ad rating with a target price of 2,050 rupees, citing EBIT beat and steady cash flow, but notes staffing softness. Kotak maintains reduced rating with a target price of 2,000 rupees, highlighting lagging margins and headcount decline. Colgate-Palmolive's Q4 revenue declined by 1.9% versus last year to 1,462 crore rupees and missed estimates. EBITDA fell 6.4% year-on-year to 498 crore rupees, driven by an 8% rise in employee expenses and a 7% increase in advertising cost. The EBITDA margin contracted to 34.1% from 35.7%, though it beat expectations. Net profit dropped 6.5% year-on-year to 355 crore rupees, marginally below expectations. Shares of Clean Science rose in trade after the company reported a 5% rise in net profit in Q4 of FY25. While the top line surged by over 15% and EBITDA rose by 11%, EBITDA margin contracted a bit from 41.5% to 39.7%. Godavari Power's Q4 revenue dropped by 4% on an annual basis and EBITDA too dropped by 3.2%. But margins on the other hand inched up by 0.2% and net profit too gained by 1.3%. The company has guided for 3 million tons of volumes in FY26 for iron ore mining and pellets. It also reported on expanding its steel melting and solar power plant capacity. Shares of Jindal Polyfilms tanked about 7% in trade after a fire broke out at the company's Nashik plant. Now the production operations at a part of that plant has been temporarily disturbed. Now the overall loss due to the fire will be assessed in due course of time. The financials of Unichem Labs recovered in quarter ended March after company swung its loss of 137 crore to a profit of 53 crore rupees in Q4 of FY25. The revenue too improved and rose by 27.8%, with margins recording a multi-fold jump from 4.7% last year to 14.3% this time. Gulf Oil's Q4 of FY25 results shine with a 7% revenue rise to 915 crore rupees and an 8% EBITDA increase, holding margins at 13.6%. Net profit also grows 7% despite higher depreciation and interest cost. Now the gross profit margin hits a 4-year high of 42.9% and the PAT margin stays at 10% for the 6th quarter. Now, the company declares a record of 48 rupees dividend for FY25, including 28 rupees final dividend. Now its EV charges arm Tyrix surges 300% to 79 crore rupees, targeting 400 to 500 crore rupees soon. Now, Gulf Oil's network now spans over 90,000 touch points across India. Pearl Global's Q4 consolidated results showed strong growth. Revenue grew 38.35% versus last year to 1,234 crore rupees, driven by increased wallet share with key customers. EBITDA rose 27.36% year-on-year to 122.4 crore rupees, supported by gross margin expansion from partnership factories. Now, however, the EBITDA margin contracted by 85 basis points to 9.91% from 10.77% due to cost pressures. Net profit increased 32.9% compared to last year to 68 crore rupees. Now, the results highlight strong top-line growth despite margin challenges. ONGC's Q4 took a hit with a 22% profit drop, stung by soaring exploration write-offs. Now the revenue rises 4% to 34,900 crore rupees. EBITDA beats estimates due to lower cost and higher sales. Crude production inches up 0.4% and natural gas falls 1.9% to both missing targets. Astral, in its Q4 earnings report, recorded 33.5% jump in its revenue, with EBITDA rising by over 3% too. The adhesive segment of the company outperformed the plumbing segment in terms of the revenue growth. Now, the results were largely in line with estimates, with the company launching multiple new products in the quarter ended March. Astral also acquired Al Aziz Plastics for a paid consideration of 33 crore rupees. Fortis Healthcare's Q4 of FY25 net profit fell 7.4% year-on-year to 184 crore rupees, missing estimates due to a 53.6 crore rupees exceptional loss from impairment charges. Now, profit before tax rose 8.4% year-on-year, reflecting operational resilience. Higher interest cost further pressured net profit. Revenue grew 12.4% year-on-year to 2,007 crore rupees, driven by strong hospital business performance. Now, the company expects margin to expand from the current levels. Operating at nearly full capacity, NALCO aims to reduce alumina output costs by 1,000 to 1,500 per ton rupees. Now, it has invested 3,500 crore rupees expanding alumina facilities with 90 to 95% of sales heading to export markets. Linkage coal is priced at 2,000 per ton, while actual coal costs reach 1,600 per ton. Now, the total coal requirement stands at 7.2 million tons, with plans to mine 4 million tons from the Utkal D block. ITC's Q4 of FY25 standalone results are expected to reflect a muted performance with mixed outcomes. Revenue is projected to grow 3.5% versus last year to 16,980 crore rupees, driven by modest sale increases. However, EBITDA is anticipated to decline 2.3% year-on-year to 6,018 crore rupees, with margins contracting to 29.1% due to cost pressures. Now, net profit is also expected to dip 1.5% year-on-year to 4,942 crore rupees. The quarter highlights challenges in maintaining profitability amid rising costs. Bajaj Auto is taking control of KTM AG through its subsidiary Bajaj Auto International Holdings BV to rebuild the struggling Austrian motorcycle brand. The company has arranged 800 million euros in debt funding to address KTM's financial difficulties and restart operations. Of this, 200 million euros has already been infused, with the remaining 600 million euros currently being disbursed. Now, the funding aims to settle creditor claims by tomorrow and avoid insolvency following KTM's self-administration in November of 2024. Tata Altroz launches at an introductory price of 6.89 to 11.29 lakh rupees. Now, this is the only hatchback to get 3 powertrain options across diesel, petrol and CNG. This new version of the Altroz features design updates like flush-type door handles, new alloy wheels, reworked bumpers and twin-pod LED headlights. The Altroz facelift is available in 5 color options, that is pure grey, dune glow, royal blue, amber glow and pristine white. Tata Consultancy Services signed a 5-year pact with a Finnish telecom provider DNA for cloud transformation program. Now, this deal would help TCS accelerate its cloud transformation program and help DNA increase its business agility and maintain market leadership in the evolving telecommunications landscape. Now, TCS is leveraging its expertise to implement DNA's cloud migration program. Solza Electronics received an order worth rupees 192 crore rupees from Bruhat Bengaluru Mahanagarpalika for a smart street lighting project in Bengaluru. The project is aimed at improving the energy performance of the street lighting infrastructure in selected areas of the city. Under the contract, Solza Electronics, in partnership with Schnell Energy Equipments, will carry out the installation of a centralized control and monitoring system for street lights. Himadri Specialty Chemicals board approved acquisition of 16.24% stake in International Battery Company for 37.4 crore rupees. The transaction will be executed through a combination of stock purchase and subscription agreements. It's expected to complete within 30 days. 361 WAM's subsidiary, 361 Asset, has launched a new 500 crore rupee early stage venture capital fund targeting seed and series investments in India. Now, the fund is part of 361's idea to IPO capital stack, focusing on high-growth sectors like consumer tech, fintech infrastructure, generative AI, and frontier tech. Now, it has already closed 4 deals across multiple sectors, showcasing early momentum. The initiative aims to support emerging Indian startups with strategic capital and growth opportunities. Grow is planning to raise $1 billion through an IPO, which will be a mix of fresh issue and offer for sale. Early backers like Tiger Global, Peak XV are likely to pair stake. SEBI Chief Tuhin Kanta Pandey on the sidelines of ASSOCHAM Market Conference said that the regulator will issue directions on expiry dates this month after considering comments on consultation paper. The chief of the market watchdog also reassured investors of the NSE IPO plans. He said that the NSE and SEBI are talking, they are resolving the issues, and that he's very hopeful that it will be done soon and the discussions will move forward. Ashish Kumar Chauhan, the CEO of NSE, in conversation with NDTV Profit, spoke on Indian markets in the current environment. The CEO reckons that India stands out amid uncertainties and that India's growth reflects more than cyclical rebound. Now, he also added that India trails only US, China, and Japan markets, further noting that the market cap of companies listed on the National Stock Exchange have grown 6 times in 10 years. And as unseasonal rains flood Indian streets, sales of summer products have also dampened. Air conditioning companies reported a drop of 20 to 25% in sales, which has urged the Blue Star, Havells, and Voltas to paint a cautious outlook for June quarter. Now, Panasonic, Godrej appliances, personal care brands like Imami too are experiencing a concerning slowdown in sales. The Department of Telecommunications, or DOT, and TRAI are set to determine reserve prices and terms for high-frequency spectrum bands. Now, these are currently assigned to telecom operators like Vodafone Idea, Airtel, and JioFi for free with only spectrum usage charges applied. Now, TRAI will hold a consultation meeting with stakeholders soon, aiming to finalize assignment terms within 2 to 3 months. Now, these bands, critical for wireless communication, are typically allocated via auctions with additional usage fee. Now, the move to set reserve prices is expected to raise cost for telcos, impacting their financials. Industry bodies and telecom operators will share their views during the consultation process. Dhiraj Agarwal, MD of Ambit Investment Managers, stresses the importance of returning to fundamentals as corporate earnings continue to underperform. With global events signaling an inevitable economic slowdown, he notes that there are no clear signs of a rebound in consumption. Rather than identifying broad sectoral trends, he emphasizes a stock-specific approach to investing in this uncertain market landscape. As investors navigate volatility, focusing on strong fundamentals may be the key to weathering the storm. Severe dust storms, hail, and heavy rainfall lashed Delhi NCR on May 21st, leading to 2 deaths, widespread power outages, disrupted flights, and extensive damage. The India Meteorological Department has issued weather alerts for both Delhi and Mumbai, warning of continued rainfall across coastal and northern regions. Gujarat Chief Minister Bhupendra Patel on Wednesday released the findings of the 16th lion population estimation, revealing that the state's Asiatic lion population has increased from 674 in 2020 to 891. Prime Minister Narendra Modi welcomed the news, stating that Project Lion is successfully creating a safe and supportive environment for the species. The Union government on Thursday defended the Waqf Amendment Act 2025 in the Supreme Court, asserting that the law regulates only the secular and administrative aspects of Waqf institutions without interfering with essential religious practices or beliefs of the Islamic faith. Solicitor General Tushar Mehta apprised a bench led by Chief Justice of India, saying that the provision barring Muslims belonging to scheduled castes and scheduled tribes from dedicating property as Waqf was a protective measure. In the absence of such safeguards, he argued anyone could assume the role of mutawali, that is the manager of Waqf property, and potentially misuse of Waqf properties for personal gains. Walmart is planning to cut 1,500 tech positions, say reports. Now, these layoffs are aimed at trimming the company's expenses and speeding up decision making. The company is eliminating some jobs on its global technology team. Reports also suggest that the retail major is creating new positions in addition to eliminating some roles. A strong 6.0 magnitude of earthquake struck off the coast of Greece, triggering a tsunami alert and widespread concern. Authorities have urged coastal communities to evacuate low-lying areas and stay away from beaches as a precaution. Now, the quake was felt across several regions with reports of minor structural damage and power outages. A gunman opened fire at the Capitol Jewish Museum in Washington, reportedly targeting staff linked to the Israeli embassy. The suspect shouted "Free Palestine" after targeting Israeli embassy staff. Authorities have arrested the suspected gunman, a 30-year-old man from Chicago identified as Elias Rodriguez. An investigation is underway to determine the motive. Severe flooding in New South Wales has left 1 dead and 3 missing, with rain levels breaking records from 1929. Over 330 people have been rescued as heavy rains continue to batter areas north of Sydney. Premier Minns warned up to 30 centimetres of rain may fall in next 24 hours, urging 50,000 residents to prepare for evacuation. Authorities are bracing for worsening conditions in the days ahead. Surya Kumar Yadav led the charge with a stellar knock backed by a disciplined bowling performance. This win highlights Mumbai's strong comeback after a shaky start to the season, boosting their confidence heading into the playoffs. Indian cinema shone brightly on the global stage with the premiere of Neeraj Ghaivan's Homebound at the prestigious Cannes Festival. Now starring Janhvi Kapoor, Ishan Khattar and Vishal Jetwa in pivotal roles, the film captivated audiences, earning a spectacular 9-minute standing ovation. As the sole Indian feature screened at the 2025 edition, Homebound marked a historic moment, celebrating India's cinematic brilliance on an international platform. Actor Dhanush is set to portray Dr. APJ Abdul Kalam in the upcoming film Kalam, the Missile Man of India. The biopic's poster was unveiled at the 2025 Cannes Film Festival. Produced by Tej Narayan Agarwal, Bhushan Kumar and T-Series Films, the poster features a silhouette of Dr. Kalam with a missile ascending into the sky. Okay, so sources, viewers are telling NDTV Profit that the bank's board is finalizing a short list of potential CEO candidates, focusing on individuals with a clean image and a strong governance track record. My colleague Vishy is joining us with more on this. Vishwanath, over to you.
So what is happening at this point in time is that the board at IndusInd Bank is currently still working on a short list of potential candidates. These candidates, according to what sources are telling us, are being prioritized with respect to their clean image, with their proven track record. The one criteria that the board is seeking is that the candidates should not have greed in their psyche. Now, of course, this process is still ongoing and a shortlist will be prepared in the next few weeks, after which it will be sent to the Reserve Bank of India as potential CEO candidates who will take over at IndusInd Bank. Remember that just last evening, we've seen IndusInd Bank announce a large loss, but also that there are suspected fraudulent events that have happened over the course of the last few months at the bank, which the board says is currently under investigation. The board will reach out to appropriate authorities for these investigations. It is important to note that the board might look at a public sector candidate to take over at IndusInd Bank, while private sector candidates are still an option, but the preference seems to be for the public sector side of the story. These developments are still coming in fast, and it's only going to be over the next few weeks that a final list will emerge.
Understood. Thanks for that, Vishy. And with that, it's a wrap on this edition of Market Express. Viewers, up next, my colleague Sanjana takes over with Profit 360, bringing you sharp insights on markets, national and international news. So stay with us right here on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Nifty and Sensex closed lower for the day. All sectoral indices end lower, barring Nifty Media. Nifty Media gains 1% for the day, ending higher for the second consecutive day. The Adani Group posts a stellar performance in financial year 24-25, with its EBITDA hitting an all-time high of 90,000 crore. Sources tell NDTV Profit that the IndusInd Bank board is shortlisting potential CEO names and is prioritizing a clean image with a proven governance record, adding that a public sector banker name may be tapped. Sources say the National Stock Exchange has applied to the SEBI to set Tuesday as the expiry day for its weekly index options contracts. According to SEBI Chairman Tuhin Kanta Pandey, an initial public offering of the National Stock Exchange will hopefully progress soon once outstanding issues are resolved. Unexpected summer rains in April and May have hit sales of seasonal essentials from air conditioners to cold beverages and personal care products, prompting companies to cut their growth targets for the first quarter of fiscal 2026 and curb production to avoid an inventory glut. Prime Minister Narendra Modi reaffirms that Pakistan will not get water from India's rivers, reiterating the continued suspension of the Indus Water Treaty. Good evening. You're watching Profit 360 on NDTV Profit, and I'm Sanjana. Along the next half an hour, we're going to take you through the latest in markets and national and international news as well. So let's take a look at how the markets fared today. Indian benchmark indices closed lower today, with Nifty and Sensex finishing in the red. Mahindra and Mahindra and ONGC were among the biggest losers in the Nifty. Nifty FMCG emerged as the worst performing sector, weighed down by Colgate and United Breweries, and most sectoral indices ended lower except Nifty Media, which gained 1%, marking its second consecutive day in the green. Let me quickly go across to my colleague Harsh for more details on this.
Well, the Nifty was under a bit of pressure and the breath was tough pretty much through the day. We did see a bit of improvement in the breadth towards the fag end, but outside of that, IndusInd Bank stood out in terms of the numbers and the way in which the stock reacted. Another one which did okay in trade was a JSW Steel. Again, numbers anticipated tomorrow, so keep your eye out on that one. You also have an ITC, numbers expected today, reaction tomorrow. Some counters on the Nifty, but the breadth was difficult, as I did mention. 1% and more lower were 20 plus stocks in trade today. So within the Nifty 50 basket, 40% of the stocks declined 1% or more in trade. So that's the one thing The positive, of course, is that the Nifty recovered a bit from the day's low. So we closed around 0.8% higher. The Nifty Bank led that recovery, 400 points from the low point of the day for the Nifty Bank, and that too in the last half hour. So very strong move. Need to wait and watch what the reaction tomorrow will be. The Nifty mid-cap and small-cap indices also did or had a similar kind of trajectory. They saw a bit of a recovery. So solid day for some of these indices in the way in which they recovered from the day's low. Let's talk about some sectors in focus. A Nifty Auto was down around 1% or so, so pressure across the board. 1% lower on the Nifty Auto, FMCG down 1.4, IT down 1.3, Pharma was down nearly 1%. But mind you, Pharma in terms of numbers has come out with a good set of numbers. Some stocks really doing well within the Pharma basket, and MQ Pharma, for example, phenomenal set of numbers, and therefore you'll see some zing within Pharma, and we have seen that over the last few days as well. Realty, though, within the broader markets was down around 0.5% thereabouts. The PSU Banking Index underperformed the Nifty Bank, 0.6% lower on the PSU Banking Index. The breadth, as I did mention, was difficult, but it improved right towards the fag end. Of course, it's going to be a very interesting close to this week because of the way in which this week has played out. It's been very range bound, but at the same time, we have seen dips come through. Again, the interesting piece also is going to be on the way in which FIs and DIs are going to, the numbers for those are going to stack up. So plenty to look out for.
And thanks for that, Harsh. But with growth projections for FY25 at just 5%, investor sentiment remains cautious. However, Dheeraj Agarwal of Ambit Investment Managers sees potential for a market rebound. He points to the resolution of geopolitical conflicts, progress on trade agreements, and expected rate cuts in both India and the US as key drivers that could fuel optimism.
We keep on lowering our expectations and hoping that the results will be better than expected. But it doesn't change the fact that the numbers are just 5%. It doesn't change the fact that FY25 earnings growth is 5 or 6% or 6.5%, and markets are trading at 21 times P multiples. Does not justify. So in the near term, markets can rally a bit more on narrative. I mean, that's obviously possible because there are a few positive narratives to play, right? The potential conflict with our neighbor is over. There could be potential trade deal with the US. There'll be potential rate cuts in India and perhaps in the US as well. So there are, I mean, there are these macro sound bites, but eventually, if you take a 12-month call, earnings will have to play through. Otherwise, we have a problem.
Now, the Adani Group has strengthened its credit rating and reduced financial risks by cutting debt. Nearly 90% of its earnings now come from assets rated AA and above. With a lower cost of borrowing at 7.9%, Adani has made its balance sheet more stable. Anushri explains the key takeaways. Let's take a look.
Now, across the group companies, if we see what has happened, in terms of where Adani Enterprises is, Adani Green Energy is, we are looking at a subsequent change in the ratings for all of these companies from what it was in April 2019 to what it is in April 2025. Just for context, if we see Adani Power also, what was the rating in BB Plus has now changed to AA, so double A. So that's the overall picture that we are seeing in terms of where the credit ratings are concerned for some of these businesses. Of course, rating change across the board that we are looking at for the group companies. But apart from that, it's the cash book and the balance sheet which is in focus. Now, if you are looking at the cash book which is there, they had a cash balance of about 9,586 crores. This in context to the overall gross debt we are looking at is at 56,931 crores. So if we take the ratio also between that, so that translates to about 16.84%, which is much higher than the minimum requirement of 5% that is there. So that is something which is interesting that for the Adani Group companies that we are looking out for. In fact, company has a comfortably de-risked its balance sheet over the course of these last few fiscals that we are looking at. But apart from that also, in terms of, let's see how the breakup is in percentage of total debt. So PSU banks about 18%. USD bonds, 23% is what we are seeing. Along with that, NBFC and FIIs have about 25%, while others like DIIs and private banks have a comparatively lower mix in terms of where their long-term debt emits from, and global international banks about 26% is the kind of ratio that we are looking at. But it's the EBITDA overall which has been impressive for the street, especially this is with an overall EBITDA standing at 90,000 crore that we are looking at. Of course, key contributors being something like Adani Power with almost a 24,000 crore of EBITDA that we are looking at. Adani Enterprises there as well, but even Adani Ports is in focus here, seeing these kind of higher numbers that we are looking at. Yeah, that's at the level of 20,471 crore that we are seeing. What's kind of fueling this growth if we are looking at? So transport and cement, both of these have recorded growth. Cement in fact up over 69%, almost 70% is what we are seeing.
And let's move on to IndusInd Bank now. Just yesterday, the bank posted a 2,329 crore net loss for Q4, marking its first quarterly loss in 2 decades. Now, the downturn stems from accounting discrepancies, stress in its microfinance portfolio and derivative losses. The bank uncovered 674 crore rupees mistakenly booked as interest income over 3 quarters, which was fully reversed. Now, additionally, 172.58 crore was incorrectly recorded as fee income in its microfinance business. Asset quality has deteriorated, with gross NPAs rising to 3.13 from 1.92% just a year ago. For a deeper analysis, Harsh now joining us to unpack all of this.
Well, I want to talk about what the IndusInd Bank management has said on the con call yesterday. One, what they've said, clear, timely disclosures are being made. Second, all pain is upfronted, factored and accounted for. 3, FY26 is a fresh start for them. The liquidity coverage ratio as well as the capital adequacy ratio remains fairly healthy, and the CEO selection is on course. Names will be sent to the RBI before the 30th of June. This is what the management has said in terms of what could possibly be construed positively. Now, should investors, despite all of this, be worried, and what should they be worried about? One, is the kitchen sinking fully over? Has all the rot within the bank in terms of its books and the way in which processes have been aligned, has all of that been cleaned up? Well, not so sure. Second, erstwhile CEO has guided no loss in Q4. So that's what the former CEO said, but we've seen a very, very large loss against that. Third point of contention or concern, new adjustments disclosed in the Q4 numbers. Now, management is saying that this is all that there is, but could there be more is really the question. Regulatory action against all that has played out is yet to be factored. Mind you, there is a fraud involved as well, and therefore, what would that lead to in terms of the bank's performance? 5, action in terms of what the bank is taking against the former CEO as well as deputy CEO. No executive directors anymore on the board of the bank. All the directors are now non-executive on the board of the bank post the resignation of the CEO. And could a PSU banker be nominated as CEO? If that were to happen, that's also a material negative. So some positives, some negatives. I've just highlighted all of them. Now, in terms of what brokerages, at least the ones which are positive, are making of this and reasons why they are positive. Jefferies maintains a buy. They've cut their target price from 1,040 to 920. They believe the cleanup was larger than anticipated. The new CEO is to lay out the path forward, so they'll wait and watch for that. They believe valuations remain reasonable. Macquarie on an IndusInd. They maintain and outperform, target price being 1,210. They say that the large miss and multiple events have now been recognized. Asset quality is still a concern for them. Stock trades at 5 times the annualized Q4 operating profit, which is well below peers. And the key monitorables, management succession, when do credit costs peak, sustainable margins, and governance. Those are the factors they'll look out for.
Thanks so much for that, Harsh. And SEBI chairperson Tuhin Kanta Pandey has confirmed that the regulator will also be examining potential major violations in the IndusInd Bank case. Speaking at the Asokham 16 Capital Markets Conference, Pandey stated that while the RBI is handling account discrepancies, the SEBI is investigating the security markets violation linked to the bank's leadership. Let's listen into that.
Board yesterday said that it has submitted its report to the government. So any step that SEBI is taking on that and regulatory agencies?
No, I think the RBI is looking into that. Whatever the SEBI has to do in relation to whatever SEBI's remit is, SEBI is doing.
Meanwhile, sources tell NDTV Profit that IndusInd Bank's board is finalizing a shortlist of CEO candidates, prioritizing leaders with a clean track record and strong governance credentials. Now, this comes as the bank grapples with accounting discrepancies, fraud allegations and regulatory scrutiny, making leadership integrity understandably a top concern.
So what is happening at this point in time is that the board at IndusInd Bank is currently still working on a short list of potential candidates. These candidates, according to what sources are telling us, are being prioritized with respect to their clean image, with their proven track record. The one criteria that the board is seeking is that the candidates should not have greed in their psyche. Now, of course, this process is still ongoing and a short list will be prepared in the next few weeks, after which it will be sent to the Reserve Bank of India as potential CEO candidates who will take over at IndusInd Bank. Remember that just last evening we've seen IndusInd Bank announce a large loss, but also that there are suspected fraudulent events that have happened over the course of the last few months at the bank, which the board says is currently under investigation. The board will reach out to appropriate authorities for these investigations. It is important to note that the board might look at a public sector candidate to take over at IndusInd Bank, while private sector candidates are still an option, but the preference seems to be for the public sector side of the story. These developments are still coming in fast, and it's only going to be over the next few weeks that a final list will emerge.
Thanks so much for that, Vishwanath. And moving on, former SBI chairman Dinesh Kumar Khara has weighed in, stating that top management should have tightened procedural oversight to prevent such lapses like the one at the IndusInd Bank. With SEBI and RBI investigating potential violations, accountability at the highest levels is now a key concern. For the full discussion, tune into The Big Question that takes place this evening at 6 o'clock.
It is a very clear reflection that the MD and CEO, who was a very integral part of the board, was expected to have enough controls in place and such kind of things. First and foremost, these are the procedural issues. These procedural issues should have been tightened by the management itself. And of course, that is the role and responsibility of the CFO. And of course, the oversight is of the internal auditors and the external auditors. But what I gather that the auditors have said that they have not been shared the required information. But I think they could have probably gone beyond. And in fact, that is invariably the situation. Invariably, the auditors have a test check when it comes to their certifying the correctness of the books.
At the Asokham 16th Capital Market Conference, SEBI Chairman Tuhin Kanta Pandey provided updates on two key market developments. One on the FNO expiry dates and two, the long-awaited NSE IPO. Now, he confirmed that the SEBI will issue a directive on FNO expiry dates within this month with a proposal to limit expiries to Tuesdays or Thursdays. This move aims to standardize derivatives trading and reduce volatility. Now, on the NSE IPO, he stated that SEBI is actively working with the exchange to resolve any outstanding issues, signaling that the listing could move forward soon. Now, while he did not provide a specific timeline, he expressed optimism about clearing regulatory hurdles.
Right now, whatever is a framework, it's there, and we will be issuing post the consultation paper, the comments we have analyzed, that committees have met, and soon we will be issuing further clarification on that.
So that will be like a month, 2 months?
No, I think within this month. NSE IPO, I think all I can say is that if all the outstanding issues will be resolved and we will move forward.
So by when? Is there any timeline on it?
Can't give you the timeline, but I think we should soon be doing it.
So have you received any assurances from the NSE side on some of the outstanding
NSE and SEBI, they are talking, and I think they're resolving the issues, and I'm very hopeful that it will be cleared and we'll move forward.
Yes, so India's leading stock exchange, National Stock Exchange, has gone ahead to the regulator and asked to be allowed to use Tuesday as their weekly expiry day. Now we must understand that SEBI is very likely to finalize its proposal to either use Tuesday or Thursday as the expiry day by the stock exchanges. Only 2 expiries per week are going to be allowed, and NSE has gone ahead and asked for Tuesday to be their day. We must also understand that BSE already uses Tuesday to be their weekly expiry, and there has already been a lot of back forth between which day an exchange can use these 2 exchanges, especially because they keep on they have in recent past changed their expiry days quite frequently in terms of who will be taking Tuesday and who will be taking Thursday. While there is nothing explicit in the provisions which are likely to be finalized by SEBI to not allow the 2 exchanges to function on the same day in terms of their expiry days, there also, as per some experts, remains some reluctance in allowing Tuesday to be given to NSE. So we are not sure what is going to be the final decision. However, it is under consideration and a request has been made.
Now, Bajaj Auto is set to become the majority owner of KTM, marking a significant shift in its long-standing partnership with the Austrian motorcycle brand. Through its subsidiary, Bajaj Auto International Holdings, BV, the company is moving from a minority investor to a controlling stakeholder. This transition comes as KTM faces financial distress, having entered a court-supervised restructuring process in Austria due to liquidity challenges.
Bajaj Auto, via its overseas subsidiary based in Netherlands, has decided to take control of KTM AG, an Austrian bike maker in which it owns about 49.9% stake. KTM AG, remember, has filed for bankruptcy in Vienna. This transaction is actually a result of this particular bankruptcy process. So Bajaj Auto, via its Netherlands-based subsidiary, will now infuse 800 million euros, which was required for KTM to exit bankruptcy and start its manufacturing operations again. At this point of time, we also need to talk about the chronology of events that have happened in the case of KTM since late last year. In November, KTM filed for bankruptcy in Vienna, citing that it was unable to service debt that had accumulated to about $3 billion by way of its acquisition of MV Agusta, as well as running its MotoGP team. Bajaj Auto stepped in February and infused 150 million euros in Bajaj Auto International Holdings. In May, it infused a further 125 million euros in the same subsidiary. In the intervening period, it infused about 200 million euros in 4 tranches of $50 million euros each into KTM. As well, on top of this, the company also secured 566 million euros from 3 banks to infuse into KTM so that it exits bankruptcy. Remember, KTM has to pay creditors 548 million euros by tomorrow, May 23rd. So all of the financials are in place. What remains to be seen is what are the next steps that Bajaj will take in stepping up the KTM business. KTM has a very successful lineup in its Duke Ranger motorcycles, as well as a strong pedigree as far as off-road motorcycles is concerned. This acquisition opens up Bajaj or the European market as well as a US market for Bajaj Auto, and in a way puts the limelight also on the likes of BMW, Triumph, as well as the Japanese auto bike makers like Suzuki, Yamaha and Honda, because now a big major player is now amongst them in the form of Bajaj Auto.
And India's leading stock broking platform Grow is gearing up for a $1 billion IPO, marking a major milestone in its expansion. The offering will include a mix of fresh issue and offer for sale, with early backers expected to sell part of their holdings.
So Grow is planning to go the confidential way with its initial public offering, and as of now we are being told that early investors including Tiger Global and Peak 15 are likely to sell their stake. Now none of it is set in concrete just yet. The offer details are likely to change, but we are also being told that the company's founders will take a pass on this one. They won't be selling any stake. Now who are the founders? We know that there are 4 founders of the company, including CEO Lalit Keshre, CFO Ishan Bansal, the CTO Neeraj Singh, and the COO Harsh Jain. Now Grow was last valued in 2021 in a funding round where the valuation came up to around $3 billion. The company is currently in process of another pre-IPO funding round where GIC is said to be investing up to $150 million in the company. Now if this funding round goes through, the company will be valued at somewhere close to $8 billion on the upper end. Now remember, this is a developing story, nothing is finalized yet, so the details might change going forward, but as of now this is what we are bringing you, so stay tuned for more updates.
Thanks, Agni, for that. And let's move on to what's happening with the weather. Unexpected rainfall has dampened demand for summer essentials, with air conditioner sales dropping 20 to 25% in April and May, leading manufacturers like Blue Star, Havells and Voltas that have flagged concerns over muted consumer demand, prompting a cautious outlook for the June quarter. Now, retailers had stocked up in anticipation of strong summer sales, but weather disruptions have led to excess inventory, forcing companies to adjust production levels. Analysts warn that if demand doesn't pick up in June, primary sales could take a hit. For a deeper analysis on this, Sessa joins us now.
Right, unseasonal rains are disrupting sales of summer products, with AC retailers reporting a 20 to 25% decline in sales between April and May. Manufacturers such as Havells, Voltas, Blue Star, Panasonic and even Godrej Appliances are now recalibrating expectations for the first quarter and even lowering their growth expectations for the season, which accounts for a bulk of their sales. Companies are also cutting production to prevent inventory buildup. The impact on sales, however, is predominantly felt in the south, west and eastern part of the country. Personal care brands are also experiencing similar setbacks. Imami, in fact, has pointed out that sudden rains in April and May dented their talcum powder sales. IMD's forecast of a early monsoon has further added to the woes of companies. While the weather's unpredictability is clearly taking a toll on consumer spending during the peak season, companies, however, are still hopeful of a spike in temperatures early June that could trigger a surge in demand, helping them meet their full-year growth targets.
A massive storm followed by rain hit Delhi and Noida last evening, disrupting traffic and leading to waterlogging and power cuts in several areas. Hoardings fell and trees were uprooted in many localities, with some areas reporting wind speeds of up to 79 kilometers per hour. Airlines also issued advisories saying the change in weather might impact flight operations, and several metro passengers were stranded for hours. Gusty winds swept over the capital city and Noida, leaving shattered windows and damaged hoardings in their wake. Now, in a significant push for infrastructure and connectivity, Prime Minister Narendra Modi visited Rajasthan's Bikaner district, where he inaugurated the redeveloped Deshnok railway station and flagged off the Bikaner-Mumbai Express. The station, redesigned with architecture inspired by the Karni Mata temple, aims to serve thousands of pilgrims visiting the revered shrine. Beyond the railway developments, Prime Minister also laid the foundation stone for multiple projects worth 26,000 crore rupees spanning urban development, transport and tourism. Later, addressing a rally in Bikaner, Prime Minister Modi launched a sharp attack on Pakistan, condemning decades of terrorism.
मोदी का दिमाग ठंडा है, ठंडा रहता है, लेकिन मोदी का लहू गर्म होता है। मोदी की नसों में लहू नहीं, गरम सिंदूर बह रहा है। अब भारत ने दो टूक साफ कर दिया है। हर आतंकी हमले की पाकिस्तान को भारी कीमत चुकानी पड़ेगी।
And that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide.
Tata Motors has launched its upgraded Altras in Mumbai today, but this comes at a time when its own SUVs like the Punch and Nexon have been the best sellers, and the market itself is becoming more SUV driven. Against that backdrop, the possibility to upgrade the premium hatchback is quite outlier move, I would say that. To talk to us more about it is Mr. Shailesh Chandra. He's the MD of Tata Motors PV and EV business. Mr. Shailesh Chandra, welcome to NDTV Profit, sir.
Thank you.
Just to extend the conversation, extend that introduction that I did to this piece, you have best-selling SUVs, there's SUVification of the market. What is the idea behind upgrading the Altras at this point of time?
You know, one that you're absolutely right. If you really see the trend of how the segmental shifts have been happening, the SUV has grown from about 30% to 55% share of the overall TIV in the last 5 years, whereas hatches has declined from 46% to 24% or so. But two things to remember here. One, that the decline of hatches was more sharper in the initial 2 years of COVID. And for the last 2 years, the drop has been about 3 to 4%, which gives you a sense of stabilization of where eventually the shares of different body styles would kind of stabilize. So that's one point. And it's still a 1 million size. You know, hatch market is significant size, and it gives an offering to a lot of first-time buyers, right? So that's one. Second, you should see what's happening within the hatch segment. Within the hatch segment, we slice it into 4 sub-segments: the entry, the mid, the high, and the premium. This is the premium segment. Now, over the last 5 years, we have seen that while the entry hatch has seen a significant decline in the share within the hatch segment, premium has increased from 24% to nearly 31-32%. So it's nearly 1/3 of the hatch, which itself is a 1 million market. And as India grows, and if now the shares of hatches are going to stabilize, then you're going to see a constant 1 to 1.5 million somewhere in between this number. Hatch is going to be stable, so it's a big size. Within hatches, premium hatches are going to rule the roost, if I may use that word. And that's the reason why we are very optimistic about this segment. That's the reason why we decided to refresh Altras with it's in the new avatar that you are seeing here today.
So you mentioned about the premium hatchback segment. Couple of questions emerged from that. How fast is this premium hatchback segment growing? And secondly, what is your share in this particular space, and where would you want it to be with the new product that you have launched today?
So one, that I have already shared some of the statistics that while from a peak of say 1.4 million, the hatches would have gone down to 1 million or so. But hatches, premium hatch share has been increasing. You'll have to do a bit of arithmetic, but in the last 3 years, I see that